WNBC.
Hey, welcome back to Worldwide Exchange. Time now for your WEX wrap-up. We start with Rocket Labs becoming the latest recipient of money from the CHIPS Act, the company receiving $24 million in funding to help expand production of semiconductors that power spacecrafts and satellites. DXC Technology higher again this morning after surging double digits yesterday on reports that Apollo Global and Kyndryl Holdings are in talks to make a joint bid for DXC at between 22 and 25 a share. You can see here it's trading at about 19 a share right now. Christy Goldsmith Romero is reportedly the front runner to lead the FDIC following Martin Gruenberg's resignation last month. Romero currently serves on the Commodity Futures Trading Commission and was previously a special inspector general for the Troubled Asset Relief Program. Computing startup Raspberry Pi is set to raise over $210 million from its IPO ahead of its London debut today. The IPO marks a rare win for the London Stock Exchange, which has hosted fewer tech debuts compared to some of its European peers. New filings showing that United Auto Workers president Shawn Fain is under investigation by a court-appointed watchdog that is probing the union, eliminating corruption, and assessing whether Fain has abused his power as president. And the WNBA finishing May with its highest attended opening month in 26 years and its most watched start of the season across all networks ever. Indiana's Caitlin Clark and Chicago's Angel Reese helping drive the historic interest. All right, here's what to watch today. Oracle reports earnings after the close. The Fed's latest policy meeting also kicks off today, decision coming tomorrow. All right, let's see how the trading day is shaping up as the S&P and the NASDAQ, they come off yet another day of record highs. Taking a look at futures. In the red across the board all morning long. Looks like the Dow was actually hitting another low of this morning and looking like it would open about 130 points lower. Joining me now, Tom Lee, co-founder and head of research at Fundstrat Global Advisors. He's also a CNBC contributor. He's also a bull on the small caps. We're going to get to that in just a minute. But Tom, good morning. Good to see you.
Good morning.
All right, so obviously the Fed meeting kicks off today. Kind of a big week when we look at CPI and the Fed decision. But I want to focus on today first. What's your WEX word of the day? How do you see today shaping up?
Well, the WEX word of the day is visibility, because that's what's getting investors anxious about the next couple of days until we hear from the Fed and CPI. I think investors are anxious and they want visibility.
All right, so looking for some visibility. We got some visibility yesterday from Apple. We've been waiting for WWDC and their big artificial intelligence unveil. Stock closed down 2%. I want to get your take on what you heard and what you saw and what you think about the stock.
Well, Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term. The company has always been at the center of everything that's happening around a consumer and new technologies. So to me, there might have been some head scratching because these features may not be part of someone's life just yet. But as you know, Apple gets a lot of these things right.
All right. So by the way, for the audience, your granny shot, it's kind of like almost a very easy shot. You think it's almost a no-brainer when it comes to that stock, right?
That's right. I think investors should look at it as a core portfolio holding. The granny shots is basically a thematic portfolio that buys the strongest stocks in a specific theme. So when you think of AI and millennials, Apple and NVIDIA and Tesla, they're really at the center of that.
All right. But your sector picks when it comes to the AI trader, NVIDIA, Cadence, ARM, AMD. Why isn't Apple in there if you believe that it's a core holding and obviously they're pushing into the AI space?
Well, mainly because Apple is much more than just an AI company. So I don't think it's intentional that we left out Apple when we talk about AI traits, but when our clients are looking for direct beta exposure, to them, the complex is NVIDIA, and then stocks with high correlations to NVIDIA, which are the ones that we actually listed.
All right, so Tom, know what you're intentional about? Small caps. You've been one of the biggest bulls when it comes to small caps, specifically the IWM ETF. I'm just looking at the small caps since the last Fed decision. They're up 3%. The rest of the market's up about 6.5%. They've been lagging all year long. Is there still a case for small caps to rally as much as 50% this year in your mind?
Oh, yeah, definitely. One thing investors have to keep in mind is small caps get hampered when investors worry about lack of visibility. When the Fed begins to cut, and we actually have shown this to our clients, and the number of expected cuts begins to creep up, that has been correlated with the IWM outperforming the broader market. So the reality is the stock market is saying, look, I don't want to touch small caps until the Fed starts cutting. But in the meantime, small caps have better earnings growth, close to 19% in the Russell 2000 versus around 9% for the S&P. and the median PE multiple is actually around 10 times in the Russell 2000 compared to 16 times for the S&P. So better growth, lower multiples. I mean, I think it's a great risk reward for investors right now.
But aren't they also more rate sensitive and also more sensitive to the higher cost of capital and the higher for longer environment? I mean, you keep saying that investors don't want to touch them until the Fed starts cutting. We don't have any clarity. We might get some answers tomorrow, but it's unlikely. The Fed's been very clear. They're data dependent.
Sure, but I think what you've just described, which is higher cost of money, or a high bar for borrowing money, I mean, that's the existing conditions. So when the Fed starts cutting, that starts to ease. What would investors benefit from is having exposure to things that are levered to an easing of financial conditions. That would actually argue for small caps. So it's a bit of a waiting game, but boy, I mean, I don't know anyone who's made money trying to trade this week to week. Any great ideas, all the great ideas take time to work.
I mean, wow, fair enough there. Is there any part of the small caps that you think are better than others? I mean, all small caps aren't created equal.
Well, one thing I think investors have to keep in mind is that they might think a small cap is like a weak company, but actually small caps, especially in the Russell 2000, tend to be very strong companies that dominate a smaller market. So that's why, they're not a $1 trillion company, but they may be number one.
We got to leave it there. Tom Lee, great to see you. Thanks for the thesis on small caps. That's going to do it for us. One more look at the futures again. Right across the board, we just saw the Dow hit its lows of this morning. That's it for Worldwide Exchange. Squawk Box starts right now.
Good morning. Stock futures pointing to a lower open as the Fed kicks off its two-day policy meeting. We'll get you ready for the trading day ahead. Apple unveiling long-awaited artificial intelligence features for its software and devices, but a partnership with OpenAI sparking backlash from Elon Musk, who's threatening to ban Apple's devices from his companies. And an independent panel recommending FDA approval for Eli Lilly's Alzheimer's drug. Details straight ahead. It's Tuesday, June 11th, 2024. Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and markets were up once again yesterday, but if you take a look at what's happening with U.S. equity futures at this hour, you will see some red arrows. This is starting to feel like a little bit of a broken record. We see this again and again in the morning with lower futures in the morning, but higher closes at the end of the day. Dow futures this morning down by about 150 points. S&P futures are down by 13, the NASDAQ off by 61, and we did see new records once again yesterday for both the S&P 500 and the NASDAQ. If you check out what's been happening in the Treasury market, a little bit lower this morning. The 10-year is yielding 4.43. The 2-year is at 4.84.
Bitcoin's down 4%. Why we wouldn't put it in there, I don't know, but this is a day where we're not going to get a cut. Are we ever going to get a cut? Does September look like a cut? Bitcoin just fell off of. That doesn't show it. These charts are so bad. That does not. It fell under 70. Now it went from 69.9 or 69.8. It's all the way at 67, ready to break under 67. So it's down. You cannot tell from that chart that it's down 4% today.
Yeah, you can see it.
That's a little better. If you did it even 24 hours, it would show you just fell off a cliff recently. I thought that was noteworthy. Anyway.
Meantime, small business optimism hitting its highest level of the year. That's according to the latest NFIB survey. It was released just moments ago, and despite the rise in sentiment, uncertainty also rising to the highest level since November of 2020. So you can choose your own adventure there a little bit from that poll. Joe?
A panel of independent advisors to the FDA, as usual, an FDA panel recommended Eli Lilly's Alzheimer's drug, donanemab, paving the way for the treatment to receive approval in the U.S. later this year. The FDA typically follows the recommendations of its advisory panels, but it isn't required to do so. If cleared for use, this would be the second Alzheimer's drug of its kind currently on the U.S. market after a treatment called Leqembi from Biogen. We're going to talk much more about the recommendation with an Alzheimer's specialist later this hour that was actually involved in the approval, who points out it's going to be kind of a long trek. It's going to be combination therapy. This is not something that necessarily attacks the underlying causes, but it can appear to put Alzheimer's into a kind of remission where there's no amyloid, there's no amyloid plaque. But just getting rid of amyloid plaques, we still don't know whether we still don't know whether it comes, whether amyloid causes or whether it's a result of getting the Alzheimer's. So they're still looking for the underlying pathology of the disease. But we'll talk to them all about that. This could be combination therapy with something else, and they're going to keep working on the underlying cause.
I mean, it's a great cause for hope in an awful, awful disease.
Right. So probably doesn't do much for Lilly, as we talked about yesterday.
Well, Lilly's got bigger fish to fry.
All about obesity.
Weight loss drugs.
I mean, it's been like a tech stock. It's been like an AI stock almost. I don't forget what it's worth, $800 billion? Something like that.
Yeah. In the meantime, the White House is reportedly close to naming CFTC Commissioner Christy Goldsmith Romero to head the FDIC. She would be replacing longtime Chairman Martin Grunberg. An external investigation found widespread sexual harassment and other misconduct at the agency under Grunberg's tenure. He has said that he will step down after a successor is named and confirmed by the Senate. The Wall Street Journal reports that the White House officials have discussed 2 other women for the FDIC post, but Goldsmith Romero has emerged as the frontrunner. She has served as a CFTC commissioner since 2022, and she was the special inspector general for the Treasury Department's TARP program during the financial crisis.
Meantime, UAW President Shawn Fain under investigation by a federal court-appointed watchdog who's tasked with monitoring the union and eliminating corruption. That's according to a court filing yesterday. The monitor is Neil Borofsky, if you might remember him. He oversaw the Troubled Assets Relief Program, or TARP, for the Treasury Department back during the financial crisis. And he is now investigating whether Fain abused his power as union president. He's accused union leaders, including Fain, of obstructing the investigation and interfering with his access to information. Fain didn't specifically address any issues in the court filing itself, but said taking our union in a new direction means sometimes you have to rock the boat, and that upsets some people who want to keep the status quo. He said he's encouraging the monitor to look into any claims made about his leadership.
That's a weird story. I didn't understand all the claims that had been made originally. Apparently there was the Treasury Secretary there at the union who they'd taken away basically all of her powers, said that she'd been involved in some bad things. She countered back that no, she wasn't. It was them who were doing it. And, it harkens up bad days of old unions way back when.
Another UAW story. The UAW announcing a tentative contract agreement at an Ohio factory that makes batteries for electric vehicles. The deal covers 1,600 workers at a Lordstown plant operated by Ultium Cells. That's a joint venture between General Motors and LG Energy Solution that produces batteries for GM electric vehicles in case they ever actually sell one. That's what I was not sure whether I should actually say. I probably shouldn't. GM sells a few, but it has been problematic. We know what's happened in recent months to Hertz and Ford, and the UAW plans to use this contract as a template as it negotiates agreements at other battery plants in the U.S. It calls for a wage of over $30 an hour. It goes to $35 an hour over 3 years. Starting wages were just $16.50 when the plant opened just a couple of years ago. That's the kind of thing we see. That's what Santelli keeps talking about over and over, hammering home that wages eventually, when they double, you see that as a component of prices and inflation.
And that's why inflation is sticky. Former media executive Edgar Bronfman Jr. has expressed interest in buying National Amusements. That's the company that controls Paramount Global. That's according to a Wall Street Journal report that says he's considering a bid between $2 and $2.5 billion and would be backed by PE firm Bain Capital. Bronfman formerly ran Warner Music and liquor giant Seagram. Sherry Redstone is in advanced negotiations to sell a majority stake of National Amusements to Skydance Media and merge Paramount with Skydance. Separately, Hollywood producer Stephen Paul is reportedly lining up financing to make an offer for National Amusements of around $3 billion. We are going to be speaking with Matt Bellany from Puck News about this story in the next hour, but this was their last chance to go look. They've got a little bit of time here trying to see if there are any other potential buyers. I don't know how you match some of these buyers up, but this gets back to that original question of whether you just sell National Amusements or whether you do a deal that brings in other shareholders as well at Paramount.
Mont or Mount? I always think, is it?
Mount.
Yeah. Bronfman, where's he been? Remember we used to talk about him all
Do you
the
remember?
time.
Because he sold MGM.
But let's go back
Years
even
years
further.
ago.
Let's go back even further.
Bought Warner Music.
No, Seagram had a big stake in DuPont, remember? And
Yeah.
this an unbelievable dividend income. And he sold that, remember, to get into the movie business.
Activision he was in at one point.
To get in the movie business and totally,
Mid-90s, yeah.
and that did not work out well. And a lot of Seagram shareholders were like, what happened to our DuPont, you know, into that dividend? And now you're
30
in
years ago.
That's why I'm saying, where's he been? So he's been, and then he finally got back in a little way to, I guess, into music, and has that been successful? Has he been successful now?
I thought Warner Music in the end worked for him, but then he was out of Warner Music, and then he was buying other businesses.
I don't know. That's why
Yeah.
I'm asking, because
Yeah,
we
he's
used to
owned-
talk
he's
to
owned
him
a whole bunch of
all
other
the time.
businesses.
Yeah. So what did he finally? Is he doing great now? He's
He
able
started
to buy,
doing
he's
great.
able to
He
buy
started
national.
great, so
He started on third, and then they moved him. So he kind of got picked off by the catcher. And then,
I've always had a soft spot for Edgar.
well, you can't let that cloud whether how you would gauge his relative success versus, you know, he did have a pretty good start, as you said,
did?
from that family, right?
Meantime, a U.S. appeals court rejected a bid by Uber to revive a challenge to California law that classifies drivers as employees rather than contractors. An 11-judge panel of the San Francisco appeals court upheld a ruling that said that Uber failed to show that the 2020 state law unfairly singled out app-based transportation companies while exempting other industries. Now, Uber said the ruling would not change the status of its relationship with its drivers who are considered contractors under a 2020 ballot initiative known as Proposition 22. The fate of Prop 22 is being weighed as a separate case now in California's top court, which heard arguments last month.
And in other OpenAI news, the company has hired Sarah Fryer to be its CFO. Fryer was previously the CEO of Nextdoor and the finance chief at Square. The company also hiring Kevin Weil, who's former president at Planet Labs and previously a senior vice president at Twitter and a vice president at Facebook and Instagram. He will be OpenAI's new chief product officer.
One of Tesla's longest-standing shareholders is backing Elon Musk's pay package. Bloomberg reports that Scottish asset manager Baillie Gifford will vote for that package at Thursday's shareholder meeting. Baillie Gifford was once Tesla's largest shareholder after Musk and has held the stock for more than a decade. It began reducing its stake in around 2020 and holds about 0.5% of Tesla across several of its funds. 0.5 adds up when it's worth.
Yeah. This one's going to be a squeaker. It feels like it's going to be close.
It's been amazing to hear all the back and forth. Calster's weighing in yesterday, too, I think.
Coming up when we return, Apple is unveiling its long-awaited artificial intelligence features for its software and devices, but a partnership with OpenAI also sparking backlash from Elon Musk, who's now threatening to ban Apple devices from his companies, depending on how deep OpenAI is integrated into those phones. Details after the break. Welcome back to Squawk Box. Apple debuting generative AI plans at its Worldwide Developers Conference. They call it Apple Intelligence, and it's now going to integrate all hardware and software products into it. Plus, users can ask Siri to use ChatGPT. That feature apparently irking Elon Musk, who called the software integration between the two companies a, quote, unacceptable security violation and threatened to ban Apple devices from his companies if the company integrates OpenAI at what he described as the operating level. I would say from my reading of it, it's not really integrated at the operating level, but we're going to discuss this right now. Joining us, one of the journalists who attended Apple's event, Joanna Stern, the Wall Street Journal senior personal technology columnist and a CNBC contributor. I want to get into your review, which was fascinating to read this morning in the Journal. It's worth a read for those who haven't seen it yet. But help us answer the question. Maybe I don't understand it. It did not appear to me that ChatGPT is genuinely integrated at the operating level, more that this was something that you would sort of use almost like an API and sort of push out to in certain instances when you need it, but that it wasn't necessarily living inside the iOS itself.
Absolutely correct. What Apple talked about yesterday was doing a lot of this AI processing either in Apple's on the device or using Apple's cloud services, what they've called private cloud compute. And this is a way they've invented basically that it's secure on the cloud and it's in their servers and in their world. That said, if there is something that requires a larger language model and Apple feels like we can't answer that, they're going to go out and ask you if you can ask ChatGPT. But you get a pop-up. They showed this a number of times during the presentation. You get a pop-up, a notification that says, can we go ask ChatGPT this question? And you confirm that.
So what was your general, and so, by the way, before, just to finish this off, if you were Elon Musk, and I don't remember if he had tweeted this prior to the presentation or right after, but if you were to actually dig into this and look at it, do you think that he would say this is integrated or not?
I think Elon Musk had a very rash reaction to hearing the news, hearing ChatGPT is integrated in iOS, and sure, you can think that, but that's just not the case, at least according to what Apple is saying and what they're showing.
It also seemed to me that longer term, and there were some references to it yesterday, it's very possible that in the future, instead of just going out to go use a large language model like ChatGPT, you may very well do it with Gemini. You may very well be able to click off and go to Grok if you want.
Absolutely, absolutely. People need to think about this as you can choose what search engine you use on your iPhone in Safari. Well, I think you're going to be able to choose which large language model you use through Siri. And that was really the point they were making yesterday, is that Siri is going to be this portal to getting information and your AI assistant. They never use the word or term AI, but your Apple assistant or your Apple intelligence. And so eventually, they say, there'll maybe other large language models that integrate through there, Google, Claude, whichever ones that are out there now. Apple will have to make that deal, but they've made this first deal with OpenAI, and so now Siri can go and do that.
Can I ask both of you, actually, because I've been trying to figure out the Elon Musk reaction to this. You guys both follow this really closely. Just his reaction to this, he's not threatening to ban Microsoft devices from his offices. And I think it's more about just banning them from the devices, but making sure people realize he feels so strongly about this. Is it a competitive thing? Because now OpenAI is going to be able to train potentially off of all the data it would be getting from Apple
Well, I
users?
will try.
I
You have Joanna as the expert. I will say this, two things.
Yeah.
Apple said repeatedly that OpenAI would not be able to actually train effectively off of this data because they're not going to actually get the data, which I didn't understand, Joanna. We got to figure out, I want to actually get into that. The second piece is Microsoft obviously has laptops, doesn't have phones, so that's not necessarily, I think what we're talking about. Android might be something different, and I don't know where he stands on that. I think he feels differently about Google
than he does
and he's
OpenAI,
always
because he's just mad at OpenAI.
He has a personal view about OpenAI, but that's my take. Joanna, what's yours?
Similar take. Look, eventually, Elon Musk might strike a deal here, and Grok might be integrated as one of the large language models. I think maybe once he understands that better, maybe he'll see this as an opportunity. Around Microsoft, I mean, look, Microsoft not until now with its Copilot PCs has been that deeply integrated with OpenAI on the operating system level, or had the ability to integrate that way. But also, yes, I mean, you're talking about the iPhone versus, maybe an HP laptop or whatnot.
Joanna, was your sense that the AI assistant effectively that's going to be on device, and this is now Apple's AI, which I imagine are going to be smaller language models that are sitting on these chips effectively, that they're good, or that they're good enough, or that they're as good as what could be done if OpenAI was allowed to go wild on the device, if you will, or compared to Gemini, which might live on an Android device?
Well, I think this is the really interesting thing we're seeing on devices. So Samsung's taken a similar route that for doing specific things that you don't need these large language models, right? If you want to transcribe audio and then summarize it, you don't really need that large language model. If you want to make images or you want to make what they're calling Genmoji, right, which are generative AI emojis, you don't need to go to this super large language model. You can use a lot of models that are either local or that are going to Apple's own cloud. And so that's actually one of the interesting things that they're saying here is that sometimes you're just really not going to know where that processing is happening. Obviously, the normal user is not going to know if this is happening on device or it's going to the cloud. And Apple's saying that in their presumption, it doesn't really make that much of a difference if, again, they're not telling you it's not going to ChatGPT, right? If it is, they're going to tell you. But otherwise, it's in Apple's world, and they're making a huge bet on privacy and security.
You haven't gotten a chance to test it yet, but what I call multi-step, effectively, projects that you would give the phone like an assistant. The question is how good that really is, and whether that's as good as what you might get with one of these larger language models doing the work for you. Now, they seem to show lots of integration where you could effectively say, add this to my calendar, email so-and-so, and do 5 things all at one time. I think it's to be seen whether it can really do all of those 5 things at one time.
We absolutely don't know yet, and a lot of these Siri promises where we're seeing Siri use your personal data to go across apps, it's just not going to be ready yet, and they're not even saying that it's going to be ready this year. They're saying some of this could come next year. So this is a long-term play by Apple. They showed a lot yesterday, but absolutely they need to show us how it actually works to really believe it all.
And then can you just go underneath the economics of this for half a second? Because, historically, Google has actually paid Apple to have access to that search box. That was always a very valuable piece of real estate that effectively Apple was selling to Google. This has become part of even the antitrust suit against the company. In the context of OpenAI, I was trying to think through the economics of that. Do we believe that Apple is paying OpenAI? Do we believe that OpenAI is paying Apple? OpenAI is not benefiting, if you believe them, from being able to train on the data, so that's not a value to them. It could be a lead gen kind of product in that there is going to be some kind of integration with a paid version of ChatGPT. How are you thinking about the math here?
Well, I don't think it's necessarily a lead gen thing because what Apple has said is that they're offering this for free to their users, right? ChatGPT 4.0 is going to be free. You don't need to sign into the service. If you do have ChatGPT Plus and you happen to pay OpenAI for that, well, then you can come and sign in. And they said that's going to all be a possibility. So to me, that strikes me as Apple is trading money with or giving money to OpenAI for some of this access here. And Apple's also said they've built in some real privacy to how it works with OpenAI for the free version. That it is not collecting that data. It is not training on that data. So my guess is that if OpenAI isn't getting data, they're getting money.
Joanna Stern, it's great to see you this morning. Thank you.
Good to see you too.
All right, coming up, record viewership for women's basketball. The numbers right after that break.
As I entered the banking industry, I was struggling with my coming out because I did not see visible senior leadership at the top of the house. And I realized that people can advance despite their sexual orientation. And hence, for me, I also came to the conclusion that for me it is important to speak out and to be visible now as a leader to inspire the same in people who are just starting at the workplace.
growing popularity of women's basketball did not end with the NCAA tournament. The WNBA is out with new TV viewership numbers. It says the season that began on May 14th has been the most watched in the league's history, averaging 1.3 million viewers per game. That triples last year's average.
When we come back, the Fed kicking off a two-day policy meeting. Steve Leisman has results from the CNBC Fed survey. That is straight ahead. Right now, though, as we head to break, let's take a look at yesterday's S&P 500 winners and losers.
Make it count.
Good morning, everybody. Welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. The futures this morning are in the red, but we've seen this picture before. Usually by the end of the day, it's back in the green, at least lately. That's the way momentum has been. But right now, you are looking at the Dow futures down by about 130 points. The S&P and the NASDAQ both closed at new highs yesterday. This morning, the S&P is giving back about 10 points. NASDAQ down by just over 40.
And the Fed kicks off its two-day policy meeting today. That means the CNBC Fed survey is out. Let's get to the results now from our senior economics reporter, Steve Leisman. Steve, you're going to talk about how respondents view the upcoming election, but can you also, if you haven't, just update us on Fed futures for, just so we know, for September. Is it still 50%?
I'm going to do that right now, Joe.
Okay,
if you want to hear that.
At the end, I do, because
52.6, Joe. 52.6 for September.
62?
52.
Oh, 52.
52. 68.7 for November and 9% for July. Anything else, sir?
No. So it's 50-50. whether we get any. Or do you have
Flip a
to
coin,
add,
baby.
you have to add September and November together? Yeah,
Split
I don't
the-
know.
So
Does that equal 100?
60, maybe 60%?
110?
No, it's 60. You
No,
divide,
yeah.
yeah,
No.
divide by 2.
Yeah.
No, it's that is the probability of a
I
rate
know.
cut in that.
I'm sorry. Do your survey. I'm sorry.
Okay, we're going to talk about what respondents think about the election here, and it finds our respondents roundly disapproving of President Biden's handling of the economy and giving Donald Trump's economic and financial policies higher marks in most cases than President Biden here. Just 39% of respondents approving of Biden's handling of the economy, while 57% disapprove. That's about in line with national surveys of the broader public. 48% believe that Trump will win a second term in the White House, compared to 35% who think it's going to be Biden. 17% are unsure. Looking at which candidate will be better for different things that matter to our viewers, the stock market, 23% Biden, 77% say it's Trump. The economy, a little bit closer there, 54% Trump. But when we ask about the country as a whole, that's the one place that Biden gets the edge. 57% think that the country as a whole will be better if Biden wins the election, 44% for Trump. Now, looking at Trump's policies and Biden's policies, there's Trump's policies seen as better than Biden's in 5 of the 6 categories that we asked about. Biden only nudging a slight beat on trade, even while both get low marks there. Take a look here on business regulation. It's 4 out of 5 for, almost 4 out of 5 for Trump, just a little bit over 1 for Biden. When it comes to taxes, 3 for Trump and about a little under 2 for Biden there. Jobs, Trump gets the edge a little bit closer there. And inflation, both getting low marks, 2.2, but again, Trump having the edge versus Biden's 1.6. To be clear, isn't obvious yet what policies Trump would use to bring down inflation. Many economists see tariffs and the threats of mass deportation just potentially inflationary, but then again, there's Biden's record on inflation. And both candidates get low marks on the deficit, but Trump's grades again slightly higher. The bigger story here for the market could be the policy uncertainty created by the presidential elections that could cause some firms to delay spending. Diane Swank writes in that this adds downside risk to the outlook, and I'll be back, guys, at 8:30 with more on the outlook on the Fed and the economy. Joe?
All right, Steve, when just looking ahead, we'll hear what the Fed says based on what we already know, the Friday's jobs number and some of the recent inflation numbers. What's our next big data point when do you think that the Fed futures move around based on what Powell says tomorrow again?
Absolutely. I mean,
Yeah.
look, I do think they are fairly well, what's the right word? Fairly well aligned. I'm going to look at something else here. I don't know if you guys have it in the back. I didn't know we were going to have this discussion now, so we didn't tell you, but we have a look here, Joe, at the January 2025 Fed funds contract.
Cool.
What that shows is we're looking at 1.8 rate cuts built in. What does that tell you? It tells you one is for sure, and there's a debate about whether or not there's the second one. In fact, this is part of what I'm going to talk about at 8:30. There's one locked in, and a discussion, a debate, an argument about whether or not there's a second one. That's really the question. And for that to happen,
Right.
I think you need to have inflation coming down. You asked me what the next big points are. They're the inflation reports with sort of a minor or secondary are the growth reports, payrolls and GDP.
It's still, to me, you're not using the H word, hike, you're using the C word, cut, right?
No, that's nowhere near here. I'm not seeing
Nothing about
everybody
no, I
writes
know,
in.
but for me, that's what I'm worried about. That's what I'm worried about, that we're dead wrong. That it becomes so sticky and wages and everything else that the next we either stay where we are or go up. I mean, we will probably come down. They want to do it, but after the election, who knows? Too, Steve. January. Why cut after the election?
I mean, I don't really think, Joe, what I've heard every Fed official say is the answer to sticky inflation is higher for longer. And it gets back to the discussion we've had for a long time, which is the Fed restrictive at this rate? And almost everybody thinks they are, which is to say that they believe that the current rate will do the job.
Well, we're going to hear, Malpass has his own view of a lot of things you probably disagree with, I guess, Steve, but he's he's not convinced we're restrictive right now, and isn't convinced that being restrictive necessarily is the panacea for inflation. He thinks that it may not be what actually works. That we need, as you might imagine, supply issues to try to ease inflation, increasing supply rather than and higher rates.
First of all, I'm a big fan. I'm a big fan of David's, and I like listening to David. I don't agree with him on everything, but I think David's a smart economic mind out there, and I will be tuning in. But please ask him, Joe, what has changed so substantially in the economy from the time that we thought that the neutral rate was somewhere, I don't know, around 2, that now it is substantially and so much higher? And how is 538 not a restrictive rate? That's really the debate.
How do you get to these? How do you get to these new highs on the markets on a constant basis if it's not an example of liquidity sloshing around and just a lot of money there? I guess that's the alternate.
What about earnings, productivity, and progress, and companies figuring out how to navigate difficult times and just being what companies do? Companies make money. They make money in inflationary times. They make money in non-inflationary times. I don't know. Maybe there's a liquidity premium in the market. The Fed is withdrawing liquidity right now, Becky. So I don't know. It seems like that makes it harder.
We still haven't gotten the balance sheet back to where it was before the pandemic, before all these crises that we looked at. I mean, I thought those were supposed to be temporary levels of the balance sheet. We're still trying to work our way down. And every time there's any hint of any problem with the banks or anywhere else, they put that on hold.
But they haven't. I mean, they've taken $1 trillion out of the Fed balance sheet. So that could be true, Becky. It could be. That's, by the way, is the David Zervos explanation. I have some respect for that. He says no matter what you say, there's still a lot of liquidity around. I would point out that over this course of this time, the Fed has been withdrawing liquidity, and still the market is at new highs.
Fiscal spending too.
All right, policeman. When are you back? Back in the lease maniacs? They're watching now. I think they stay tuned in. We'll see you later.
8:30. They got to watch Malpass because we're going to talk about Malpass. What is that? 7:30, Joe, and then I'll be back at 8:30.
Okay. Sounds like a plan.
Coming up, we're going to get you ready for the trading day ahead. We're going to talk about the Fed and the week's inflation data next. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're right back after this.
right, the Fed is set to kick off its two-day policy meeting today, and the markets are also anticipating that big CPI inflation report that we're going to get this week. For more on that, the markets and the Fed, we want to bring in Daryl White. He's the CEO of BMO Financial Group. He joins us from the 2024 U.S.-Canada Summit in Toronto. And Daryl, we were just talking about what to anticipate from the markets and what to think of the Fed coming. Steve said basically you're looking at a shot, maybe 60% shot of getting a cut sometime this year. You are still of the expectation that we could potentially get 2 cuts this year, right?
Yeah, we are, Becky. First of all, good morning. Thanks for having us on. We are in that expectation. I think we're in. I would say we're in the slim majority from Steve's report. We're looking for 1 cut in September and then another one in December. So 2 quarters by the end of the year.
And you think that that's necessary or that it's not? Because you also think that inflation is pretty sticky. So what's the Fed to do?
Yeah, I mean, yes, inflation is pretty sticky. And look, I'm sitting here with you from Toronto right now in Canada, where we watched the Bank of Canada move just a week ago. But we have a situation here that's a little bit different, where we've got employment that is much higher, around 6%, but we have price control. We've got inflation below 3. It's at 2.7, 2.8. So when you've got a situation where, yeah, you've got some stickiness on inflation, but you still have some pretty good full employment in the U.S., it's a tough call. And I think that's why you're seeing the survey come back at 52% and not at 80 or 90.
Answer the question that we were just debating at the end with Steve. What do you think, just in terms of whether we're looking at a situation where there's a lot of liquidity in the market? Is the Fed actually, is its policy at this point restrictive? Are rates high enough?
It's not clear that it is restrictive yet. And I think that's why you don't see anybody calling for a move. You know, I remember last time I was talking to you all, we were talking about moves by now. But it's not clear that the policy is restrictive yet. When I look at other regions around the world, you see the effect. You see the transmission effect. But given full employment and given the price stickiness, it's not clear.
So we have the Bank of Canada and the ECB both cutting rates. It puts us at a different position to see how that's going to affect capital flows. What is the impact for the market in the meantime?
Well, the impact has been pretty muted, I think, in most places in the world, other than in the U.S., where we're hitting new highs, of course, every day on the S&P and the Dow and the NASDAQ. But there, I do think that there's something to what Steve had to say at the end of the last segment, Becky. There is clear evidence that companies are figuring their way through productivity gains and approaches to managing through this environment. So, you know, we do have to give credit to the productivity and to the strength of the underlying economy.
So you see the new highs in the market and you are not afraid. You think it's deserved.
Well, I didn't say I'm not afraid. I mean, there's a lot of volatility. There's a lot of things that could go sideways, mostly geopolitically. But in the meantime, until and if we see that, you can justify the valuations that we see in the market today.
And what are you telling investors to do at this point?
We're asking investors to be pretty cautious. We're saying to folks, we think you should be fully invested, but at the same time, we should be careful as we lead into the fall, as we lead to more geopolitical risk, and as we lead into the election in November.
But the areas that you like, would it be technology, which has been leading the way to this point, the AI boom that we've seen?
Yeah, we do like technology, Becky, but we're also diversified in our point of view. I mean, we think that you've got to have a vast full profile in the portfolio, and we do think looking across sectors is pretty important, particularly in moments like this where the volatility is at risk of increasing. We don't see it increasing a lot today, do we? But we do think that there's significant risk as we go into the fall that we'll see a lot more volatility. So invest for the summer and be careful in the fall.
Daryl White, the CEO of BMO. Daryl, thanks a lot.
Thanks for the time.
When we come back, a new treatment for Alzheimer's moving closer to FDA approval. We will talk to an expert straight ahead.
Welcome back to Squawk Box. A New York City office building owned by an affiliate of related companies is set to be sold at a steep discount. That's according to a Bloomberg report that said that Empire Capital and Namdar Realty agreed to purchase the tower at 321 West 44th Street for less than $50 million. It's a short sale, meaning the owners agreed to sell the property for less than the outstanding amount on the mortgage, which is estimated at more than $100 million. We mentioned this sale of a single building as a real-time read of the falling value of commercial office space. Now, this is not a grade A building, so, you know, take it for what you will, but we haven't actually seen a lot of buildings in New York City trade, which has been one of the big question marks about when we've looked at different REITs and other funds that have these things, what the actual values really are underneath them.
Right. It's so often people will either hold them or just hand it back to the bank. The bank will take it and absorb it. But, you know, 67% discount. Those are the type of things that start to get.
We should have bought it. We should have gone in together and bought the building. Come on.
Price discovery is difficult, and that is harkens back to why it would be very difficult to do unrealized gains. It's hard. It's really hard. Illiquid assets to figure it out. And then if they go down, it's like, wait, I already paid. Coming up, Eli Lilly's Alzheimer's drug moving closer to FDA approval. We're going to talk to an expert on the disease as well as that drug right after the break. Eli Lilly shares are higher this morning. A panel of independent advisors to the FDA recommended Eli Lilly's Alzheimer's drug, donanemab, monoclonal antibody, MAB, paving the way for the treatment to to receive full approval in the United States later this year. Joining us now is Dr. Howard Fillet, Alzheimer's Drug Discovery Foundation co-founder, Chief Science Officer. I was actually, welcome, Doctor. It's good to see you. I was talking about one of your op-ed pieces yesterday in Sydney Farber and comparing this to the early days of chemo, where there's kind of I don't know if I'd call it a blunt instrument, but certainly the first of, this isn't the first, obviously we have the Biogen drug, but we're at a point with the treatment of Alzheimer's, we're in the early stages, and we don't know yet exactly what treatment is going to look like 5 or 10 years from now, but this is definitely a positive start.
Absolutely. It's really the first time that we're having any disease-modifying drugs that could ultimately lead to even prevention. I think the future is going to lie, just like in cancer, in combination therapy with precision medicine driven by biomarkers. And we've had tremendous advances in biomarkers. There's blood tests available that'll be really driving the field as we go forward, and brain scans that are driving the field forward. So I've been doing this over 40 years. It's just an amazing time in our field. We're really having breakthroughs and success for the first time.
You note that it's possible for these drugs, which I guess work on amyloid plaques to clear those a little bit, to put the disease into what looks like almost remission, and it could last up to 4 years. What does that do to our understanding of what the pathology, the underlying or epidemiology, whatever it is? What is happening with what's happening with Alzheimer's? Right? By getting rid of the plaques, if it puts it in remission, are the plaques causing the Alzheimer's, or we still don't know?
Well, it's part of the story, clearly, because by getting rid of the plaques, we're able to slow the disease down by about 30–35%. But the next question now is, how are we going to get to 100% slowing? And for that, we know, again, it's going to be combination therapy. For example, we know there's a lot of inflammation in the brain that probably is driven in part by the plaques. And so the largest category of new drugs in development now, out of 75% that are non-amyloid drugs, is drugs that are directed against the inflammation that's in the brain, partly driven by the plaques. And so I think you're going to see monoclonal antibodies to amyloid combined with other monoclonal antibodies, anti-inflammatories, neuroprotective agents, agents against the vascular component of the disease, and even gene therapy.
Okay, see, there's a lot that you said there that clears a lot of it up. So the precision medicine that we're talking about, we're not exactly sure what that is yet. It's yet to be discovered, but it looks like, is this relatively recent information about the inflammation being such a big component of Alzheimer's?
Well, actually, when Alzheimer described his disease in 1906, he described inflammatory cells around the plaque. And I can tell you that going back to the early 1980s, there's been a lot of interest in inflammation, but it's been hard to get the right drugs and demonstrate efficacy with those anti-inflammatories. And so that's the next step. We have novel anti-inflammatories that specifically target the brain cells that promote the inflammation, called microglia.
Why? And that happens with naturally with aging, doctor, or is there something else that kicks it off?
Well, one of the hallmarks of aging, as we all hear about, is inflammation. But when we usually speak of it, it's systemic inflammation, inflammation from things like arthritis and other chronic diseases that basically get into the blood and into the brain and turn what's called prime these microglial inflammatory cells to become active. Now, in some ways, that's a good thing because it's actually the microglial inflammatory cells that eat the plaques. That's how the monoclonal antibodies actually work. They bind to the plaques and tell these inflammatory cells, come on over here, you got to get rid of this stuff. But at the same time, when those microglial cells become too active, the inflammation becomes damaging. So we're trying to thread the needle between not decreasing the ability of the microglia to eat plaques and other debris in the brain. We don't want to stop that, but we want to ensure that they don't get too hyperactive because that can be neurotoxic.
That sounds almost like a immuno.
It's just it's so many corollaries to the way what we found out about cancer. It's threading needles all the time, I think, doctor.
Exactly, And cancer, clearly most people with cancer are on 2 or 3 drugs, maybe 4 drugs, and now immunotherapy has revolutionized cancer treatment. And I think we're going to see the same thing with Alzheimer's. These are diseases of aging, and the fundamental processes biologically of aging are shared between cancer and Alzheimer's disease and vascular disease and so on. So we're looking at fundamental mechanisms of aging because by far, aging is clearly the leading risk factor for Alzheimer's disease.
Yeah, aging is a key risk factor, I guess, for everything. It seems like, Doctor, but try stopping it. And maybe we need to stop that. Yeah, aging and obesity. Maybe, and aging causes obesity too. Maybe we need to stop aging. Doctor, can you work on that next?
Well, there's a lot of interest now. I think for the first time, there's really some really hard science between aging therapeutics, and we're starting to look at that in a more holistic way. For example, the drug semaglutide, which is so popular now, all these GLP-1 agonists like Ozempic and the others, they're showing that they can inhibit and slow the progression of not just obesity, but other illnesses with old age. And in fact, Novo Nordisk is conducting a big clinical trial of semaglutide for Alzheimer's disease. So there's a lot of common threads here.
Amazing. All right, that was great, Doctor. We're out of time. Good luck. Godspeed.
Thank you very much.
Hurry up.
We're all going to be microdosing. I told you. Wow. It's going to happen. Meantime, it is just after 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. Among today's top stories, the Federal Reserve kicking off its latest policy meeting today with a rate decision expected tomorrow at 2 p.m. Eastern Time. Before that meeting, May CPI data will be released. That's going to happen at 8:30 a.m. tomorrow morning right here as we're broadcasting live on Squawk Box. Meantime, a federal monitor probing United Auto Workers President Shawn Fain over accusations of improperly stripping 2 UAW officials of their duties. Their monitor is Neil Borowski. You may remember him. He oversaw the Troubled Asset Relief Program for the Treasury Department back during the financial crisis. He's now investigating whether Fain abused his power as union president. He's accused union leaders, including Fain, of obstructing the investigation and interfering with his access to information. And Elon Musk threatening to ban Apple's iPhones from his companies, saying the tech giant's new deal with OpenAI is a security risk. Musk has a long-running feud with both companies over the technology. We're going to have more on that story in the Worldwide Developers Conference announcement in just a bit, but I'm going to make a bet that as Elon's looked at all of this, at least the current rollout plan, that it may not be as worrisome as he was expecting.
Let's take a look at the futures this morning. You'll see right now the Dow futures are down by about 140 points. S&P futures off by 11. The NASDAQ down by close to 50. Let's get over to Frank Holland. He's got a look at this morning's pre-market movers. Hey, Frank, how you doing?
Hey, good morning, Becky. Good morning, Andrew and Joe. Great to see all of you. Okay, we got to starting off with a big upgrade from Oppenheimer, moving NVIDIA from 110 to 150 per share. Analysts see the stock split as a catalyst for the move higher, adding that NVIDIA is best positioned in artificial intelligence. Oppenheimer also raising the current year and next year earnings forecast, citing structural tailwinds. You can see NVIDIA shares are lower in the pre-market, but they were lower in the pre-market yesterday as well before finishing about 0.75% higher. We're also looking at Shopify this morning. Shares right now moving higher, up 0.75% coincidentally, following JP Morgan initiating coverage at overweight, also in a year-end price target of $74. That implies a 19% gain. Analysts say the recent pullback with shares down almost 19% year-to-date. Interesting coincidence. That makes for an attractive entry point. Also adding, Shopify has only penetrated about 11% of what they believe is a $60 billion e-commerce market outside of China and minus Walmart and Amazon. Again, shares of Shopify up 0.75%. We're also looking at shares of Oracle this morning ahead of earnings. You can see right now they're fractionally lower ahead of earnings after the bell. The stock has outperformed the NASDAQ 100 year-to-date and is generally considered a more valuation-friendly AI play. You can see the forward PE just under 21. The key metric to watch in this report, cloud revenue excluding Cerner. Last quarter, it was 26% higher year-over-year. The estimates for this quarter, 23% higher year-over-year. Becky, back over to you.
Okay, thanks, Frank. We'll see you in just a little bit.
All right, coming up, Bank of America and the Consumer Checkpoint, a real-time estimate of where consumers are spending and their financial well-being. Then Apple pushing into AI. Investors, though, not impressed. The stock had its worst performance on a day of the Worldwide Developers Conference, worst that it's had in more than a decade. More on the news and whether or not it's a game changer for Apple products. Squawk Box will be right back.
Bank of America releasing its June consumer checkpoint, giving insight into the U.S. consumer spending, also financial well-being. Spending was actually up 0.7% year over year, with younger generations being the driving force on this. Joining us right now to talk about it is the head of Bank of America Institute, Liz Everett-Chrisberg. So there's this question we keep asking, is there a rebound in the consumer? And it looks like your data is kind of showing that too.
I'd say we're seeing the consumer spending growth continue to be positive, but it's growing at a softer level. It's stable. I think saying that the consumer spending growth is stable is the right way to think about it.
Is that something that you would describe as a soft landing when you look at the economy?
I don't know that I'd say soft landing, but I would say that when we look at the big picture, when we look at labor market growth, wage growth, we are continuing to see gains, again, across, you talked about generations, across all generations. But interestingly, we are seeing, again, like spending, we're seeing that rate of growth come down a little bit. So we're still seeing positive.
Right? I mean, I would be shocked if the spending was not coming down to some extent. We keep waiting for things to slow, but it's not falling off a cliff either.
Not
it's
falling
not
off a cliff.
something that's necessarily going to indicate the Fed's going to have to cut rates soon.
I'd agree with that. I think the other thing that we are seeing is when you look at the components of spending, we are seeing a convergence of services and goods. So services spending came down from about 3% to 1.5%. Goods spending rebounded back up, but it's still negative 0.2.
I mean, is it, this is kind of gross, but is it the pig and the python sort of analogy? We're working our way through the pig that was the pandemic that changed all of our consumer spending habits?
Well, I think you're making the right analogy going back to the pandemic. And what we're seeing there when we compare the results, right, is that during the pandemic, we were in a totally different space. We're coming back to getting to pre-pandemic levels. And where was the economy pre-pandemic? It was actually in a pretty good place, right? And so we keep looking for, and I think we're attuned to look for signs that things are falling off a cliff, that things are ending. But when you look across the board at wage growth, which I talked about, continues to go up. When you look at deposit balances, every generation still has deposit balances that are at least 44% higher.
That's what shocks me. I mean, I thought we were supposed to run through all this excess savings, excess cash that we had from the pandemic. That's not happening.
And we're not, but part of that's because of the wage growth, again, while moderating, is still higher than the spending growth. So you're able to not run through the money. Now, there are some consumers on kind of the fringes that are starting to see some challenges, right? And in particular, we're seeing those potential challenges with the younger consumers, even though they've got higher wage growth, even though they're driving spending. But when you look at credit utilization, right? Credit utilization is still below pre-pandemic levels, but it's starting to tick back up faster for the Gen Z and for the millennial consumers. And then the other thing, again, that we want to keep our eyes on is repayment rates. We looked at just those consumers with credit cards that are revolvers, right? So not people who are paying off their cards every month, but those people who are using it as a revolver. And it would make sense that those would be the ones who might be in financial stress sooner. Looking at their repayment rates is going down. They're not defaulting, but it's going down, and that's going down to levels that are below where they were before the pandemic.
When you talk about wages, though, still wage gains outstripping spending gains, that gets at this question of how sticky inflation is. How would you characterize it? So I don't put words in your mouth.
Well, I think the things to think about. You've got wage gains, again, they're coming down. They're pretty close. You are seeing, but this is why I think we're seeing the deposits where they are, right? And this is where if people can continue to spend, they will. However, we're also seeing in our data some things as relates to behavioral changes, in particular with, again, younger consumers, where we're starting to see their spending for groceries, for example, shifting from premium and kind of standard grocery stores to buying more at the value change.
Wow, you're tracking exactly what people are buying on top of it?
Well, we're not tracking if they're buying, broccoli or steak, but we are tracking where they are spending that money.
Oh, okay.
So if you look at the proportion of grocery spend at, a high-end grocer versus a very value one, we're seeing more, particularly with younger consumers, a shift to people spending more of their grocery dollars at these value chains.
Can that be because of Walmart's performing better and putting better stuff in there than it used to be?
It certainly could be that, but it also could be that people are thinking, all right, this is emotionally, I'm reading the headlines too, I'm worried about the economy, I'm going to change my behavior. The other behavior that we're seeing...
Is their spend on grocery going down? Is the total dollar amount they're spending on grocery going down? Or just shifting?
I got to double check on that. But the other thing that we're looking at is people are starting, if you look at the total spend on food, including food away from home and groceries, the shift is to more groceries. So people are also making a behavioral change to eat out less, to eat at home more. So it's a more cautious action by the consumer. Again, predominantly younger consumers that we're seeing right now. I think that they seem fine, but it's something we want to keep our eyes on.
Liz, remind me one more time how many accounts you're looking at, just because I think this is one of the more valuable data sets we watch. It's real data.
Yeah, so we look at 69 million consumer and small business accounts, and we are not taking surveys. We are actually asking them not asking, we're just looking at what they're doing.
Yeah. Liz, thank you. We always appreciate the updates, and I think if you see a big change, it's going to be something that we sit up and pay notice to as well. And now we're throwing confetti behind.
Now we're throwing confetti.
Now we're throwing confetti.
Say hi to your father for me.
I will, of course.
Thank you.
Thank you.
Coming up, when we return, Apple's push into AI and what it means for the company's product cycle. Is the tech giant too late to the game? We're going to discuss after the break. And later, former World Bank President David Malpass is going to join us to discuss the Fed, inflation, and much more. It would be interesting if he was the world president, but the World Bank president, it's a pretty good job, too. Squawk Box comes back after this.
Some news just out from General Motors. The board has approved a new $6 billion share buyback program. It is also raising its dividend by 33% to 12 cents a share. That stock right now up by about 36 cents.
Meantime, a U.S. appeals court rejecting a bid by Uber to revive a challenge to California law that classifies drivers as employees rather than contractors. An 11-judge panel, the San Francisco appeals court, upholding a ruling that said that Uber failed to show that the 2020 state law unfairly singled out app-based transportation companies while exempting other industries. Now, Uber said the ruling would not change the status of its relationship with its drivers, who are considered contractors under a 2020 ballot initiative. We used to talk about it all the time. It was known as Proposition 22, the fate of Prop 22 being weighed as a separate case in California's top court, which heard arguments about it last month. So we'll hear more about their rulings later.
We thought that this was going to be a game changer if it actually passed and affected them, because to turn all of those contract employees into actual employees would be an incredibly costly move. I guess the most recent court decided that it didn't meet the expectations of proving that it was like singling them out over everybody else.
Coming up, we've been talking about it, former World Bank, not world president, not world president.
Could become the world president.
Some people would like a world president. That's what we're fighting against every day. Bank President David Malpass joins us. And then planning a summer vacation, Well, Washington, D.C. wants to help you. Lawmakers are looking to crack down on hotel hidden fees. You ever get they put you in a room and you see it after you leave? It's like,
Yeah.
what happened? Was that from the wet bar? That vodka? We're going to have the details. Squawk Box will be right back. The May Consumer Price Index will be released tomorrow morning, just hours ahead of the Fed's decision on interest rates. Will the inflation data change the central bank's rate path? For more on that, let's bring in our next guest, former world president, you wish. World Bank president.
I don't wish.
Yeah, we don't need that. David Malpass, he is a distinguished fellow in international finance at Purdue now, Purdue University, Daniels School of Business, a long time. Long before you were World Bank president, you used to come on all the time. Where we used to interview you?
So I was at Bear Stearns.
Bear Stearns?
Before that, I did some in the Reagan and Bush administration. You know, we were trying to fight for more growth both at home and abroad. So that still is the fight.
I think one of your big complaints right now is that we seem to be on a path where these 6% deficits are not going anywhere forever, and unless. And the Biden administration at this point doesn't, these are the forecasts. They aren't saying we need to change this. It's like, this is what it's going to be. That makes it hard to grow, does it not? Almost impossible.
It does, because the government is getting a lot of not only U.S. capital, but the world's capital. So the U.S. government is sucking up capital from around the world to spend on things that it wants. That's these huge subsidies and credits that they put through the tax system. It's the spending that still is backed up even from years ago that they can't find enough uses for. And so that causes businesses to invest less. and we end up with slow growth out into the future and big deficits. So you're exactly right. The world really can't operate where the biggest economy expects to have a 5% or 6% of GDP deficit out into the future.
And I was a little bit disheartened that you think Europe is improving more quickly than we are, and that the euro might start becoming attractive as a, well, I don't think it'll replace the dollar, but it's certainly getting some interest.
I think that the dollar has a good chance to be better than the euro, and we're seeing now with Europe cutting interest rates but not doing it in a way that adds production. This is a challenge for them. They're facing different problems than the U.S. So no, I think the U.S. is still the world's strongest economy and can be. It's just that we're in a bad phase right now. And that gets straight into all of the policy choices that are being made. Those can all be changed.
Europe, this is just, I don't know, did you say this? Europe is accelerating and we're kind of slowing down.
Well, okay.
On the Europe side, they're doing a better job allowing businesses to produce, and very importantly, their fiscal deficits are not in the same league as ours. So interest in the euro, I want to be in the euro, not the U.S. dollar under these circumstances. You didn't say those things?
So that was first quarter. So in the first quarter, remember, Europe came off of a recession, and they got all the way to 1% growth, and they were very excited about it. But from the standpoint, if you look beyond a one-quarter number, the U.S. is better positioned for the world that we're in.
But you're not convinced that staying tight is the way to bring down inflation. Is that true?
So tight is a term of art within economists. So well,
restrictive.
You say restrictive. I want the monetary policy of the U.S. to enable growth in a way that holds down prices. You can achieve price stability by having more stuff within the economy.
Supply side.
That's supply side, but it's kind of obvious to everybody within the economy. If you're in a small business and you're facing regulation out the kazoo, you close your business. That's what's going on. And the interest rates are high, so you close the business. And there's the elite. Washington does well. Washington and the elite within the country do well with the interest rate environment that we've got. That you clip coupons, put money in the bank from the high interest rates. So we need to find a way out of that toward lower interest rates. I don't think it's all that hard. You need to defend the dollar and have more production within the economy.
It kind of sounds like Judy Shelton in terms of that the answer isn't just to choke things off. You might do better with inflation if rates were lower.
Well, that's Ronald Reagan. I want to channel Ronald Reagan. Remember how much the rates were able to fall as the economy got stronger. Because people are investing in your currency. If you are operating a model that's peace through strength, that's based on small businesses, what do you think is going to happen? People beat a path to your door. You know, if you build something better, they're going to come and put their money into the U.S. And that's not that hard.
This is kind of interesting. And you think that they're behind the curve in cutting right now, the Fed?
Well, look, the Fed made a big mistake by being at zero for a long time, and so the world is taking, and the U.S. takes years to straighten out that problem. But at this point, real interest rates are high enough. I think that we should recognize inflation is coming from what the rest of the government is doing in terms of regulation, in terms of the administration drained SPRO, the Strategic Petroleum Reserve, at the wrong time, and so now you're left with oil prices going up, gasoline prices high, and you're empty from your Strategic Petroleum Reserve. Just a whole series of decisions that are leaving us at a weak point in the world. And Putin and China look at that and they see that.
So you're not sure that a second Biden administration would be a great idea. But what about all the Trump?
No, wait.
What about all the
Let's
Trump?
be clear on that.
Yeah.
Biden set out what his policies are. Lots more taxes, less production, less energy, and weakness as we see day by day on an international stage. At each point, waffling.
And what about Trump? 10% tariffs across the board. That you can't agree with that.
Well, Trump is focusing on, we're going to have a better economy for small businesses. We're not going to be biased against the small businesses. And on the energy side, we're going to have more energy. You know, the grid is going to work in a Trump administration. I'm not sure where the course that we're on right now, you've got to have real concerns about the electricity grid breaking
AI
down
and everything
in
else.
parts of the country. The electricity demand has gone up a lot. The expected production of electricity isn't going up because there's all the restraints on that.
There's a lot, I mean, the entire of this paper anyway, Andrew, I haven't looked at the time, but everything in the op-ed pages of the journal today is talking about what happened in Europe and some of the elections, what it means for the Paris Accord, what it means for net zero. We're going to be at double the emissions that the Climate Accord wants in 2030 because of AI and because of everything else. It's just, that came along and threw a huge wrench in the works to getting to any of these places right now.
Yeah, and it's changing the politics.
And it's changing the politics. And people over there are saying that, you know.
They've gone so many years, Germany in particular, dependent on Russia for all of their energy. And then overnight, you don't get that. They'd shut down their nuclear reactors. So think of the power that they lost by doing that. And so then they're left with problems for all the corporate sectors. So the big chemical companies, which need energy in order to make the things that people need, fertilizer, the household supplies, they move to China, which is not operating under the same constraints. They sign on to the international accords, but then they're just producing and building electricity grids like crazy, and the manufacturing that goes with it. So it takes jobs away from Americans, from Europeans too.
I told you. When you were head of the World Bank, you never said any of this stuff.
I did.
You said no one listened.
You can't.
No mics were there.
You can't imagine the size of the international meetings where one speaker after another says the only problem in the world is the existential threat of climate, and don't talk about refugees, about coups going on, the fragility, the arms flow into Africa, the child nutrition, all of the problems that are going on, and they are not doing anything about it. You look at greenhouse gas emissions; they're just going up. The whole goal of the world system was to spend as much money as possible, and as, I don't know, it's not necessary because it's not really working. Just spend as much as possible, because there's a whole complex of the elite making profit from the climate side.
And this is Coonan, Stephen Coonan, who was Obama's guy. Wrote this.
The climate crisis fades out.
Yeah,
I think that's dangerous for the U.S. to think. In Europe, even with the political changes going on, the institutional structure is to keep regulating and forcing spending. So that means some big chunk of the fiscal deficit of the U.S. is for things that aren't making production, that aren't getting people's lives better.
Right. All right, David Malpass, thank you.
Thanks, Joe.
Good to see you, David. Up next, Apple's push into AI and what it means for the company's product cycle. Is the tech giant too late to the game or not? And later, a possible bid for National Amusements. The Journal reporting former media executive Edgar Bronfman Jr. expressing interest. We've got more on that story in just a bit. Squawk Box will be right back.
Welcome back to Squawk Box. Apple unveiling its AI strategy at the Worldwide Developer Conference yesterday. The company's late entrance into the AI race includes Apple Intelligence and OpenAI integration with Siri, and a lot more. Joining us to talk about the announcement is Stephen Levy, editor-at-large at Wired. Some people thought this was a make-or-break moment. I'm curious what your initial reactions to seeing what they laid out was.
Well, it was the most Apple thing ever. I think the words artificial intelligence were only used once in the keynote to say it's artificial intelligence for the rest of us. Apple, in typical fashion, has just swapped out the artificial for Apple, and it's pushed towards putting generative AI into its products, which, as you said, is pretty late. I think it is early in this race for artificial intelligence. Apple has a lot of brain power. It has a lot of money to spend. It had to take on a partner in order to keep up with the cutting edge large language models that people use. Of course, is OpenAI. There was some controversy about that. And I think overall, it's what we expect to see from Apple. Not the first the first company to jump into a field, right, but the company that says, we're going to take this confusing situation and make it simple for people to use.
Well, that's my question, which is, I know you haven't had an opportunity to test it yet. There seem to be two elements that may take some time to really actually work itself out. One is how much of the sort of cross-app AI product innovation is actually going to be there in iOS 18 off the bat. Some of that even seemed to be suggesting that they might not actually roll that out immediately, that some of that may come later on. How sophisticated that stuff's going to be, meaning when you are talking to Siri, asking it to do things that might involve both your calendar and your notes and a couple other things all at one time. And then this idea that OpenAI and using ChatGPT for certain types of writing products and other things, that each time you do it, you're going to effectively have to select and decide that you're actively leaving the ecosystem, how that's going to work, and whether you think they're going to ultimately integrate ChatGPT, Gemini. We were talking earlier, would Elon Musk one day get Grok in there? Could Claude, which is owned by Anthropic, get in there? And how this whole sort of system is going to work, and how seamless or not that experience will ultimately turn out to be.
Okay, yeah, two things there. First of all, the using multiple apps, having your chatbot basically go through all your apps and do things for you. And this is something, ironically, that the original Siri team at Apple, over 10 years ago, wanted to put into to Siri, and then they wound up going off on their own and tried to implement it in something that wound up at Samsung. It is a difficult thing that people think is inevitable, but there's a lot of things they have to get right to do it, especially when you want your AI to do things for you, and say, wow, you've made an appointment in Seattle, I'm going to book a flight for you. You can imagine what can go wrong when the AI has the power to do that, or even if you wanted to tell it to do it, and one app in the chain of things you want to do isn't going to work. So as you say, we're going to have to see how that rolls out and how well that works. As for the second part, I think that you're not going to wind up having to do it every single time. There probably will be a setting where you could just say, anytime I want to use ChatGPT, let it happen. And they actually did say that if you pay for ChatGPT, you could move your subscription over to Apple. So maybe some people will buy, the subscription to ChatGPT to use it within Apple. This could be good for ChatGPT that way.
We were actually trying to talk about the economics of this in the last hour. Nobody's really sorted that out or been public about it. Historically, Google has actually paid Apple money for that very valuable search box on its Safari browser. Do you believe that OpenAI is paying Apple? Do you believe that Apple is paying OpenAI? Every time that those servers are getting hit, that's going to be a lot of processing power. And who's paying for that?
That's a great question. My sense is that OpenAI is probably not giving a bundle of money to Apple, but as you indicate, they're probably willing to absorb some processing costs in order to have this partnership work. And Apple, they said openly after the keynote that they're looking at other things. That Gemini, the Google's product could be worked in there, and there could be a multitude of LLMs, large language model, generative AI products that could swap in to Apple. And Apple has their own. You have to realize that the things that they've said, like autocomplete and emails and their photo AI, that's working on their models. So maybe one day Apple might build its own.
Do you believe that? I mean, I don't know if you saw what Elon Musk said yesterday. He seemed to be very frustrated with the idea that OpenAI would be embedded at a very deep level into this iOS. I'm not sure it genuinely is in this case just yet. But one of the things that Apple made a point of about privacy is that even if you're using something like an OpenAI through the Apple service, they're not going to be able to train on any of the information that you'd be effectively inputting. Do you buy that?
Yeah, I think so. I think all the companies are saying now that you're, like Microsoft and the others, that your personal information, the stuff you store on your corporate cloud, your own emails, they're not going to use that to train their AI. And I do believe that. Apple says they've built in extra protections. They say even if Microsoft, for instance, goes back on its word and wants to integrate that, they probably could do it without you knowing. Apple's saying we're building in protections that even if we wanted to break our word to you, we wouldn't be able to do it because we're using encryption and other privacy techniques to stop us from violating our word.
So then go back to the economics of this, because at one point I thought to myself, well, if you're OpenAI, maybe you'd absorb the processing costs because you'd actually be able to train on some of this information. That might be helpful to you. Maybe it's some kind of lead gen kind of product in that, people will see the experience that they're having and then decide to pay for the paid product version of OpenAI. How do you imagine this working? And do you think that ultimately companies, the way Apple's, over time has succeeded, they almost get people bidding effectively for the opportunity to be that player. But this is different because the cost of being that player may actually be huge. Unlike a Google, which can monetize it through advertising, we haven't figured out a way to monetize AI unless the consumer is actually paying hard cash.
Look, we're going to have to wait for some lawsuit to come around for the arrangements between Apple and OpenAI to become public. And there probably will be a lawsuit for something that comes out through these products. There almost always is. But I think that OpenAI is not signing some sort of suicide pact where they're going to spend millions and hundreds of millions of dollars for processing because they have a partnership with Apple. Maybe there is something that talks about the amount of processing we'll have to do through the Apple products that Apple will cover that. Who knows?
Stephen, it is always great to see you and to get your expertise on all of this. The legendaries. We can call him legendary, right? He's a legend. He's a legend. Nice to see you.
Thank you.
All right, up next, lawmakers are looking to save you money this summer when you book that vacation. A crackdown on hidden hotel fees is coming. Details next. We're coming right back.
Welcome back to Squawk Box. Lawmakers targeting hidden hotel fees, and a vote could come this week that would require more transparency about mandatory charges. Emily Wilkins joins us now with more. You know, that resort fee kills me every time, my friend.
Every time, Andrew. I mean, you think that you've compared two hotel prices and then it turns out, oh, by the way, what you thought you were going to pay, you're now going to pay 20, 30, 40 bucks more. And these so-called junk fees are so unpopular that they're bringing Republicans and Democrats together. This afternoon, House lawmakers are expected to widely support a measure requiring hotels and other short-term lodging to have to include that cost of mandatory fees in any sort of advertised price. Hotels raked in an estimated $2.9 billion in fees in 2018. The last year data is available. And a 2023 Consumer Report survey said 37% of respondents found hidden fees after receiving a hotel bill. And for a number of those folks, it actually pushed them over their budget. Now, hotels have said that these fees help support things like Wi-Fi, transportation, other amenities. But Lauren Wolf, who's the Council for Travelers United, has said that she's found that's not true. Her company has sued 5 hotel chains, including Hilton, Hyatt, and she said that they found the fees just get added to room prices on the back end.
Everything goes into the same bucket of money. It's not paying for any special amenities, and they're just telling you that to make it seem like this is some sort of reasonable fee, when really it's just a way for them to get extra money from the consumer.
The American Hotel and Lodging Association has defended the fees. A poll they commissioned found only 6% of hotels charge some of these mandatory fees, but they, as well as top hotel chains and Airbnb, are supporting this legislation, saying it's going to be beneficial to have one national standard for how hotel costs should be advertised. And hopefully, if the House passes this in a bipartisan manner, it potentially could fly through the Senate, and who knows, maybe could actually impact some of the summer travel that's coming up. Andrew?
Okay. Emily, thank you. We can hope.
Okay, here's my problem with that. If we're going to focus on things where there's no transparency and costs, do something that matters, like healthcare costs. I mean, I know we agree on this.
Yes, we do agree on that.
The idea that you can't figure out where you can get an MRI, what the price differential is at different places, any number of tests. If you get PT that's connected to a hospital, it's one thing. If you get it another,
is clearly more powerful than the hotel lobby.
Yeah. Great. All right, when we come back, the Wall Street Journal reporting former media executive Edgar Bronfman Jr. has expressed interest in buying National Amusements. That's the company that controls Paramount. We will have more on that story in just a little bit. And later, Council on Foreign Relations President Emeritus Richard Haass will join us to talk about the shifting political winds across Europe and much more. Squawk Box will be right back.
C.
Welcome back, everybody. Former head of Warner Music, Edgar Bronfman Jr., expressing interest in a bid for Paramount Global. That is according to a report by the Wall Street Journal that says Bronfman is looking to offer somewhere between $2 and $2.5 billion for National Amusements. Joining us right now is Matt Bellany. He's the Puck founding partner. And Matt, we know that the Skydance offer is real. Is this a real offer?
That's a very good question. We think it's real. And, Bain Capital is involved here. And from everything I've heard, Bronfman, who, is the executive chairman of Fubo, which is a digital streamer focused on sports channels, they're already in business with Paramount. And my understanding is that Fubo would play a role here if this bid does go somewhere for National Amusements. But, this is all a backup to the Skydance deal, which is being pretty heavily negotiated. And, if that falls through, then it perhaps opens the window here for one of these other suitors for National Amusements.
Okay, this is interesting. That's a good way of describing it. This is not something that is going to knock out the Skydance offer. This is something that's there as a potential backup. We also heard Stephen Paul potentially putting together a $3 billion offer for National Amusements. When you look at those deals, I mean, Skydance is offering $8 billion, and it's money that's going to go, I think, $2.3 billion for National Amusement, which is the 77% controlling vote, the stakeholder in Paramount. The rest of it would be going to the other shareholders. This is a different deal, though. I mean, you get back to the question of could you do this and not get in huge trouble with the other shareholders if you just buy out National Amusements? What do you think?
Yeah, that's the pitch. And the money going to Sherry Redstone, the controlling of the shareholder, has come down a little bit in that Skydance negotiation because of exactly what you said. They're trying to head off these shareholder lawsuits from the B shareholders. And, maybe this Skydance deal will come to a resolution and they'll figure it out. But everything I have heard is that Sherry Redstone is not thrilled with this revised offer. She's now got these 3 CEOs of Paramount Global whispering in her ear saying, well, listen, if you've got to cut all these costs and fire all these people and sort of change the trajectory of the business, well, we can do that. And you can stay as the controlling shareholder. So she's got a lot of choices to make here. And Bronfman coming forward gives her another option here to just say, okay, we'll figure out what to do with Paramount Global later, but perhaps there's an avenue just to sell the controlling interest in National Amusements. She walks away or gets a title or some kind of continuing interest, and then they figure out how to deal with Paramount.
I mean, that's a really interesting question. A deal that just takes out the voting, the highest voting shareholder doesn't seem fair, but at the same time, should that shareholder not be allowed to sell? I mean, this is where you wind up in the shareholder trouble with all of it.
Yeah, and the problem is it doesn't address the very pressing issues that Paramount Global has. I mean, this is a company that, depending on who you talk to, is sort of teetering. And if this Skydance deal falls apart, the stock price will likely go way down because this has been dragging on, and this is seen as sort of a way for for Paramount Global to have at least a path forward with a buyer like David Ellison, who is the son of Larry Ellison, who potentially could infuse it with new energy, new money. They will still have to figure out what to do with these assets, but the argument goes to Sherry is like, you're going to have to figure that out anyways. Why don't you do it yourself or just sell out your National Amusements stake and then have someone else come in and figure out the Paramount question?
What do you think is the potential solution for the Paramount question? Is it something like a partnership with Skydance, with the studio? Does this FUBU business sound like it makes sense on any way, shape, or form? Has anybody been able to figure this out? Because it's not just a Paramount problem. This is an industry problem.
Absolutely, and this has been the elephant in the room since the beginning of this negotiation. Is nobody quite knows what to do with these linear television assets, which are throwing off the majority of the company's money, but are in secular decline and aren't getting better. So, in almost all the scenarios right now, there will be a divestment. There will be a sale of some of these assets, perhaps some of the cable channels, perhaps CBS goes to Warner Discovery, which has been, desperately looking for a broadcast channel to beef up its carriage fees, perhaps, and that would be a way to do that without, raising the ire of the government, perhaps. There is a scenario where Comcast does a joint venture for Paramount Plus, so that becomes part of an offering with Peacock and sort of takes Paramount Plus out of the purview of Paramount Global. There's a lot of different scenarios here. We're not privy to exactly what is being pitched to Sherry Redstone, but some version of a divestment, some version of cost cutting on a grand scale, that's all on the table right now.
It's June 11th. You think we have an answer in the next month?
I think we will on the Skydance element. I think that at some point, the Ellison people are, put up or shut up here. They've been trying really hard to get this deal done. And if that doesn't work out, then we will go to plan B and we'll figure out how to get, and Sherry will have to figure out which of these other suitors to engage with. Or say, you know what, we're going on our own.
Mm-hmm. Matt, it sounds like we need to have you keep us on your speed dial as you hear things.
No problem. It's the wildest deal that I've ever seen.
Matt Bellany, I have a feeling we'll be talking to you again soon. See you later.
Thanks.
It is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, GM shares are higher this morning. The automaker's board has approved a new $6 billion share buyback program. It's also raising its dividend by 33% to 12 cents a share. That stock up by 1.25%. Shares of Eli Lilly also higher this morning. A panel of independent advisors to the FDA recommending the company's Alzheimer's drug, donanemab, paving the way for the treatment to receive approval in the U.S. later this year. Eli Lilly shares up by 2%. And one of Tesla's longest-standing shareholders is backing Elon Musk's pay package. Bloomberg reporting that Scottish asset manager Baillie Gifford will vote for that package at Thursday's shareholder meeting. Baillie Gifford was once Tesla's second-largest shareholder just after Musk, and it has held that stock for more than a decade.
Meantime, Apple going all in on AI, rolling out new features across its product line. Our Steve Kovac was there for the Apple Intelligence presentation. Joins us this morning from San Francisco. Good morning.
Hey, good morning, Andrew. Yeah, before today, Apple was considered behind on AI, and now it's largely caught up. Apple's showing off a slew of artificial intelligence features that are now integrated across Apple's operating systems for iPhone, iPad, and Mac. That was at its annual WWDC event yesterday. In typical Apple marketing fashion, they're not calling it artificial intelligence, but Apple Intelligence. Here are some of the highlights that they announced. Deeper voice controls for apps. That means you can tell your apps what to do in a natural language. Right now, it only works with Apple's apps, but it's also going to open up to third parties that can tap into the intelligence system. And then, of course, the OpenAI partnership, ChatGPT, will be an optional feature. Siri will prompt you if it thinks ChatGPT can provide a better answer for you. You can use it instead of the ChatGPT app. Elon Musk should listen to that part. Don't need to make an account. And then there's privacy, of course. This is Apple, after all. Biggest difference between Apple's vision and other AI visions out there. Lots of tasks handled on device. Others will go to the cloud, which Apple says will be done in a private fashion. Plus some fun stuff like image and emoji creators that you can send in text messages and things like that. That's just scratching the surface of everything Apple announced. But look, this is the key takeaway you need to listen to. These are largely catch-up features to what we've already seen rivals like Microsoft do with its AI Copilot assistant, or Samsung and Google put into their smartphones as well. But what you really need to know, Apple Intelligence will only be available on newer Mac models and iPad models, plus the iPhone 15 Pro, or later, presumably the iPhone 16. If folks find those features compelling enough, then this could spur more iPhone upgrades, because at the end of the day, selling more iPhones is what matters the most for Apple, Andrew.
Steve, I don't know if you can help us with the question we've been asking all morning, which is the economics of its partnership with OpenAI. We've sort of batted this one around, given the way so much of the AI is going to work on device using Apple's own models. But then, of course, if you're going to reach out and use OpenAI, it's a different story. We've talked about how Google's paid for the privilege of being sort of the default choice, if you will, on Safari for search. In the future, we may very well have Google Gemini, but there's a lot of processing power. It's very expensive every time you're effectively hitting the server to process your query, and who's going to be paying for that?
Yeah, and that is pretty much the first question I asked Apple yesterday following the presentation. I got a little detail for you. They are not commenting on the financial agreement between OpenAI, if there even is one, or what that looks like. So who's paying who? We have absolutely no idea. Is OpenAI paying for access to all those iPhone users? Is Apple paying OpenAI on a per query basis or something like that? We do know it's free, so there's no money from the user coming across. So someone's paying someone. What I do know, and I did get clarification on this, is so for most of those artificial intelligence features, like you said, that is running on Apple's own language model. Then if you opt, there's an option to choose for the ChatGPT stuff, and in future models, they mentioned Google is coming as well. That's going to run on actually the Microsoft cloud. So I got confirmation on that, Andrew. This is actually good news for Microsoft, because all those queries running on the Azure cloud is just more money going into Microsoft. So this is really interesting if you're a Microsoft investor, knowing that this ChatGPT technology is going to be pushed out to, oh, I don't know, by the end of the year, a couple 100 million folks.
Hold on, but Steve,
that's good news.
I'm gonna push back on that.
Yeah.
Because there's two pieces to this. Just because there's queries on the Microsoft cloud doesn't mean that there's economics to Microsoft. In fact, the truth is there could be cost to Microsoft. If in fact Apple is not paying OpenAI, and there's a big question, that's why I was asking about sort of how this is all being arranged. If OpenAI is not paying for this privilege and Apple is not paying OpenAI, it actually costs them to do this.
Right,
and
exactly.
You could have made the argument that they were going to be able to train on this data from, you said they're going to have access to all of these phones. Well, if they can't train on the
They're
data,
not gonna have access to the
it's
phones,
unclear what the value of having all of these folks attached to this really are, unless you believe this is some kind of lead gen program to get people paying for ChatGPT, the professional version, where there are folks paying, but effectively that's still up in the air. So that's
just
why I
don't know,
said,
Andrew.
just because Microsoft is going to be processing all of these things, there is a big cost to processing them. And if Apple's not paying for that privilege,
Someone's
it's
paying,
unclear
though.
what's happening here.
Yeah, someone's got to pay, because like you said, it's
it could
enormously
be Microsoft
expensive.
is paying, though. And that
could be
means
Microsoft. And that would be
that's
horrible
not
for
good
them.
for Microsoft necessarily.
Yeah, that would be horrible. I would be surprised if that's the case, because just the way we know other OpenAI services, let's just say on a smaller scale what OpenAI works for, when you pay OpenAI to use the paid version, or even an enterprise comes in and starts using it, some of that money is going to Microsoft. So it is confusing. And again, Apple's not saying the nature of the partnership, OpenAI is not saying, Microsoft's not saying, of course. I'm sure it'll come out eventually. But it's really hard to pick who's winning, really, in this partnership. I mean, Apple thinks it's going to win because these features are going to get people to buy more iPhones or more Macs or what have you. But we just don't know which way the money is going in this deal, and presumably more deals, because we got Google coming up next. They did confirm yesterday that Google's going to be the next model offered in that system. But I do want to clarify, because there's so much confusion, including among Elon Musk. This is a separate thing, the ChatGPT element of it, from what the Apple Intelligence part is. It's an optional thing. It'll prompt you. The queries will come back saying this is from ChatGPT. It's not from Apple. So take that into account as well, Andrew.
Right, Steve.
Is it just a link?
Thank you.
Basically, it's just a link to the app.
No, you'll be integrated into. Let's say you're writing something in Notes or writing an email, and you'll say, "Make my." Well, hopefully, it'll do it on device, and you'll say, "Make it better," or you'll say, "Write me the email," and then it'll say, "Would you like to do that with ChatGPT?" You'll press the ChatGPT button, and it will just do it in the app.
But we can't figure out if this is something that's akin to the App Store, where you have to pay them for everything that goes through, or
no, you're not paying.
Yeah,
you're not paying.
But we don't know what the contract looks like behind. I mean,
we don't know. That's what we were saying. We don't know. And that's why when Steve was saying this is automatically great for Microsoft, it may be.
Or it could just be a whole lot of traffic that
it
they're
could
not
be
getting money
It could be a lot of cost to Microsoft. Very unclear.
Let's check the futures before we talk markets with our next guest. Futures right now been weak for most of the morning, but we've seen new highs coming many of the recent sessions. Lori Calvasini is head of U.S. equity strategy at RBC Capital Markets. I like just reading your notes. You say, you know, if I'm going to be intellectually honest, and I like that when people say, can I be honest? That makes me think, so what were you doing all those other times we had y'all? But being intellectually honest, Lori, you're neutral. And I think neutral is actually more bullish than you actually are, because your metrics bring you to a fair value of somewhere between 5,100 and 5,270 on the S&P for the end of the year. We're above that right now.
So yeah, Joe, and look, I would say over time, you know, I think most of the investors, I would say the people who like me at least would say that they think I'm intellectually honest.
I think you are, but I
try to be, and look, you know, and look, I know nobody likes a neutral call, right? And I've actually been apologizing in some of my client meetings recently and saying, look, I'm sorry, you know, this isn't more exciting, but this is just how I see it. And I think it's fair to say, I mean, I think you hit the nail on the head, Joe. I mean, when I run through the numbers, if I take my earnings number, I can get to that 5,100 based on the PE assumption, which is based on kind of the consensus view of Fed inflation and 10-year yields, where they're going to be at year end. And my earnings number is admittedly a little bit below consensus. I've not yet updated for this last reporting season. There's still a few companies trickling in, and I've had a more pessimistic view on margins than the bottom-up consensus. So fine, let's look at the bottom-up consensus. That's where I can get you close to 5,300. That earnings number is at 245. Layer it in with the same PE assumption and all those same consensus rate, inflation, and Fed assumptions. And, you know, that's the range. And look, we do try to tell people our valuation model, it's a compass, it's not a GPS, it's a rough guide. But even with that, you know, I run through all these scenarios, and you know, if you look at the full version of my report, we have all these stress tests, and these are where those consensus views could go wrong, and then I can come up with systematically lower numbers for the S&P. And so, you know, I have other models I look at. This is one of 5 things in our tool belt. But at the same time, you know, I would be lying if I could sit here and tell you that I can make the math work really easily to come up with a higher number, and I just can't get there right now.
And even in 2025, we don't know. You don't know. That's what you point out. It's even foggier in 2025. So you don't have that to fall. You know, a lot of people fall back on, so, you know, 12% earnings per share gain next year puts us at X, but we don't really know. We don't know anything about next year.
Right, and I'll tell you the one data point that we do know is that if you look at consensus GDP forecasts, so this is where all the economists around the street think GDP is going to be next year in real terms, it's been tracking about 1.7%. That stat for 2024 is tracking around 2.4. So based on what the economics community knows now, they think that growth is going to slow, not into a recession, but into something that we would term as economic purgatory. So remember, I'm an equity market strategist. Why do I call 1.7% economic purgatory? Because stocks typically go down in that environment. And if you look at how stocks perform the year prior to kind of a 0 to 2% GDP range, it's in the single digits. And so that's the kind of one data point that's out there, and it doesn't look so pretty right now.
It's not going to be helped by, if it is 1.7, that gives the Fed some leeway maybe, I guess, depending on inflation. But that's not going to save the market.
So, you know, we have a 2.6 number for PCE baked into that current, you know, consensus view assumption. That's what's getting us to the 21.5 times trailing PE multiple at the end of the year. That consensus view also assumes 1 to 2 Fed cuts this year and 10-year yields that move to about 4.19. So that seems like a pretty rosy view. You know, I was listening to my rate strategist this morning in his Fed preview for tomorrow, and basically he says even if CPI, you know, comes in a little bit cooler than expected, and we have a really good day on CPI tomorrow, he says it's still going to take time for the Fed to really feel like inflation is on the mend. And so he's still looking for a December cut as the first cut at this point in time. And, and basically he says the clock has been reset after that string of negative CPI prints that we saw at the beginning of the year. And, you know, I don't make the Fed call, I don't make the inflation call, but I think there's a lot of wisdom in the way he's thinking about it right now.
Yeah, you are. You're an exhausted bull, I think. I see it. That's what it's. It's one of the first things you said was you just described that. And people are still pretty complacent. I don't think we're really seeing much bearishness built up yet. So sentiment probably isn't something that could soften the blow either. But I guess we got to run. Lori, thank you for being honest this time. That's great. No, you are every time, but I just like that. Can I be honest with you? Roy?
Yes. Yes.
Okay. All right. See, whenever I say that, I think, ooh, that makes me feel bad. Thank you. It's good to have you.
All right, okay, coming
Thanks
up,
for having
the political winds of change blowing across Europe. We're going to get reaction from Council on Foreign Relations President Emeritus Richard Haas is here. And later, has capitalism lost its way? Rockefeller International Chairman Bashir Sharma is going to be out with a new book exploring that very notion. We'll talk to him in the next half an hour right here on Squawk Box. Don't go away. Welcome back to Squawk Box this morning. French bond yields jumping to their highest level since November after President Emmanuel Macron saying he would not resign, quote, whatever the result of the upcoming French parliamentary elections. Macron began his second five-year term in 2022, but his administration has been under increasing pressure since a far-right surge in Sunday's EU elections. Joining us right now is Council on Foreign Relations President Emeritus Richard Haas. He's a senior counselor at Centerview Partners, and it's great to have him at the table to help us break down what has just happened over the last week and what it means.
Interesting week, and we're heading towards what the French like to call cohabitation. After the elections late this month and early in July, you are clearly, Mr. Macron, his party is going to get hammered.
So if you had to write an essay for Foreign Affairs right now, what would your essay say about the takeaways from what just happened?
What it shows is, it's a really bad time to be an incumbent. European incumbents pay a real additional price for low economic growth, prolonged, high levels of immigration, and overregulation. You add all that up, incumbents are going to get hit everywhere.
But what does that say about the politics of Europe? By the way, what does it say about the politics here?
What it says about the politics there is, how would I put it? Europe's great at regulating, not so good at innovating, and not so good at growing, and we're seeing the effects of that. And again, Open borders, relatively open borders over years have also really hurt. Look, any times the incumbents don't deliver, they pay a political price, and that's the message here. And so, by the way, it's a message elsewhere. We saw it in Argentina. We saw it in India. We're seeing it everywhere around the world. If you're the incumbent and people don't see measurable improvements in their living standards, they're not confident about the future, you are going to pay.
But then what does it say to all of these businesses who have looked to a France to say, okay, I'm going to invest there, or I'm going to invest in India? What are they supposed to think now?
Well, in terms of France and Europe more broadly, you've got to think twice, because as it moves to the right, you're looking at a really large welfare state. What's interesting now is right and left overlap in some areas in Europe, as well as here, by the way. No one, by the way, is in favor of small government. We're seeing it here, we're seeing it there. And you've got to think about it. I think banking regulation has been fairly heavy in Europe, is likely to go that way. So businesses are going to have to think twice. You're not going to have robust growth rates. India, a lot of people are looking to as a kind of alternative to China, but it doesn't quite, it doesn't quite emerge as how would I put, separate and equal. So I think there's going to be some frustration there.
Just in terms of what it means here, you pointed out that Europe's had a slower economy. They're better at regulating, not so good at innovating. But there's a lot of discontent here when you look at inflation and wage growth that until recently has not kept up with inflation. Does that play out the same way? How do you see this?
Well, it's clearly a headwind for Joe Biden. That no matter what the objective measures are and certain things about economic growth and levels of employment, people don't feel better. And they're not confident they're going to be feeling better down the road. So yeah, he faces real political headwinds over that, not to mention the border, not to mention his age. So you have to add these things up. And I would say what just happened in Europe is it's a real warning sign to Democrats.
There's no doubt, though, that one takeaway from Europe is that the Greens got absolutely hammered. And green, in some respects, means deindustrialization, or going to Russia for your natural gas, however you want to see how that, closing down nuclear reactors, all of it converging with AI needs and grid needs, which are going to be just exploding. So we're going to need energy. Transition's not going well. People are chafing at what's necessary to reach those aggressive goals that Europe embraced more than we have here.
Well, I think there's a real lesson in this, that energy transitions got out of sync, and people were moving against anything carbon related and traditional fuel related before they could dial up the other side, and people got caught. And that I think is the lesson. And
wasn't it obvious?
Well, everything, yeah. I would have thought it was pretty obvious. In retrospect, it's certainly obvious.
We spent $12 trillion, or I don't know how much, but we're still at 80% fossil fuels.
Yeah, we're going to be at a heavy fossil fuels, and we can look at the mix of fossil fuels, less coal, obviously more gas. No, but you've got to do that. And we're looking at fossil fuels. By the way, this transition, we're not talking years, we're talking multiple decades, and that's what people have to internalize.
What do you tell all your now that you're a big investment banker?
Thank you.
What do you know? What do you tell all your clients about what's happening here and what they should do about it?
Look, I think for any business, you got to assume it's a really turbulent world, much more turbulent going forward than it's been in that. We're going to look back, by the way, Andrew, at the last couple of decades or more as almost a golden age of geopolitics.
Okay, so you're just very pessimistic then about the future.
I am worried about reemergence of geopolitics, the absence of trade, over-regulation on a few issues. What I feel positive about, though, is technology. Think about it. We got through the COVID pandemic because of two technologies, mRNA vaccines and Zoom. Right. Zoom is probably the underappreciated technology there. I think we're probably going to get through a lot of the climate issue, not because of these annual gatherings, which are real wasteful gab fests. We're going to get through them because of technology. That is the hope. So I think on a lot of issues, that's what I'm positive
about. But if you're talking about the breakdown, effectively, of the world order, of the Klaus Schwab future.
There's not going to be a world president. Andrew was pitching the idea of a world president.
Welcome to break. If Davos is not at the center of things.
But look, if you look at the top, I don't know, Fortune 50, Fortune 100, Fortune 250 companies in America, they effectively are multinational companies. That is the business.
Everyone.
And if you're saying that's not the business in the future, or that's a much more complicated business, that's actually a thing that I actually imagine most investors don't think enough about.
True, because it doesn't plug into models, but that's the reality. You have to assume that U.S.-China ties are going to remain, shall we say, defined by friction, more, not less restrictive. You've got to assume that global trade is not going to come back. We're not going to have a successor to the already unsuccessful Doha round. We're looking in this country at more protection and more industrial planning, whether it's Trump or Biden. The pendulum has swung, the economic model has changed. The Middle East is not poised on the edge of stability. Europe is not poised on the edge of stability. So you have to assume, when you look around the world, that it's a less benign environment for business than looking backwards.
Okay, now throw tariffs into the mix too.
No, tariffs are in the mix. People are going to reciprocate, and they're going to be inflationary. I actually think, if I look down the road, and this is more your department than mine, but I would think inflationary pressures are going to grow if we close down immigration, we introduce tariffs here, you get reciprocal tariffs elsewhere. How is this not going to be inflationary?
Richard Haas, thank you, sir.
What a
pessimist. It's such a sunny day.
I'm sorry, I feel badly having come here.
You didn't tell us what you tell your clients. I know what you tell them. Leave a voicemail. I'll call you at the turn. I'll call you at the turn.
But I'm really disappointed we didn't talk about the Open.
I know.
You're letting me down. You're letting me down.
He'll talk about the tennis Open. He said I'll talk about the tennis Open.
I'm happy to talk about tennis. We can talk about what just happened in France, the French Open. I love tennis.
You're back to Europe.
Golf.
If Scotty Scheffler wins it, this is even more than the Tiger Slam, maybe, right?
Well, no, it'd be up there. It would be up there.
And he got to shake Jack's hand. That was pretty cool.
Mr. Nicholas.
Mr. Nicholas, yes.
Okay.
Mr. Nicholas, to you.
Thank you.
When we come back, the White House may have found a new leader for the FDIC. We've got that story straight ahead. Plus, the results of CNBC's Fed survey and what it could mean in terms of the rise of the hawks. Squawk Box will be right back.
Yep. Welcome back to Squawk Box on CNBC. The futures got a little worse, down 141 points now. Actually, yeah, 140 on the Dow. You can see the Nasdaq's lower as well. Bitcoin down about 4%. Oh, we're going to look at that in a second. Let's look at treasuries first. Haven't seen a lot of action in treasuries. That could change in the next couple of days with the Fed at the 10 years at about 443. And I haven't looked at Bitcoin recently, but it was below 70 and threatening to break 67. It's down 4%, 66,800.
Okay. AI news. The FT now reporting that French AI startup Mistral has secured 600 million euros in funding. That would bring its valuation to about $6 billion. The funding round being led by General Catalyst alongside Lightspeed. Andreessen Horowitz also backing the company. Some corporate backers as well: NVIDIA, Microsoft, Salesforce, Samsung, and IBM. So another player on the scene, Becky.
Coming up, we've got the Hawks versus the Doves. We will have the results of the latest CNBC Fed survey as Chairman Jay Powell kicks off the central bank's two-day policy meeting. And we will also talk to former Atlanta Fed President Dennis Lockhart about the Fed's potential rate path, the upcoming inflation reports, and the state of the economy. Squawk Box will be right back. The Fed's two-day policy meeting kicks off today with a decision coming tomorrow afternoon. This morning, we have the results of the CNBC Fed survey, and for that, we turn to our senior economics reporter, Steve Leisman. Hello again, Steve.
Hey, good morning, Becky. Yeah, respondents to the CNBC Fed survey growing a bit more hawkish since the last meeting, whittling down the probabilities for rate cuts this year and extending how long the Fed is expected to be reducing its balance sheet. Here are the numbers: 46% probability for September, 62% for December. Both are down from the May survey. Both are a bit below market pricing as well. 5.01, that's the average year-end funds rate, that is up a few points. And March 2025, that's when the Fed's expected to end quantitative tightening. In the prior survey, it was January 2025. Peter Bookvar, Chief Investment Officer for Bleakley Financial Group, he writes in with the survey, nothing in the recent data we've seen should give Powell confidence that it's time to cut rates, and I don't think he's going to be influenced by other central bankers that have already cut. More on that in just a second. Okay, so here's the outlook for the funds rate. 5.4 is the current one, goes down to 5 end of this year. 4.1 next year still with the long run 3.3, so you can see the Fed expected to be above the neutral rate for quite some time. At the beginning of the year, the outlook for 2025 was about 50 basis points lower. Even while its outlook has turned more hawkish, the group of 29 strategists, economists, and fund managers has more concerns from the dovish side. Take a look here. What's the most likely scenario? The Fed cuts too late, say 66% of our respondents. 21% say it cuts too soon. That's the most likely scenario. And just 14% think the Fed gets it just right. Mike England, chief economist at Action Economics, he writes in, says, there are growing signs U.S. economic growth is beginning to weaken, perhaps as supply shortages across industries are finally dissipating, providing more two-sided risk to the economy. Still, respondents don't think the Fed should cut rates just because the real funds rate has gotten more restrictive with the fall in inflation. But they think the ECB did the right thing by cutting interest rates for just that reason. And of course, Becky, we have that CPI number tomorrow morning, which could actually influence the outcome of the meeting tomorrow.
You think? So they'd be looking at that last minute data and it could potentially push them one direction or the other?
I think you can't ignore it if you're a data-dependent Fed. If you're a data-dependent Fed and you think that the risks are more on the inflation side and you get an inflation report that's hotter or weaker, I will say I am looking at the Cleveland Fed Index and it's a little bit maybe lighter than the market expectation. Cleveland does this nowcasting on the inflation numbers for the CPI, and there's 0.08 on the headline and 0.3 on the core.
I might run for office because I'm going to flip-flop again, Steve. Now I think we. I think we should cut.
Why?
After talking to Malpass, I mean, how much of inflation is mortgage rates and the small businesses? It's too expensive to start anything, and high interest rates can be inflationary.
So now you're a real estate developer?
I don't know. I'm flip-flopping. I think there's something to it, to increasing supply, that high rates don't necessarily solve the problem that you're trying to solve with inflation,
But it's the only tool they have.
I know, but sometimes it's actually counterproductive. It could be counterproductive,
It just warms my heart, and I feel like after 20 years I'm making some progress and getting you to see the one hand and the other hand, right?
So that's John Ford got me to do that. But you've never been a supply sider. I think this is basic supply side economics, isn't it?
I am a supply sider. The difference between me and the supply siders is I'm a supply and a demand sider. I see both sides of that. But let me just say a very quick word on what you just said, which is you are absolutely correct. There are some inflationary aspects to the Fed raising rates. One of them we don't talk a lot about is the interest income. And also, what about the COLA increase to seniors?
Well,
a couple years ago, they got a huge increase.
Well, they got a huge increase from nothing. And if you're looking at finally being a saver who's making some money on this, that's just going back to where we were before the pandemic and before the the Great Recession. Like, okay, back to good old days.
Weren't you talking 6 a.m. at 6 a.m. about liquidity in the market?
Yes,
yes, you're right. It was from nothing.
I do.
There you go. We got the whole crowd talking that way.
We're way behind the curve on cutting. We should cut tomorrow.
Joe, I have a third scenario here that I've been talking about, which is I don't think the Fed needs to start a cutting process. What I do believe it could do is take a little bit off the top. I really think Lagarde might have showed the way here, which is if you notice, she cut by 25, and the market didn't race to price in, 20 rate cuts down the road. She did it in a very guarded measure.
But that's because the ECB is not the Fed. If the Fed were to do that, look, I think people figure ECB is going to do this, and then they're going to wait and see what the Fed does next. I'm not sure the reaction would be the same if it were the Fed.
Your argument, Becky, is that the Fed is sitting on top of, is the jockey of a thoroughbred racehorse, and the ECB is sitting on top of a nag.
No, not at all, not at all. But I think if you look, if the Fed does it next, then it's concerted government or concerted central bank intervention around the globe. You've got the Bank of Canada, you've got the ECB, you've got the Fed piling on, and I think that changes the whole dynamic. When you have friction between what the ECB is doing and the Fed, I think that creates a little bit of a different scenario in terms of how the markets will interpret it.
Flopping.
That's interesting.
Flipping.
Dynamic global central bank thinking. I like that.
I might go back. I might go back to you. I don't know.
Steve's right. I was saying something else at 6 o'clock.
Yeah,
Anyway, Steve, thank you for giving us a whole lot to talk about it. For more on what we can expect, we're going to ask somebody who's actually had to make decisions like this. Dennis Lockhart is the former Atlanta Fed president, who's now a professor with the Sam Nunn School of International Affairs at Georgia Tech. And Dennis, you tell us, what would you be thinking at this point? How would you walk into this with all the same information the rest of us see?
Well, first let me talk a little bit about tomorrow morning's CPI print. It should affect decision making, but in my experience, when people enter the room, they're sort of locked into their positions, and it would take a pretty startling report, a CPI report, to change the basic momentum of the meeting, I think. So that's one point. What I would be thinking is that we've been in a period for a while with inflation data sort of going sideways, and therefore somewhat ambiguous. And so I think the theme of remaining patient and continuing to look for validation that the true path is disinflation toward 2%. That's, I think, the positioning. So this is likely to be, on balance, a sort of boring meeting.
Boring, except for there are so many other things that are happening. I think what you just said is kind of what we heard from Peter Bookvar. Steve was just telling us what he had to say about how, if you're looking, there's nothing in recent data that should give Powell any confidence that it's time to cut. But is there any thought that the ECB and the Bank of Canada's actions do add a little pressure or not?
You know, they're always a consideration. The overall level of the cost of money globally is an important factor in the global economy. But because we sit on an economy here that is so large and so dominant and, relatively speaking, more closed than open compared to some of the other economies around the world, I just don't think what the other central banks are doing is going to be that much of a consideration at the table.
What about the Malpass argument? David Malpass was here an hour ago and said that, look, this is a situation that you can't really fix with higher rates, that this is a supply issue. We need to be more focused on that. And what the Fed is doing not only doesn't work, but actually adds to the inflationary picture, because higher rates do add cost in a lot of different places in the economy.
Well, if you want to predict the path of policy, I think we kind of have to put ourselves into the head of Jay Powell and the committee, and they believe that monetary policy and high rates eventually will achieve the objective. There's been, I think, no abandonment of that conviction, and so I think they will continue to use the tool they have, which is the level of the interest rate, to try to slow the economy and bring inflation down.
Let me just ask what you think about this. I mean, we talked earlier today about how a building was sold here in Manhattan at a 67% discount from what was paid by a related company's unit. Something like 2018, they paid over $150 million. They just sold it for less than $50 million. That's the type of pain that you see spread out in places. Is that the type of pain we need to see more of before the Fed's tool can really work to bring down the economy?
I don't think we need to see that kind of pain, although there could be a great deal of pain related to commercial real estate coming down the road in the next 2 years, and everyone's quite well aware of that. But I think principally what we need to see is a more and more cautious consumer who is spending less or trading down in their spending, and just basically a more muted economy with pricing power not really very strong on the part of price setters.
Okay, well, based on what we heard from Bank of America, who looks at 69 million accounts for the consumer and small businesses, That's not what they saw last month. They continued to see consumers spend, even younger consumers leading the way, even when it meant that they were taking out more loans, more credit card debt.
Yeah, I'm not saying it's happening. I'm saying that's what we would probably want to see, which
So
means
that's why
that
it's a ways off.
I think the committee simply has to be patient with this until they begin to see some of that evidence.
Dennis, thank you for your patience with us, explaining it to us. Dennis
Great
Lockhart.
conversation earlier. I loved it.
Great to see you.
It's like a John Ford thing. People they do like that. I don't know, I'm flipping or flopping.
Oh, somebody's got Squawk Box on, t-shirts on. Ricky,
Wait, really?
Yeah, look at that.
Oh, wow.
we like that.
Where can we get those? Where can we get those? Coming up, they come in XXL. Coming up, I don't need that. We're going to talk to Rockefeller International Chairman Ruchir Sharma about his new book, which is clickbait titled, What Went Wrong with Capitalism? Because that's not what he's saying at all. Squawk Box will be right back.
Ian Peacock.
Join us now for a future Nobel laureate, I think, after this, maybe not, but Ruchir Sharma is here, Rockefeller International Chairman and Breakout Capital founder and CIO. We just had just a moment, Ruchir. I'm so pleased. His new book is out today, What Went Wrong with Capitalism? The whole thrust of this book, basically, is that capitalism has been, I guess, it's been ruined by big government. And we don't need capitalism 2.0 or some type of woke capitalism. We need to return to real capitalism because big government spending, deficits, regulations have spoiled capitalism. And the reason that you name it that is no one's going to read it.
You're projecting. You're projecting.
You just
There's
said that.
other elements of the book.
No one's going to read
that.
it. No one's going to read it if you don't. You can preach to the choir. You want to bring in people that hate capitalism and show them what the real problem is.
Yes, exactly. And I think that so far that seems to be succeeding. Although today is my launch day. But
Good. Everybody should read this.
Right. But the early part, what I can make out is this, which is that a lot of people have come on your show and spoken about how government spending is out of control, how budget deficits are out of control. What I try and show in this book is that it's a suite of government habits. If you look at regulations, we introduce now, America, 3,000 new regulations a year.
And don't get rid of any of the old ones.
In the last 20 years, we've gotten rid of 20 regulations in total, right? So 3,000 every year, we get rid of 20. Then we've become a bailout nation. It's a history that even I learned as I was researching this book, which is that back in the 1950s, 60s, 70s, right up until the 1980s, the concept of the American government bailing out a private sector company was heretical. It was said, we don't do this. Then you get the first big bailout in 1984 of Continental Illinois.
Yep.
And after that, it's been a succession where you get progressively bigger and bigger bailouts, where now it's become almost analogous, as I've said in the book, to our culture of pain management, which is that you get the slightest pain, you give them opiate, right? So, and you have an opiate crisis as a result. Similarly, like on the economy now, the risk has become socialized, which is that when things are going well, when things on the upside, let them run. The moment there's the slightest flutter or something is going wrong, we're going to intervene, and the government has your back. So this is not what capitalism was really meant to be. So it's a suite of government habits. On your show, you had people focus just on government spending or even the Fed in terms of the asymmetry of the Fed. But what the book tries and do is to show you over the last 100 years how capitalism has progressed to this very distorted form of what we have today. Bernie Sanders would like to call it socialism for the rich, but
You're
this
right,
is socialized risk.
Andrew, there is something for everyone in this, because this is not just government's fault. This is big corporations that want bailouts.
Yes.
But they ruin capitalism too. That's the thing. So we've got problems from government.
Yes, because they've socialized. The problem is that the gain. It's a cliche. The gains have been privatized. The losses have been socialized.
But the moral of the story remains that if you can, they're both at fault, governments and corporations, but capitalism in its purest form is the way we need to go.
I'm not sure you say that either, because you also talk about competition.
Yes, but I say, like in the book, that
that's
the
what
basic
capitalism
concept
is.
of
No, but that there's not enough competition.
Right, but
that goes to the government part.
And that hurts capitalism.
Yeah, because
but you need government to do that.
But my regulations, Andrew, tend to be pro-incumbent and pro-big business, because who are the people who are able to game the regulations? Who are the people who are able to pay for the entire regulatory environment? It is principally big business. If you look at small businesses today, the cost, for example, on Wall Street, you speak to people, the cost of setting up a new fund today, if you're a small person, is 10 times larger than what it used to be 20 years ago.
So you can never get it back.
Yeah, exactly. So you have all the big hedge funds, the big people who are out there who are able to do it, and you have these enormous growth there, but for anyone new looking to do this, it's become very tough. And that's just a microcosm. It's happening across businesses.
This is an age-old problem. The lobbyists and everybody who can get a congressman or a congresswoman to listen to them and take their...
I want to add just one piece of context or nuance to that, though.
Sure.
That is true in the world of finance. It is not true in so many other worlds, because I would argue to you that now we have this backbone called the internet and the technology that anybody can use a cloud and sell product. I mean, the idea that somehow the incumbents are always going to win, I think that there's a lot of truth to that in certain cases, of the biggest. But in terms of the amount of small businesses that could come online over the last 20 years as a function of technology is a remarkable thing now.
Yes, Andrew, and yet what my data shows, over the last 20 years, right up until the pandemic, the number of new startups in this country is actually declining.
Yep.
Economic and social mobility have declined. The probability of you being a billionaire and becoming entrenched has gone up 40%. So churn has reduced in general in the economy, and that's why capitalism, as I argue in the book, is not working for the average person. Therefore, in America today, most young people, when they're polled, say they want socialism, not capitalism. But what they don't realize, I think, is the fact that what you have today is not the capitalism the way it was meant to be. This has become socialism for everyone. In a way, risk has been socialized. That's the point I'm trying to make in the book. It's a suite of government habits. And of course, I'm not even going down the path that we're running a 6% budget deficit when we have full employment. That's a different
But how much do you think the government is captured?
A lot, I think, because if you look at even things like lawyers, right, in this country, America always had the highest number of per capita lawyers in the world. But the last 20 to 30 years, the growth in that has gone parabolic. That's just telling you about what's being captured. Who are the biggest lobbyists today in Washington? They are the tech companies. The big mega cap tech companies are the biggest lobbyists back in Washington today. So there's been a massive regulatory.
But who is pushing? But the reason I'm asking you these questions is because, you know, from a party perspective, political party perspective, who do you think is pushing back the most, and who do you think is pushing back the least?
Who's going to save us? If corporations are doing it, and if corporations are too powerful and government is too powerful, who can stand up for capitalism, pure capitalism? Who's going to do that?
Unfortunately not, but as I said, today in America, 70% of Americans are saying that they want major economic change, and the polling language used is they want the economic
change to go
down.
Yeah.
Right, in terms of that. And in Europe, it's even higher because they have an even more distorted version of capitalism than we do. And yet, as we go around the world, I offer examples in the book from Switzerland to Taiwan to in Vietnam, that you give people more economic freedom. Typically, people tend to do much better. Those societies tend to be happier, and you end up getting much.
So how do we get back to that? We're screwed. How do we get back to that?
Well, until, unfortunately, you know, that we get a crisis. And the government is out of its ability to rescue and to spend, there will be no turn. So it's more of the same.
Until there's an absolute, complete collapse, basically.
Collapse. But you know, like, until the ability of the government to do this, because what I show in the book is progressively every decade, the habits have gotten worse. As I said, we never bailed out companies until the 1980s. You know, like in terms of the stock market reaction, that every time the stock market is flying, it's fine.
But you're talking about Great Recession or Great Depression.
No, I'm not talking about a Great Depression as well. I'm just trying to say that something needs to be able to get people to course correct, right? Which is that for now, we have this sort of attitude, which is, you know, very true also, which is like of the Biden administration, etc. That things are great, right? Economy is growing at 2 or 3%, stock market's flying, we got AI. Why do we need to do anything?
Great. We had a great financial crisis, that didn't do it. Then we had a global pandemic, and that didn't do it.
Because they made it worse.
That pretty much leads to nuclear war.
Yeah, but I think that
which is maybe coming too with Putin and everything else.
Yeah, but I'm just trying to highlight it here in terms of, as I said, the first step to a cure is to diagnose the problem. Today, the problem that, you know, like a lot of people say is we need more intervention to fix these problems. We need more intervention to fix inequality. I'm saying that you got into first, like all this mess and this disaffection with capitalism because of the way that you have been running government or, you know, for the last 30, 40 years. And I said that the road to hell is paved with good intentions. So I'm not doubting that. But the outcome that we're getting today is very perverse.
Right. I'm just telling you, one party's paving us with a hell of a lot more good intentions than the other, Andrew. I'm sorry. Thank you, Ruchir. Squawk Fox is coming right back.
right, check out shares of GM. They are moving higher this morning on word that the board approved a new $6 billion buyout plan. Earlier, we also mentioned a dividend hike. That was not new news. It had previously been announced in the first quarter. It was moving on the wires today as well. But that movement today, the stock is up by 1.5%. That's because of the $6 billion buyback.
And let's take a final check on the markets before we hand it over to our friends on Squawk on the Street. Take a look at the futures right now. We've got some red arrows. The Dow off about 146 points right about now. NASDAQ down about 47, 48 points. The S&P 500 off about 12 points. Let's also show you the treasuries right now. The 10-year note sitting at 4.47. The 2-year at 4.847. And then finally, let's show you what's going on in the energy complex. Oil, WTI crude, you can buy it by the barrel, 77.69.
I'm going to show you Bitcoin.
Make sure
there's nothing happening.
We can show you Bitcoin, which is also, by the way, down
4%.
We got to run. It is down about 4% right about now. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are resuming their chop after Monday's closing highs for S&P NASDAQ. Fed meeting begins today. The market shifts its focus from tech to the macro, although Oracle's tonight. Our roadmap begins with Apple joining the AI arms frenzy. Big potential boost to the tech giant's product cycle, but is it too late to the game?
Plus, Eli Lilly's Alzheimer's drug gets unanimous backing from an FDA advisory panel. Those shares once again rallying ahead of the open. And General Motors shares are also on the move this morning. That automaker's board authorized a $6 billion stock buyback.
Let's begin with Apple the morning after it kicked off WWDC by unveiling what it calls Apple Intelligence to add AI features to its products. The company also bringing OpenAI's ChatGPT to some apps, including Siri. Despite those announcements, the stock did close down almost 2% in yesterday's session, although, Jim, I know Melius says don't be fooled by the sell-off.
Yeah, and I talked with Ben Argis, and he and I are pretty much agreed. I spent a lot of time talking to Tim after, Tim Cook, CEO. And I think that what you have to do is you have to say, all right, if you put all these things together, tie them together, unless you own the Pro or the Pro Max 15, you're going to want to upgrade. And not on any individual one. I mean, do you want to have your own emojis? Of course we do. I send an emoji with the, with the sunglasses. I send to my kids all the time. Enough. Okay, I want to be a little more personalized. Like when your daughter graduates from high school, I want to be able to cap and gown, going to Venice, whatever.
Sure. Get more personalized emojis. I'm sure that's going to sell a lot more iPhones.
No, it's a pastiche, if not a mosaic of things.
I see.
Right. And you want to get the Vision Pro, and I know you don't. You get 3D pictures of people who may have passed away that you get to be with. That's kind of cool. I don't know. I'm looking. Maybe you probably think I'm reaching. But I
think that makes sense. Show me all pictures of me, Jim, and David out at night.
Yes.
Yes. It can do that.
I think that's terrific.
Us in the clubs?
Yeah. But hear me out. Like, let's say you're doing an interview with someone, or you want to talk with someone. He listens. You can tell him, listen, I'm taping you, and then it spits out a transcript.
That would be very helpful.
I've seen the notes that you write, the secret notes you write from people I'm not allowed to talk about. And it's like, boom, this is it. So I think there's a lot of little things that add up to something that's incrementally revolutionary.
It's interesting you mentioned the secret notes I write, because privacy's always been an important component of sort of what they're bringing to consumers. You feel like that continues to be the case with what they introduced yesterday?
I think that there's an assessment that goes on among younger people, which is that no matter what, they sell your data. That's what they do. They sell your data. They say, listen, your data it will be left with you. That means they sell your data. Typically to like bad guys who are hackers. But Apple doesn't do that. It's going to be residing on Apple, and I think that's a very big difference.
Some people say they're selling you down the river, I think is the phrase.
Those people are cynical. No, those are the people who said, and the Lilly Alzheimer's drug will definitely not pass. I mean, there are people who are wrong. I mean, this is like, they'd make a lot more money if they could sell your data. I mean, it would be great. Like you do Siri, and and you say, listen, wake me at 3:30, and they have like something that goes on at 3:30 that's a program, like CNBC UK.
Yeah. Or CNBC Europe, or CNBC Asia.
Yeah, it would come on because you talk CNBC, put on CNBC.
That said, you also made an important point, which is a lot of the
compute power is going to reside in the device, I guess. I mean, which is so. What are we going to get, and are we going to get more unveils from Apple when they introduce the next device when it comes to AI?
Well, I think that it's pretty clear that it's not just going to be OpenAI. I think it's self-evident that it's going to be Gemini too. There won't be a situation where they're going to say, "Listen, we're not going to let anybody else do it."
This was, I was referring to the Elon Musk tweet where he calls this a security violation. But
Samsung, here we come.
It was interesting, B of A with a note on Alphabet on how stock closed higher yesterday because in their view, some of these partnership details were not as robust as expected.
Exactly, and that's why I think that, and Tim confirmed to me, listen, we're going to have many more announcements about who is going to be our partner when it comes to Apple Intelligence, which, David, I think is why, right when it was announced, that they were going to go with OpenAI, Alphabet stock soared because they realized, well, it's not one or the other.
It's right. It's not. It's it leaves open the possibility.
But how about Elon? Is this bordering on petulance? Is it petulance?
Typical for Elon.
But is it?
Him. I mean, he comes after you.
I guess so.
Yeah.
Although it was great that he got community noted when he said Apple's not, quote, smart enough to build their own AI. Gemini is exactly what it is, their own AI.
Well, look, he's a little conceited. Do you think that he has enough? He says 90% of retail is going to vote for him. What do you think?
I think that for the compensation vote, which we're now 2 days away from, we're 2 days away from the annual meeting at Tesla, I think they're going to need a very large component of retail to both vote and vote in favor, given the institutional vote, when you count the index funds, which obviously are not unimportant, is not going to go his way. There's Elon continuing to sort of go on and talk about...
Right.
So, if they used XAI, I guess he would have been happy with that. Maybe he's trying to pave the way for them to use XAI for something down the road.
I mean, maybe he loses the vote, he goes to XAI, and he, Then he deals with, what do you get, Ericsson?
The compensation vote?
Yeah. Oh, Lucky G, SLG.
I'm sure we're going to talk a lot about Tesla and that vote between now and Thursday, but yeah, the question, if they were to lose the vote on the compensation award that was voted on in 2018 but revoked by a Delaware court, if they were to lose that, you raise interesting questions.
Right.
Would he do anything? Or would he just business as usual? It's not as though he doesn't have a lot of economics at stake here, Jim, to begin with, given his significant ownership already.
But he said over and over again that if he doesn't have a certain 25%, what's the point? That's not petulance, by the way. I understand you have a contract. How could they revote the contract?
Yeah.
But what is that? What is that?
What is what?
You look at different things.
I do look at different things.
Oh, he follows Elon Musk on this.
I do follow Elon, as millions of other people do. I don't know. I haven't heard from him lately. I'd like to. If he wants to do an interview prior to the vote, I'm happy to do that with him as well.
There you go.
Yeah.
Open invitation?
Yeah, open
Always.
invitation.
He knows he has an
open AI invitation. How about, come on,
we'll only do it on the X platform.
Can we just go
That's
back to
his
Apple
rule.
for a sec?
Thank you. Well, you took us away from Apple just to make
By the way, Jim, you mentioned Vision Pro a moment ago. Piece in the Times today, can Apple salvage the Vision Pro? As Kevin Roos says, his sits on the shelf collecting dust.
Yeah, I used to write obituaries for a living. And I did feel after reading the commentary that would have been one where I would have told people what home it's going to be at, and maybe if they want to, they can send well wishes to the family. I mean, it was horrible. I feel
it costs $3,500.
No, but it's going to go to China. It's going to go to a lot of other countries. I mean,
it's going to go there?
China, Hong Kong, Canada, France, UK. You can order it, pre-order at the end of the month.
It still costs $3,500.
I'm not writing the obituary.
I know you're not. You're all of our viewers know how you feel about it.
But
it has been underutilized as a tool in the enterprise to quote and
there was no Jensen Wong. There was no meeting with Jensen. You know how everyone, like yesterday before I interviewed Enrique Lores from HP, he sent me the obligatory picture of him with Jensen Wong. I mean, you have to. But there was no Jensen Wong there. You know that.
Yesterday.
Yeah.
No.
No Jensen Wong.
No.
No way.
You need a little Jensen if you're going to do a presentation.
You got to get right with Jensen.
Anything related to AI, Jensen's got to be around it.
No kidding.
even if he's just dancing in the background.
Doesn't matter.
No.
By the way, B of A did note that NVIDIA broke the trend, traded higher on the X date of a split.
I could
and
not
OPI
believe
today
that.
goes to 150.
Yeah, frankly, there was nothing in that, but that's okay. My work has shown that over and over again, there's 3 days of churn. 3 days of churn where you say, oh, geez, what happened? I guess that's the top, because people are willing, David, to sell 3 out of 10. That's been the pattern.
All right, Jim, but here we are, day 2, so to speak, of the reaction.
Yeah.
You look at all the analysts who weigh in. Announcement of Apple Intelligence was a bit disappointing relative to expectations. That's UBS. Barclays sees no surprise in little incremental news after a strong stock performance leading up to it. Morgan Stanley event delivered slightly ahead of that firm's expectations. Announced Apple Intelligence, Wells Fargo said, as a platform-level intro could stimulate a significant iPhone upgrade cycle.
And there it is.
It's hard, right?
No, look, I think everybody who has something below a 15 or below is thinking, well, you know what? Maybe it would be cool. I mean, let's say David were to go buy it, and he showed me a feature. It's something that I don't have, something like that. Then what would happen is that I would say, I got to get that. Well, how much does that cost? And you'll say, no, I got it free through T-Mobile. Like Siebert. I did that because you know that there's a Comcast downgrade. I figured you'd be able to go run with that.
Oh, I didn't even see that, Jim. And even if I had, it would be unknown.
Save it for the D.
Actually, I think we've been sufficiently critical of our parent company.
Save that for the 10.
I'm going to save that for the 11.
When we come back, more movers to get to this morning, including GM announcing this new $6 billion buyback. We'll talk some CPI ahead of the data in the morning. One more look here at the futures as the market continues to remain range-bound after yesterday's closing highs. Back in a moment. Markets on track for a lower open today, a day after record closes for the S&P and the NASDAQ, ahead of tomorrow's CPI number and the Fed decision. Jim, a lot of charts about narrowing breadth, lack of confirmation from the AD line.
Yes. I don't know if you saw that really interesting piece in Bank of America about value and whether
Sutton Myers piece, yes.
I thought that was a very strong piece, Renaissance Bank. And it does indicate that we could be in for some kind of revelatory action. I come back and say there's nothing new here. If anything, I think we could broaden out, in part because, like, I'm watching, let's say, first, I know that semis are overdone, but look at the broadening of semi. I mean, yesterday it was Lam, and it was KLA. I mean, now we're really, and then at the end of the day, Skyworks, and yet Skyworks isn't even, there isn't even anything that made me feel that Skyworks should go up. Nothing in Apple that was new. I think that there's this piece today about banks and oils and Renaissance. Wow, wouldn't that be something if the banks and oils move?
I know you mentioned, or maybe you were complaining about DuPont's price.
I mean, what do they have to do, Dan? Darn it. I mean, I look at DuPont. I mean, there's Ed Breen. He's Ed Breen.
Ed Breen.
We're not just talking about,
Ed
like,
Breen.
He didn't fall off a turnip truck.
No, he's still around, Ed Breen. He's been around a long time now.
Yeah, it's my age. Thanks for nothing.
And you've been around a long
Played
time.
against, he played for Council Rock. Now, let me tell you something.
Yes.
He is running the breakup.
Yes.
Like Tyco, he's running the break.
Yes.
The stock is unchanged since he announced the breakup. Do you think that makes sense?
I'm not sure, but I sense that you don't.
I don't at all.
No.
I think this is a steal.
So what explains that reaction? Is it just people haven't? Is there not a focus?
Okay, so let me focus on what
some of
David's
the
talking
parts.
about. You want idiocy? On Friday, I told club members, like, there are people who are saying it's a very narrow, that Moody's got a very narrow approval from the FDA.
Okay.
First of all, it wasn't approved from the FDA, so that was completely wrong. But second, it was the most wide approval possible. But that was an example of stupidity at work, which is allowed because the First Amendment, they really never had a problem with stupidity. Okay. And look at this. This stock is now up 35 points since all the stupid articles that appear on Friday. But you know what? Hey, DuPont, the action's stupid. Why do we have to accept that the action's ever right?
We don't.
No.
We're looking at there's DuPont again. We were looking at Lilly briefly.
Yeah, but you remember, I would come back from NVIDIA headquarters, and David would say, you know, Jim, I'm really tired of hearing about NVIDIA. Stock was what, 3?
Did I really say that? You
Oh, verisimilitude.
I mean, are you
Good morning, retail traders.
I never said that. What I might have been tired of is trying to understand what you were explaining when you kept talking about simulations and the ability to build the digital twin and all those things.
You did the arms akimbo thing.
And you would lose the arms akimbo. Virtually everybody in trying to understand what you were talking about. But I never said I'm tired of hearing you talk about NVIDIA. I could hear you talk about NVIDIA all day long,
Really?
Jim. Yeah.
You know, your mother told me that. Mother, I think his mother was like all over NVIDIA.
She was not, sadly. I wish. Yeah, I wouldn't.
Okay, enough of the barroom talk. What time is it? 8:18. Good morning, retail traders. Wishy-washy washboard Jim is in. Oh yeah. Oh mama, I'm excited. I'm almost out of breath. Hunter's Legal Counsel. That's exactly right. Yin yang. We were just kind of like the opposite. That's what made us so good. Good morning, Randy. Good morning, Michelle. Good morning, R. Realized Gain, Ricky. It's now 8:20. Today I'll be pulling out my Instapot and I'm going to use pineapple juice as the base and cook a chicken breast for my salad. Throw a little garlic in there. Elon Musk didn't have much to say good about Apple. We had a little pullback on it. It'd probably kept going if he didn't say nothing. It's their pump and dump. Then you got NVIDIA, got an upgrade again. That's their baby. That's the deviation channel. We can move that over here. SPY now's at the 200 right at open. So we could pull back a little bit or we could break out. We have an ascending triangle. So we could go ahead and break out. Oh yeah. Let's turn this blue. It's easier to see that way. That's blue too. Very good. We got, today's the first day of the Fed meeting. CPI data, this is why analysts say positive inflation trends ahead. Positive? There's nothing positive about inflation. I hate how it's killing the poor right now. And me. I mean, my grocery bill's up 100%, but I'm eating a little bit different too. It's like I went up and bought the best olive oil I could buy and the best this and salads more and buying the best fish. Doesn't log you in, what? What's going on? Them bastards. Did you hit the Schwab Ameritrade? Better get on the phone with them. I noticed the website's working better. Them fat cats are fucking with us. Yeah, I said it, YouTube. I got my green shirt on today. Now, we'll see what happens here. Roaring Kitty's had time to get a little settled down here. I got to make sure I can find these shirts again. Men's casual shirts. Light in the box. Just put that over here so I won't forget. Whoa. Squawk box. Samar, your thingamajigger's on. I got ahead and muted it. But you should still be able to hear me, right? Shamar? So we're going to see what kind of market we have today. How's my YouTube family doing? What kind of market we have today? Very good, Team Lux. Good morning, Georgia. Good morning, Fabian. Good morning, Ryan, Nate. What are we thinking about the SPY at open? Right now we got an ascending triangle. We have a snake breakout, pullback with an inverse head and shoulders. So we got reason probably we're going to go ahead and break that 200 today. Now, that's what I'm thinking. We got to break the 200, and if we break the 200 and we break this 534.46, we should bring it back up to these resistance levels. And that's a 5-day resistance on the 5-minute. So I think we're setting up in a Darvis box. We got an inverse head and shoulders here at 532.68 if we do decide to pull back at open. If that doesn't hold, I'm going to bring this support level up there to 531 on the SPY. But I think we're going to hold right here at 532.68 if we don't break this ascending triangle. Right now we're still staying in it, so we're going to squeeze it open. Something's going to happen. I think we got 1 minute left, so I'd be a little patient today. See if we break the 534.46. Now we got FOMAC starting today, the meeting. So we could have a low volume. We're definitely bullish. According to the Ready, Set, Go. We got the VWAP. So yes, getting ready to squeeze. We'll watch the volume here and see if we knife down, or there's a little bit of iffiness going on with the Fed, but I think it's all priced in. We've got a double bottom right on the bottom of this candle right here at 533.65. Let me, oh, I don't have my trading. Oh, shit. Okay. Didn't set up my trading platform. Okay, just watch it right here. Watch SPY right here. Might want to give it just a little bit more time. Fuck. Looking at the 12th, they're a little high for some reason. 537s or the 538s. If we can get to 537s to a decent price on the call. Get 10 of them. So we hit that support level. Don't rush nothing. These are the ones I'm watching right now, or I might move it up. If we can get the 535s cheaper, I'd rather work with that number. Yeah, that one's definitely got the... So we got two engulfing candles with an inverted hammer. It'd have been nice if that hammer would have stopped right there, but could have got 135. We'll probably stop right here at the 9, come back a little bit, and that's when we want to take the trade. Those are the ones I'm watching. So we got 3 white soldiers with an inverted hammer. I want to see it pull back a little bit. Now, 141. As long as you're under the 9, you're still applying pressure to it. There's 140. There's still some, these two candles are indecisive, but we definitely pulled back right to support. $1.37. Right about now. This is descending, but I'm going to give it a shot. Volume slow. We got positive bullish divergence. The market probably still wondering what the pow-pow is going to say. Tight stop. NVIDIA new highs. That's our #1 baby with an upgrade to boot. Break it. So I thought we had this nice little flag here, but we still got it. That one just kind of tweezered out. Oh. Somebody just sold a bunch. I don't know if the fat fingers are working with us today. Yeah, we're not moving up like we should be right here. NVIDIA double topped. Bitcoin, Dogecoin, or volatile? This is descending. This is a bearish flag right here. It was kind of bullish there for a second. We got a long leg doji right here. I'm going to hold on to it a little bit more here. We'll know in a couple minutes or sooner. AMD downgraded yesterday. We got 3 black crows on AMD. Amazon popped this morning. Oh, look at that Apple. That's what you get, Elon. That's a nice $5 bounce on Apple. And we got Meta double topping. It just broke out. We got boom, Meta. So we got 3 dojis here. On the SPY. Might have to get out of this thing. I'm going to give it just one more shot, a few more minutes here. Don't like how this tape's looking. Looks like somebody paying them off again. Don't like how this tape's looking. Huh. That's interesting. T, your mic might be on. Yeah, it's coming down a little bit more here. Wow, that was a big jump. They're definitely giving it to him right now. Tape's moving in big blocks. It just did it again right there. Well, I definitely got it going down to 531 if this doesn't hold. See, that's just an ugly looking tape, what they're doing there. What I mean by tape is the time in sales. These are big orders going through. Usually it don't stop and go like that, but now it is. Today it is. I'm going to add right here, I think. $102. If this doesn't hold, I'm going to stop out. Google's pulling back. Damn. This MCI to deal with this. Okay, I've got these at 137, 132. Might have to wiggle my way out of this one a little. $102. Gives me about 119. We got a tweezer bottom, that's one good sign. They were pumping the IWM Russell this morning. We got the QQQ, SPX, and SPY. The SPX and SPY look identical. The QQQ kind of resembles it, but it has a lower low. And the IWM on a trip of its own Now we did break the 9 on the IWM. The other ones we haven't broke the 9 yet. So I need 120 to break even on my SPY. AMD we got to kind of put on the back burner, but it could have a nice little run as it goes down. Amazon's got a snake with a breakout with a higher low. And Apple just looking very strong. Tony and Jim watch list. We got GME at 23 bucks. That idiot should have never got on the internet. He ruined his stock for now. Some people call him a genius. I don't think he's that bright. I got 20 bucks for GME. If this doesn't hold, this is my third support. 22.79. I probably upset a lot of people by calling him an idiot, but he is. Okay, 532.75 has to break. There's still got a lot of selling going on here. I'm looking at the size of the trades. If I start seeing some big green ones come in, but right now it's about a 50-50 on the lot size. There's 1,800 right there. You tell which way this thing's going by looking at the tape. Now if you pull this up on the 5-minute, I was directed that we had some crows. So back to the VWAP on the 5-minute. It's right at that trend line of the 1 minute. So let's go. Still a little bit of selling going on here, but the lots are smaller. There's 1,100 right there. That's a pretty good size one. Could have been a scalp from the bottom down here. This is called a megaphone pattern out of a snake. So if we break that, I think we'll go ahead and start to move back up. I got in way too soon. Apple new high. Elon says Apple's not smart enough to handle AI. TSM down $4. Tesla down Yeah, Tesla, he should have shut his mouth on that one. We've got a 1-2. Let's break the VWAP. Now I'm green. Go, baby. Show you 535. Well, that'd be pretty. This is an exit idea if you got the bottom for a scalp at the VWAP. Now, if we hold this here resistance level, I should have looked at SPX. Oh yeah, that's a nice. SMCI is reversing a little bit, mannequin. It's not ready yet. We're squeezing right now. SMCI. Look at Tesla calls here. I don't know. The video had 3 black crows. Is that flag? Incoming friend request. Boom, baby. Now we're going to see if this thing wants. We're probably still going to be in a tight sandwich here for a little bit with NVIDIA. But once it breaks, and we need SPY to break the VWAP. Come on, mannequin. Let's dig. Break it. Break it. If we break the VWAP, it's an easy shot to the 200. We got 3 white soldiers. So it could come back down again and find another new support. Maybe hold this right here. 532, 533 area. And that'll keep it very bullish. It won't pull back hardly any at all. If that happens, then we're definitely going to hit the 200. I should have grabbed some more at 110. I'd probably be out of the trade by now. Been in it way too long. Tesla curling up. Getting ready to squeeze on it. Mr. Frankenstein. Ah, missed it. Market's kind of doing one of these numbers. I know one thing, I need to stop worrying about hikes and cuts.
It's my money and I need it now!
It's my money and I need it now!
It's my money and I need it now! It's my money and I need it now!
It's your money. Use it when you need it.
Dial 1-800-555-5252 to Washboardjim. Break it. Exchange traded funds equity lower pre-market Tuesday on U.S. FOMC meeting begins. Small business optimism is up. Not mine. UN Security Council adopts U.S. drafted resolution supporting Biden's ceasefire proposal between Israel and Hamas. Tesla not squeezed yet. NVIDIA's trying to squeeze. We got a 1, 2, 3 on NVIDIA. This one kind of pulled back to the 200. Okay. Let's break this thing. I want to break it. There we go. I can get out here. I'm going to stay in it. 122. They gave me $40. It's just too iffy right now. Now, if we can gain respect above the VWAP, we got it made. And have a nice little couple candles up and get out of the trade. NVIDIA's at the 50 SMA on the 1 minute. SPX looking good. Riding D. What happened here? What is this? Oh, that's the 63 EMA. Oh, okay. Shit. I don't like that. I'm now up 100. 100 and some change. Let's see if we can get more out of it. YouTubers, if you're in this trade and you're green, think about profit. Because I'm not really sure. Oh, there we go. There we go. I just stuck my foot in my mouth, didn't I? We're ready. I'm tempted to scale out of this sucker. You already out? Good. I won't have that on my conscience. I kind of like that big candle though. That was kind of impressive. Somebody's got the nerve. Bond action at 1 p.m. Eastern time today. Taking profit on Apple. Come on, Jim. Everybody's counting on you here. Break it. 127. Yeah, it's just taking too long to break. If any of these traders feel like I do right now, I want to take what I can. Damn phone. always clean. This is a recorded message. Did you get this? Somebody's got my number. I'm getting fed up with it though. There we go. Take it to the river. If I get 135 out of these, that wouldn't be too bad. 133.86 sounds nice. 133.75. I'm going to take profit. What was that? Reply stop to opt out. What the hell is this? So I took some at 129. I still want to get this 200 SMA. NVIDIA's back down again. We got a 1, 2, 3 on NVIDIA. Funny how Tesla looks like it's still squeezing. we squeezed out of the 9 and the 21. Now we got the 9 and the 50. And it's respected the 9 for the last 15 minutes. And we're still bullish on this thing here, SPY. What's that doing on there? Come on, take it to the 200. 533.85. So I'm a little iffy. I want to make sure everybody's aware of that. I'm kind of on my toes with this stock right now. I still have 20. I sold 10. I got, there we go. Come on, bring it. Whoops, probably didn't need that clap. That was the thing we were worried about when we were kids, about the clap. And then AIDS started coming out. Yeah, it just kind of it wants to break a little bit. If we do break, we're going to hit that 200 and find some hard resistance. And I'm going to definitely get out of this trade. I should get out right now. I'd be up pretty nicely. Well, not real nicely, a couple $100. Plus what I've already sold, which was 100. If I can just get a little bit more, though, it'll make it 4. If you're in this trade, think about profit. There we go. $135. Now let's see what happens. I'm going to get out of this trade. That was a tough one. That was a tough one. That was a toughie. Kind of concerned about that. Dominican Republic ain't that bad. But when you got Russia and Cuba, I'm planning on vacation. I got my passport. But I'm more worried about the damn planes. Nailed the 200 right there. That was a tough one, I have to say. Being stuck in the trade and holding on and then buying the dip. I don't recommend that to anybody, especially if you're new and you I can't say the chart told me to get in the trade. I cannot say that. The second time, I was taking a guess. Yeah, everything taking a hit today. Nile at 447. That's a piece of crap. We got Zoom at 61. Microsoft looking good. Apple broke 200. All right, beta. Mycoids. We used to use oids on our names back in high school. Nickname people that. Samoids. GME broke out with 3 white soldiers. Definitely hit my lowest support today. That was my lowest support, and then I had 2025 for a strong buy. We got to break the 200 on the 1 hour, or the 21. We got a tweezer top, so it could pull back. If it goes to the next candle and we have the tweezer top. GME halted after that. After the crows. Or after that 200. SPX wants to break. That has an expansion pattern also. SPY back to 135. We got a 1, 2, 3 on the video. Not quite a 1, 2, 3 yet. That's a pretty big sell-off right there. Shit, 137 now on SPY. I'm afraid to log out now on toss. I can't wait to cook that chicken in pineapple juice. Apple new high. Look at the NVIDIA contracts. We got 19, 21, 44,000 at the 122. The 120s are at 251. 5 of them babies. We're at the 63 on the 1 hour, which is a good place to be. Let me draw a trend line on that. 61, 63. Meta came back up after that little pullback. Elon says Apple's not smart. Oh gosh. Oh, that's NVIDIA. Never mind. I thought that was my SPY. I'm going, what? That could have been a buy there, maybe. We hit 238. The 120 strike. The 534.53. Damn, SPY. Shit. What, did you come out okay, Ken? It was kind of trippy this morning. I didn't know what to expect. But we had these three black crows in that extending candle, and then we started to form that expansion pattern. I think we were good then. I knew something was kind of iffy before I got in the trade. I felt it in my gut. I should have waited a little bit before I bought them at 137, because that would have been a nice trade if I bought it all at 102. But I got in I got in on a descending flag. I should have known better, but it didn't look like that. We had these higher lows. I jumped in the trade. And then it traded a descending flag. That's descending. That means it's bearish. When that candle hit right there, I knew it was coming. We had a couple hopeful dojis right here, which kind of gave me, okay, it's just a little slight sell-off. But no, they came in here and market makers, tape's running a lot different now. And we're back at the resistance line, 534.46. So I'm going to get ready to go in there and make my lunch real fast. Let her go run the treadmill. Probably do that first.
Fascinating.
Got lucky on that one, Mike. Yep, after sitting in a loss, it took a gain. Very good. I don't think we're going to break out from here. Come back and consolidate this big run right here. That's a beautiful trade. Double top. Exit idea. $537s are only at 149, so that's still quite a bit of money. $280 I could have kept. More than that if I'd kept all 30. $152 now. I'm getting ready to cook me some. I'm really looking forward to this chicken. My life changed when I bought an Instapot. I got one for everybody in the family. IWM's at the 200, the QQQ. Jimmy called that one out. Said it looked kind of ready. Now you got new highs on the QQQ. Becky Quick said something this morning. Well, the market comes out red and then bounces back. It's what we've been seeing here for the last week. And that's a great opportunity to make good money. They don't want to give this bullishness up. It's a little bit too greedy. Dadgum, 160. That really pisses me off now. 162. Oh my. Damn. That'd been $1,000 if I'd kept all 30 of them. Okay, hyperventilate. Someone said 535. Overhead resistance here now. We're double top too. We got a double top, Mikey. We haven't had a classic commercial on it in a while, so this one goes out to Mikey. Life Cereal Mikey commercial.
What's this stuff? Some cereal. It's supposed to be good for you. Did you try it? I'm not gonna try it. You try it. I'm not gonna try it. Let's get Mikey. Yeah. He won't need it. He hates everything. He likes it. Hey, Mikey.
When you bring Life home, don't tell the kids it's one of those nutritional cereals you've been trying to get them to eat. You're the only one who has to know.
Mikey will try it. Mikey will try anything. Damn, Jim. I'm gonna cry. I can't tell you how I felt. I'm gonna tell you exactly how I felt when I was in that trade. I was saying, oh shit, man. I got people on YouTube watching me taking this trade. I got the room in here questioning why I took the trade. And I'm questioning myself because I have very, very low self-esteem. I've been punched in the head too many times. And Jimmy knew where resistance is. 535, 535.50. It had an ascending triangle. See, I was really, really bullish on this trade. Mentally. And I wish I'd have held on to it because, man, that'd been 900 extra bucks. When you have 30 of them. I mean, that's beautiful. There's 1,000. We've almost got 1,000 on it. Cigna CFO says cumulative effect of elevated interest rates, fiscal activity will lead to some level of disruption in the U.S. employment market. Ours 170. Me, I wouldn't want to hire anybody right now. In fact, I'm glad I don't have people working for me because I don't have to deal with them. It was Mannequin that said 535. Good call, buddy. Real good call. A few people got stopped out. But I'm 99.9% of the time when I stop out, I regret it. I really do. I really do. I don't want to encourage you to hold stocks that don't hold, but I'm just telling you, use it as a simple reminder. If you're in a trade and you stop out a lot, just keep an eye on it and see what happens. And that might encourage you to stay in a little longer on sometimes. Though we do have a big event this week, and we've been through this for 2 years of listening to I've never been so glued to listen to what the Fed has ever said in my entire trading career until Biden took office. Now it seems like it's all about the Fed. Before, the Fed didn't really have much to do with it, in my opinion, or I just didn't pay attention. Maybe if I did, I could have had better trades. But definitely, since Brandon's been in office, / Hillary and Obama and George Soros, I ought to pay a little bit more attention to it now. It's like never heard of quad witching before either, until I started trading options. When is quad witching coming up? June 21st. So in a couple weeks, we'll have quad witching. What is quad witching? Quad witching is an event of financial markets when 4 different sets of futures and options expire on the same day. Repositioning our portfolios. So we got the 200 SMA or the 63 right now for support levels on SPY. See how NVIDIA hit a double top off the 200 SMA? Called it down here. Boom to the 200. Now Apple, 2 reasons why it's running. Definitely the AI, which I don't think I'll ever have an Apple phone. And because Elon badmouthed Apple. Apple is their baby. They've been pumping Apple to break out. You don't mess around with the fat cats. And we broke out, we got the all-time high now for the year. So this thing could keep going to 210, 25, 210. I think they want 220 out of it. They needed a big event. They told us last night that the big event didn't happen. Yesterday. Now they kind of they said that wasn't what they wanted to hear. Now they say it is. So maybe they're trying to get that price down a little bit lower. Three Black Crows on the SPY. 5 minute or 1 minute? Oh yeah, 1 minute. I'm gonna give it a little bit more time. We had too good of a run. Let's wait for the 200. $200 SMA on the 1 minute. Well, thank you, Mannequin. Very nice words to say. I'm gonna go shut my air off and get my crock pot ready. And we'll see how tender this chicken comes out. Oh boy. The SPX landed off the 51 EMA. We used to trade that one a lot. The SPY came close to the 63. Now we got a head and shoulders. Wall Street holds breath after record close for Fed decision. Hamas welcomes UN Security Council resolution for Gaza ceasefire. I still say don't stop the war until they're all dead. Hamas. If you want to stand by him, go for it. Oracle is down today. $12.12. Dadgum, Georgia. You're on fire.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shore, Director of Trading Education, Prosper Trading Academy. Great to see you both. Thank you for being here. So, Mike, before we start on Lululemon and some of the other names, just give us a big picture. I mean, of course, we have Fed and CPI tomorrow. We've been hitting some new highs throughout last week, but been pulling back a bit, too, the last couple of days. Some of your thoughts?
Yeah, I'm with you on that. It's bullish and it feels toppy. So I think the underlying current is still bullish. It is increasingly difficult to keep buying new highs, and so I would much rather be in the camp of the pullback buy. But that all changes with a if we do get a cooler CPI and the Fed wants to go with that, trying to keep pace with some of our friends over on the other side of the ocean and get more on the rate cutting, then I think that we do have some more upside. But I think I would feel more comfortable on a pullback. So that's kind of where I am. That it's hard to buy and it's hard to sell.
Yeah. Redburn this morning, Redburn Atlantic adjusts the price target on Lululemon down below $300 from.
He's got his guitars by him.
It to $299.
See that guy got his guitars by him? An acoustic and electric. Both probably are electric. That's a nice one right there. Can't get the name of it. Mine's Martin.
A super aggressive upside play, but I do like the upside more than the downside.
And a Martin.
Yeah, and look, I mean, to your point, Argus has a 390 target. I read the Redburn one because that was the most recent, and it was from today. But to your point, Argus has a 390 target that came down from 468, but still Bernstein maintained a market performance and has its target, which it raised to 382. So they are seeing some upside potential, and you like this brand name. Let's hear what
We're seeing upside on Lulu.
Ben.
Yeah, I like the idea, Nicole, of looking for some upside potential here with a not very aggressive approach, because we are seeing a bit of downward momentum, short-term weakness, and a little bit of trend lower as we take a look here. First and foremost at those short-term charts, 5-minute candle charts, and then we'll get into that longer, bigger picture type time frame. But here you can see some weakness. So we are still under pressure right now. No indication that this stock's reversed some of that downward momentum that we have been seeing. We've got a pretty well-defined trend here where top left corner of the screen, we're going back to, we're talking end of last week, we were up around 350, and we did sell off after that nice pop we saw in reaction to earnings most recently, basically into the end of last week and to begin this week. We've been sideways, kind of consolidating around this 322 level, testing the lower extreme thereof, but until we get above 334 right now, still in a bit of a downward trending type pattern, a bearish pattern playing out here. 5-minute candle charts exhibiting some weakness and a similar pattern as we add a little bit of time on. This is the move we just looked at, right? That run up we saw in reaction to earnings and then the sell-off that we saw that ensued since Thursday, Friday, and how we're just kind of accepting this lower level. Let's take a step back here, looking at the 4-hour candle chart now. So we've added quite a bit of time on. We're going back to, again, a similar
pattern when the stock was trading up above 470, and you can see the 3-4 areas of consolidation now that have formed at lower and lower levels. Now, this earnings event kind of threw things a little bit into a bit of a spiral here higher, but you can see how we were unable to take out with conviction that 350 level. So again, as you're forming these areas of balance at lower and lower levels, you're constantly referencing that prior area to see if that trend continues lower. In this case, it has. Nicole, one more time frame here. Let me just show you what's going on with that bigger picture, and this is why I think that could be stacking up for a longer-term buy opportunity. Some of that short-term weakness, a reason, as Mike said, to not be as aggressive, but looking for some upside potential, because we're in a well-defined trend up off that 2017 low. Stock was trading around 60, briefly above 516, if you remember, to begin the year, but currently in this range that we've been forming, again, right around 400, testing the lower extremes thereof. A failed attempt here at this lower extreme opens up a door for a retest to 400. Get above 400, we could see those highs again, Nicole.
All right, thank you for all of that. So, it had that brief move in the beginning of the year, as you were noting. Mike, we want to hear more about your trade.
Yeah, so what I liked is we did see last week spike well above its 20-day moving average. So essentially a breakout over the monthly trend, and it's holding there. So, but that monthly trend is still kind of down, but it's holding. So I like a grinding type of play here. So just the 330 call calendar. So this would be for regular June versus regular July, and then so the 330 call calendar for right now, it should be trading somewhere in the neighborhood for about $4.75. So I do like that. Implied vol is not especially high, so Vega is not going to be that big of an issue. If anything, it might help us a little bit on a rally. And so just more of the downside is over than an overly bullish breakout.
Right, okay. All right, thank you for all of that. Let's get to your next one.
Thank you for all that.
Celsius. We often have John Feely on the show with us, the CEO. They have had great expansion with their contract with Pepsi and distribution. Where do you think it's headed, though? I'm going to pull up the chart. I know it was doing really well, but then started to pull back. Yeah, there it is. Yeah. So it went from 99, now it's at 63.
Yeah, so what I was really looking at that this morning before the open was it for it to hold its 200-day moving average. Right now, it's not. That 200-day moving average is somewhere in the neighborhood of 65.80, and I would need to get back above there. But if we do get the sellers to get exhausted here, I do like the upside. This is it's a riskier trade, but we have seen when this thing does take off, it takes off with a lot of strength.
Black Crows, you made
it. That to the upside if we get back above that 200-day moving average.
All right.
I'm gonna go do my 10 minutes on the treadmill. That 3.7 miles an hour.
Well, another good example.
That's a half a mile
lower short
in 8
term,
minutes.
Could be stacking up for a longer-term buy opportunity. So let's take a look. First and foremost, at a 5-minute candle chart, work our way from more granular up into that longer-term time frame, and I'll pull up that 200 as Mike just pointed to. 4 areas, of consolidation that formed at lower and lower levels are currently balancing around the $64 level, Nicole. This is a 5-minute candle chart, so tough to trade this time frame, but the bears want to see it hold below 67. The bulls want to see us take that level out. That's that first indication of, again, a real turnaround coming into play. You can see it appear on the more short term, but you're going to also see on the hourly candle chart here, we've got a bit of a more intermediate trend to the downside as well that's playing out. You can also see in this time frame, it appears if we've gone a bit vertical to the downside, seeking value lower, possibly about to balance here at this lower level, but you can see again no rejection of this lows right now, no rejection of the trend we've seen basically
nice call
since 95,
on them crows are
just below that $100 level again to recent lows that we saw. But take a look, because again, as mentioned, in a similar situation as our last example, could be stacking up for a longer term buy opportunity, because we're in a trend higher in a balance that's forming around 100, and we know that these lower extreme tests, if they fail, if we kind of start to work our way off the lower extreme, if we see that 5-minute turnaround, if we see the hourly candles start to exhibit some strength and take out key levels that were established on the way down, we could get a significant turnaround here. This longer-term trend remains intact.
Significant.
Above 60, again, not what the bulls want to see in terms of this double top, Nicole, but not necessarily all-out loss at this point either. One more chart for you. I've got a 200-day moving average is Mike just pointed to the fact that we just took it out. So you can see again, speaking of not what the bulls wanted to see, RSI is coming off a bit as well, starting to get into oversold territory. But here, again, the question is, do we reverse this? We're at a key area right now. The bulls are going to be looking to flex some muscle at this point if they are still in control.
Okay.
Agree.
Final thoughts, Mike?
I totally agree. And in this one, I would play it with a straight vertical spread because of the more binary nature that this tends to move in. So, you know, a calendar, you can actually get hurt on a bullish calendar if you go too far above your strikes. So,
all right. Next up, we have Tom Siebel on pretty regularly. Tom, the CEO of C3 AI, has been a fun one to watch in the middle of the whole AI craze. It came off the low of $20. Right now it's at $30.81. Where do you think this one is headed?
So here I'm looking for a swing breakout, which is a breakout on the hourly candle. We actually did get above that this morning. 31.50 was my trigger price. It did rally and then it pulled back. So it's technically, I would wait for 31.5. But if we do get above 31.5, I like the upside there too, and I would play that with a diagonal.
Right, understood. Okay, so that's his plan. Let's take a look at the technicals. Ben.
Absolutely, 31.5, 32, that's the area I'm keeping an eye on as well. Through that, we do build some momentum to the upside, but we're building some into it, so it sort of lends itself to that idea that we could see some follow through here. Nicole, I wanted to start off again with a more granular time frame, work our way up into the bigger picture. You could see a couple areas of consolidation that my eye was drawn to over the last couple weeks. Stock was trading down around 23.50, and you can see the rally we've seen. Again, a nice move up back to 31.50. Look at this, how we're balancing right around this $30 level. You can see the consolidation. You can see the transition from the two-phase. Not as easily identifiable for the most part into the end of a couple weeks ago. Last week, more that rotational sideways consolidation. Failed attempt to break out here. Looks like just a little bit of range extension, so could retest 30, but let's continue to focus here a little bit more on these bigger picture time frames, move away from the 5. I wanted to show you how, again, just going back and adding a little time on, stock rallied off that $20 level, if you remember, all the way up to those highs we just saw. It was actually around 2020. That was back in the middle of April. And again, a nice trend up here with value, which is moving higher. Speaking of value moving higher, here you can see on a longer term chart and that $32 level, the significance associated with it. Look, this is exactly what those last two stocks that we just talked about are looking to do on this longer term. Find a bit of a base, work their way through the middle of the range that's been established here, and then again, what does that do? Open up a door for retest from some of these highs that we've established here within this range. So again, building momentum into a key area right now. 32, built some strength through that, some follow through, and it's off to the races here. The bulls remain in control, it appears. Now it gives them a real opportunity to show that they've got some buying power here, Nicole.
Yeah, look, you're on the same page because Mike said he's looking for that breakout. Final thoughts, Mike?
Yeah, so with implied vol, fair to a little bit on the cheap side. I like the diagonal idea. That way that you embed yourself into a little bit of intrinsic value into that spread, but also taking advantage of, if we do get a big move, most likely things will move quickly to the upside. So I like that. So targeting the 34 level here on this one.
All right. Mike, it's great to see you. And Ben, great to see you as well. Ben, always great on the charts and giving us all those bullet points. Mike, a popular man who's going to jam those guitars later, after hours. We wish we could hear you play some of those. Mike, nice to see you. Mike Shore, Prosper Trading Academy. Ben Lichtenstein, thank you both so much. Coming up next, we're going to spotlight your retirement and what you should be doing to set yourself up for the long term. Trading 360, we'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. and sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
All of a sudden they're taking barriers, they're creating guardrails, they're saying, okay, you have access to your data, let's have some governance guardrails so you're a company and you can implement these type of models. So I really think it's a bigger question than infrastructure for the grid. It's infrastructure for AI altogether, and in what capacity.
Tune in this week, 4:30 p.m. for the latest episode of Market Overtime. Jessica Inskip of Options Play shares her insights on AI investing, including why energy companies are poised to benefit from the increase in AI technology. Market Overtime every day this week here on Schwab Network. And welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We want to spotlight right here your retirement, and we bring in Ed Slott, founder of IRAHelp.com and author of The Retirement Time Bomb Ticks Louder. Thank you for being with us. You know, when I look at this, how to avoid the unnecessary tax landmines, diffuse the latest threats to your retirement savings, just to ignite financial freedom. What are some of the ideas that you really hit on this book?
Well, the big here, we're at the stock market here.
Yeah.
Unlike losses in the stock market, when you lose money to taxes, that never recovers.
Right.
And many people are losing excessive money to taxes when they take their money out of their IRAs or 401ks. Remember, that money has not yet been taxed, but it will be at some future date, maybe at a higher balance, maybe at a higher rate, just when you need it the most in retirement. And that, to me, is a problem. That's why I call the book The Retirement Savings Time Bomb Ticks Louder.
Yeah.
I'm worried about future higher taxes on higher balances. I look at the debt levels. Maybe Congress is going to do something about it, maybe not. But who's going to pay the bill? The whole country is running on a credit card. It's going to be the people with the most money that has not yet been taxed. Those people sitting with millions, some people, in 401ks and IRAs. So the book outlines strategies to take now to move your money to tax-free territory.
Yeah, I mean, you got to do that at some point. The whole premise behind it is that people are at a higher income tax bracket in their 30s and 40s and 50s, and then when they're older, maybe they're in a better tax bracket, and that's why they defer
that's
those
my
taxes.
number one myth.
That's the myth?
That's the myth. Everybody says that, but why should I bother with this? I'll be in a lower tax bracket, you know, when I'm retired, but they forget their IRA continues to grow. And remember, at some point...
So they're not going to be in a higher tax bracket?
Probably not, because at some point...
a lower bracket?
I know what you meant.
Yeah.
At some point, this money has to come out.
Yeah.
And it's growing. It's called required minimum distributions. Then you're on what I call the government plan. You want to control your tax rates and get it out now, and you have two great factors working in your favor. Number one, we're at the lowest tax rate you'll ever see in your lifetime. In fact, on page 28 of that book, I give you the entire history
of taxes from 1913 to now. We're in low rates. We have inflation, which is generally bad because things cost more.
Yeah.
But when it comes to taxes, it's great because the brackets expand. So the whole point, get your money out now while taxes are on sale, and you'll always have more later on.
And plus, there's more clarity too. You know what you really have. You don't have, there's no guesswork, and that's always sort of my thing with my finances personally. I mean, I think that I don't know exactly what I have. And
Well,
I
we
wish
know
I
what the
knew
rates
exactly.
are today.
You know,
can control your tax rates. You choose the rate you want to
Exactly.
pay.
I understand what you're saying. So at this point now, when you talk about some getting those taxes, either there's tax deferred and then there's like Roth IRAs.
My
where you're
favorite, the
getting,
best
Roth
single,
IRA.
everybody.
So that's what I was going to ask you. What tools are you using? Clearly, Roth IRA is one. So tell me about that.
Roth IRA is the greatest single account ever created. I mean, it's just fantastic because the money grows tax-free, income tax-free for the rest of your life. You never have to take it out and beyond, even 10 years to your beneficiaries. But there's other ways to get the money out. Obviously, I say it's the greatest account. The only question is, how much are you willing to pay to get it? And if rates are on sale, get it now. Don't put it off. The mistake people make is putting it off, saying, oh, I don't want to pay taxes now. It's not if, but when the bill is coming due. You need to take advantage of today's low rates. So Roth IRAs is one way, because you're moving from a taxable account to tax-free territory. Tax-free is always better. You never have to share that money with the government ever again, and that's what people like. I call it tax freedom. You know, when you do that, it's like tax insurance. You're insuring against the uncertainty of what future higher taxes can do to your standard of living in retirement.
And when you're making these retirement plans, people have different risk appetite, right? For those that want a little more risk, what do you suggest to them?
Well, I'm not an investment guy. The best investment you can make is in taxes. People miss that. Yeah, there's stocks and bonds, all the bells and whistles over here. But you know, the old comedian Henny Youngman years ago said, I'm putting all my money into taxes, the only thing sure to go up.
Right? Yeah, taxes and death. Right, where goes the two sure things?
Right. In other words, buy off the taxes now. That's your best investment. You can put it in tax-free vehicles like Roth IRAs, even permanent life insurance, anything that grows tax-free.
Right. Yeah. Permanent life insurance. That's another one. What about annuities when people talk about that?
Well, that's an investment. You can have that in your retirement account. In fact, I have that in my own Roth IRA because the only thing better, annuities give you guaranteed income for life.
Right.
The only thing better than guaranteed income for life is what I have. Guaranteed tax-free income for life because I have the annuities in my Roth IRA. So if I need a stream of income in retirement, I take it from the Roth, guaranteed and tax-free. You'll always end up with more money.
Yeah, the retirement savings time bomb ticks louder. What is it about this time bomb? Why did you feel the need to warn people? I love an accountant with a sense of humor, indispensable guide. Ed proves himself once again. A lot of really nice comments on the back. But why did you feel you had to warn people?
Well,
what kind of experiences or color can you add to this conversation?
As
I want to hear.
the debt level, 34 trillion. I used to say it was a phone number, but now it's more than a phone number, even with the area code and the one. I mean, the numbers, the whole country is running on a credit card. I'm worried about that. Maybe Congress will do something about it or not, but if they decide to balance the books like any other business would, I would think they're going to raise taxes, and the last thing you want to be is in a taxable account when rates get jacked up. Plus, if you do nothing, as I said before, your account is going to grow, and that will push you into higher brackets even if rates don't go up. But rates are already scheduled to go up right now after 2025. So you only have a 2-year window to start trimming down these taxable accounts.
Just quickly, without going with one or the other on the parties, just as sort of a bipartisan response, do you feel like one's better, one of the candidates or one side seems better? How will you do your tax planning based on the Democrats or the Republicans if they are to be in office?
You don't even have to worry about that. You can take action now regardless of who's in office. Once you have tax freedom, once you have your money in tax-free territory, you're in a pretty good shape. And Congress, Republican or Democrat, they love, I'm telling you a secret now, And you know what Ben Franklin said about secrets? 3 people can keep a secret if 2 of them are dead.
Right,
But
there
I'm
you
telling
go.
you a secret now. Congress loves Roth IRAs because they don't look long term. They love the money that comes in, the
Sure,
revenue.
sure.
Take advantage of their short-sightedness.
It does give you financial freedom because I really think that, you know, you will pay the taxes, so that's the money. Whatever it is,
But
you
it's
know.
low now. It's on sale.
Yeah,
Everybody likes
yeah.
a sale. The difference
Okay.
with a sale in the store, the thing that's on sale in the store,
Yeah.
sorry to say, you don't actually have to buy it. With
Okay.
taxes, you do. It's
Right.
not if, but when. So
Yeah.
get it on sale.
All right.
And move your money from forever tax to never tax. You'll always end up with more money and less tax.
Ed, you're great. We love having you on the show.
Thank you.
So much. And that myth, I mean, we all always said, you know, defer the taxes till later, you'll be in a lower bracket, but no, not necessarily, not if you have some good money there. Ed Slott, thank you so much. Founder of IRAhelp.com, author of The Retirement Time Bomb Ticks Louder. You can get that. And we thank you, Ed. Thank you so much. Coming up next, the Disruptors. George Sillis is standing by. He's going to take a look at Trade Desk. Trade Desk, after Piper Sandler continues to view this company as a top large cap idea. He'll give us all the details and an example trade as well. Coming up.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Time to look at developing stories. And Caroline Woods is with us, senior markets correspondent here on Schwab Network. Oracle is due out after the close. We want to know what to expect, but it has been a winner. I think yesterday I saw new highs. I didn't double check it today, but it's been really good.
Shares are up about 6% in June alone. That being said, they're under a little bit of pressure today heading into this report, down about 0.4%, but overall up almost 18% so far in 2024. Oracle, of course, has been taking advantage of the AI demand and the AI boom to really boost its cloud computing business. It's recently announced partnerships with companies like Microsoft and Palantir, so we'll learn more about that from the earnings call, I'm sure. This has been a much friendlier environment, though, especially this earnings season, to hardware stocks when it comes to the AI play versus software stocks, so we'll see how that bodes for Oracle. You can say, you know, CRM, Salesforce, Workday, MongoDB, all disappointed with earnings and were punished for it. That being said, Oracle has been outperforming all of those names. In terms of the actual numbers that we're looking for the fourth quarter, adjusted EPS of $1.64, that would actually be lower than the year ago period's $1.67. Revenue, though, is expected to rise about 5% to $14.46 billion. And we'll also be looking for sustained momentum in that cloud infrastructure revenue. That's where they saw really impressive growth when they reported in Q3.
Yeah.
Let's see if that can be sustained. In Q3, they also talked about demand for their Gen 2 AI infrastructure substantially exceeding supply, despite the fact that they were very rapidly opening new and cloud data centers. So let's see what that means for Oracle's remaining performance obligations. Those were at record highs in Q3. In terms of the outlook, Safra Katz has said the company is committed to hitting that $65 billion in sales by fiscal 2026. So we'll be looking to see if they kind of maintain that or if they even boost that number. And then some of the shorter term outlook will be important as well. But as I said, Oracle share is under pressure today, only a little bit though, down about 0.3%.
Yeah, and I see the high was in March. It was 132.77. Year to date, it's a winner. It's up about 18%, but not hitting new highs. Well, let's see how the earnings go. Thank you, Caroline Woods. Great to see you. Thank you. Time now for our disruptors. George Sillis is standing by, senior markets correspondent here, taking a look at Trade Desk. A name you've looked at a lot of times, but today Piper Sandler gets on board and says that it remains the top large cap idea. I want to hear more about this, George.
Yeah, I mean, if you look at the stock, Nicole, we've talked about this name as one of the leaders when it comes down to targeted display ad technologies. Essentially, Trade Desk is one of the leaders, if not the leader, in essentially buying advertising auction place for digital ad campaigns. And they've been growing their connected TV market share quite aggressively over the past few years. And in fact, one of the things that Piper Sandler denoted when they actually increased their price target to $110, and they do maintain an outperform rating on this name, is one of the things I noticed is Roku is actually now
200 SMA, baby.
In fact, Roku essentially was one of the competitors in terms of the display ad technology based marketplace that Roku offers within its platform. So the other thing is partnerships are quite extensive and growing for Trade Desk, including Disney and Comcast. And even if you look at their earnings and sales for last quarter when they reported back in May, on the 10th of May, they increased their earnings by about 49% year over year. Sales were higher by 28%. And if you look at the aspects of guidance, and this is what Piper Sandler also denotes, they're actually seeing in the next couple of years 20+% revenue growth. And in fact, if you look at the analyst estimates for earnings growth, they're quite actually modest at around 23%. So if they can actually increase their earnings growth profile going forward just slightly, that could certainly cause the stock to continue the upside. Lastly, if you consider the Trade Desk, one of the things I've noticed is out of the group, which includes companies like Roku and Perion Networks, for instance, Trade Desk has actually considerably outperformed some of the competitors out there, and I think that speaks to the market share that Trade Desk is growing in, especially YouTube. In fact, Google is a mainstay partner for them. They're the backbone of all the display ad technologies that are happening in real time. In other words, there's a real-time auction going on behind the scenes for YouTube placement ad.
So we got, I didn't take the trade. I'm going to go in there and cook. But notice where the RSI is and the 200 SMA. I think we can come down more. But kudos for Mannequin for calling out that resistance. I thought I was going to see a Hunter Pie. I wonder if there's a cartoon of Hunter Pie. Anybody ever had Hunter Pie before? Oh, Budden. They knew who I was talking about. No, I don't see any Hunter Pie. I will not bail him out. I will not pardon my son, he says. Let's see if he falls back on that lie.
Flexibility to break even if you're assigned shares at $90 to $87.50. So that's about a 6% give back from this current price around 93 to break even. So it's a flexible trade. It allows us to capture yield as the stock goes higher, but it also gives us a pullback to about 87.5 to break even.
Thank you, George Sillis. It's great to see you. Really appreciate it. Good look there at Trade Desk today. Our disruptor every day. Coming up next, it's time for our 360 round. We'll be looking at Apple following the big announcements of the Worldwide Developers Conference, all the details there. Of course, all the reaction pertaining to Elon Musk saying he could ban iPhone devices from his company. He's not happy about Apple's OpenAI deal. Trading 360 will be right back with our panel.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. It's available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, and we're talking all about Apple, which has hit new highs, crossed 205 today. The Worldwide Developers Conference was yesterday. The big talk is all about the deal that it's made with OpenAI and the strengthening position that OpenAI has, but there's also some underlying, stuff happening with Elon Musk. So let's get to all things here. Angelo Zeno's with us, Senior Equity Analyst at CFRA Research, where you have a buy rating, and I want to hear why. Quint Tatro, Managing Director of Jewel Financial, has a lot to say as well. But Angelo, I'll start with you. You have this buy rating across 205. Was this enough to give you some good confidence in the stock going forward, and what's your target, Angelo? Tell me your thoughts.
Yeah, no, I think so. So you kind of look at how the momentum of the stock itself has changed here, right, over the last kind of 6 weeks or so. I mean, the stock started the year down about 14% or so, ran about 20% kind of into the event yesterday. And you can kind of see the move here today. But I think it kind of is showing you the enthusiasm in terms of their ability now to potentially kind of not only meet some of the expectations that the street has in the second half of this year and into 2025, but also exceed those expectations, and clearly reversing kind of a negative revenue trend of 5 of the last 6 quarters. So we kind of look at, looking ahead here, our view is you're going to see some pretty good iPhone cycles here as far as the 16 is concerned, as well as the 17 is concerned next fall. So you're getting better visibility. A lot of that, of course, has to do with kind of greater AI capabilities that we think is going to be more evolutionary in nature rather than kind of some super cycle that you're going to see later this year. But overall, I think kind of the main point is Apple had a pretty good event yesterday, and throwing more AI capabilities across their ecosystem is going to be a huge kind of boon for those developers out there to create some great content here over the next couple of years, further adding value to that ecosystem on both the hardware side of things and the services side of things.
Yeah. Right, so your point here is that if you want those AI capabilities or some of the upgrades, you've got to upgrade to the newest phones, like above, I guess, a 15 to get that. Is that the point, Angelo, and that, at least for the iPhone cycle, that this will be evolutionary with the AI, and that'll help the iPhone cycle? Is that right, Angelo?
Right, I mean, unless you have the iPhone 15, which most don't, yes, that's absolutely correct.
Right. 12, the 12 Pro Max, right here. All right, I need a new one. Quint, your thoughts?
Yeah, thanks for having me, Nicole. Always great to see you. So, I mean, it's hard to argue with the price action. The price action today is outstanding in Apple, breaking out to all-time highs. I'm actually a little surprised it doesn't have bigger pin action across the market as a whole, but it's certainly saving the indices, I think, from a relatively weak day that we were coming into. But nonetheless, I like the idea that we now, as consumers, are going to really see how this integrates with our daily lives. I think that's the power of what's happening here with the integration of ChatGPT on their platform. We're not quite sure how this is going to, evolve into more revenue, other than the product sales, as Angelo said. I mean, that is a big deal if people want to upgrade and do that. But I think the adoption rate might take a little longer than people are anticipating. But nonetheless, it does tell us that this is here to stay. We all knew that. But this is how it's going to impact our lives. And as Angelo said, one of the most exciting things for me as a consumer is that you're going to have people, entrepreneurs, that are going to develop apps that integrate with ChatGPT, OpenAI, and that are available on the App Store. And that'll probably be cross-platform, other phones as well. That's very interesting and very exciting. As far as the stock goes, people hate when I say this, but I just am not a buyer of Apple here. It's too rich for me, and I always come back to the fundamentals. It's trading around 25 times forward. If they hit the growth rates that they're at right now, they could be revised upwards, but we're talking about high single digits. And they've levered up their balance sheet, which I'm just never a fan of. $60 billion in cash, that's strong. But I'm not a buyer of the name. I think there's better names out there.
Yeah. Look, you said some of the clients have been long. Is this where you would say take some profits, Quint?
Yeah, it's difficult. We have people that have been long this name for, a decade or more, so it's hard to book the tax gains here. We'll probably wait till the end of the year and see if we have any laggards and then offset that just from a tax management perspective.
Right, a big part of how to do your portfolio, no doubt. Angelo, what's your price target? I don't know if I missed it.
No, I forgot to mention it. So our 12-month target is $210. So you're getting there. You're definitely getting there. It's based on a P multiple of about 29 times our 25 estimate.
Right. At 210, should people take some profits there? I mean, you don't see it like breaking out even further, right?
It's tough, right? I mean, we tend to be longer-term, investors in this, or we tend to have a longer-term approach. So as you kind of go into the second half of the calendar year, I actually think investors are going to be more looking into 2026 expectations. People tend to be very forward-looking when it comes to this name. So as far as kind of the improved visibility we talked about in terms of the iPhone cycle, as well as new hardware devices that are going to likely pop up in the coming years because of this shift towards AI, we do think there is more upside potentially, from the $210 target price we have.
Yeah. Yeah, and I have 10 seconds, literally 10 seconds, Quint. Would you say at least half of the Mag 7 are names you would buy today, or no? And I don't want details.
Yeah, there's a few that I would buy here for sure that are very attractive from a fundamental, from a price action, etc. Apple, unfortunately, is just not one of those.
Okay, Angelo Zeno, CFRA, Quint Tatro of Jewel Financial. Great to see you both, Angelo and Quint. Thank you. Thank you, friends, for joining me here on Trading 360. I'm Nicole Petalides. I'll see you at 2 o'clock. Download our free Schwab Network app in the Apple App Store, 24/7, schwabnetwork.com. I'll see you at 2 p.m. for the Watch List. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies in Oracle, which is up about 17% so far this year into their earnings after the close, and Salesforce, which has fallen about 8% so far this year after posting weak guidance on earnings last month. And like Folio, break down consumer sentiment data on Casey's General Stores, which is up nearly 50% over the last 12 months into their earnings. Now let's take a look at the major indices, which are off of session lows, but also off of session highs. We're weaker across the board. S&P 500 down 0.3%. The Dow off over 220 points, or 0.6%. The Nasdaq was positive earlier, now slightly negative, off just more than 0.1%. The Russell 2000, the small caps leading to the downside, down over 0.8%. Let me break down the market action. Let's bring in my co-host, and that's Kevin Hinks. Kevin, this is, I think, a story of two different markets here. We've got Apple hitting all-time highs, but then the overall market's weak after. I mean, people, you forget that the S&P 500 and NASDAQ 100 both settled at record highs yesterday.
The heat map on the Dow is interesting.
Mm-hmm.
Apple's a big green and everything else is red on the whole board. So we're dealing with a bunch of individual stories, right? Boeing's deliveries were very weak. Apple, after yesterday's news, all of a sudden jumped. A bunch of people raised price targets. There's a lot of analyst activity in Apple, and Apple is strong now. trading at new all-time highs, but the market is down with Apple trading at all-time highs. That's kind of interesting. What do you make of it? Well, frankly, the market is coming up to two pretty significant events in the next. There you see the Dow, Apple, and everything else on the red, the red side. So if you look at it, we're coming up to some pretty significant CPI and Fed data, and frankly, we're sitting up at all-time highs.
Yeah, that means the risk may be to the downside.
Not surprising that we'd be a little nervous up here and maybe taking something off the table. So not the biggest surprise in the world. Could it reverse again tomorrow? Well, we're about 26 hours away from Jerome Powell probably doing something that if he does it normally, the markets like what he delivers to the market.
Yeah.
So how do we do that? I don't know. It seems like it's kind of a dry powder day, but we're soft, but we're not down big. We're just a little heavy here, sitting at all-time highs.
Yeah.
Right.
Hey, banks are down today, lending a little bit of headwind to the overall market. For the month so far, in the first 7 days of trading, banks are down anywhere from 3 to 5%, and that's J.P. Morgan, Bank of America, Wells, and some others in there. So maybe some weakness in financials. But let's bring in our next guest. That's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, wanted to get your take here. I just kind of mentioned it to Kev. The risk for the overall market sitting just below all-time highs might be to the downside, but with Fed Chair Powell, he's always pretty dovish in these commentaries.
Yeah, and I don't think there's been enough in the data for him to really change the narrative that much. I mean, we were starting to see, some of the slack in the labor market. Guys, I know it's not as interesting to talk about the market when we've got this mixed bag. I don't want to say trendless because the growth does look solid. It's above trend, but it's just like there's not enough of consecutive data points either on the inflationary side or the slack in the labor market that's coming up. If you look at the GDP Now forecast over the last month, it was 4%, went all the way down to 1.8%. Now we're back up to 3.1%. If you look at the initial claims in the JOLTS, we started to see some slack there that's developing, and then you get the non-farm payrolls report last Friday. So I just don't think there's enough for him to really change the narrative that much. I mean, yields are hanging around this, on the 10-year, 4.4%, 4.885% on the 2-year. It seems like in the absence of any, negative news that the path of resistance is, to kind of melt a little bit higher. But you're right, with valuation where it is, the technicals, look, this is an AI and chip-driven tech market. If you look at the technicals on the NASDAQ, composite or the NASDAQ 100, and then by default the S&P 500, which is also hitting fresh all-time highs. Tech is kind of dragging it up. Then you look over at the Dow or the Russell, and it looks to be a different story, or the transports, for example. So it continues to be, the backdrop is this potential for AI to grow. I'm a little bit surprised to see Apple up as much as it is. I think it's smart that they said, hey, if you have the iPhone 15 or higher, then you're going to get these offerings for free, so they don't cannibalize the 15 by saying you have to get the 16. So I think that's maybe as expected, but I still think that that's going to be a show me story. Whether what the stock is suggesting today is basically saying that you don't need to show us, we're going to go ahead and reward you right now. I think it's still a bit of a question mark to see just how immersed is this AI offering going to be in our daily lives? I think that's still a bit of a question mark.
Yeah, the monetization of it, because we know the winners so far in this space, that are at the forefront, and that's picks and shovels with NVIDIA, among others. AMD actually down this year, but still had a pretty good 12 months. Kevin, the way that I look at it, NASDAQ 100 up 13% this year, S&P 500 up 12%. You got the Dow up 2%. Russell's actually negative now in 2024. So when I look at a market like that, that's, parts of it are hitting all-time highs, everything's doing okay, but at the base of this economy that goes into the market, it's still not a broad-based rally or supportive of everything's okay across the board, right?
It's hard to get on board here. I find it hard to buy anything other than something that's beat up, right? And trading on the downside, because boy, there's a lot of stocks that are fully valued.
Yep.
As example by the
I
S&P
agree.
500 being, well, what was it yesterday? 21.1, I believe, was the forward PE on the S&P. I mean, how much room do you have on the upside?
Right.
A lot of people, even in their best ideas for what the market's doing, they're calling it choppy and very minimal upside up here. So, you know, it's just very tricky. Are lower rates going to help that? Well, why are rates going down? James Bullard gave an interview this morning that was really telling. He said he thinks the EU screwed up lowering rates.
Oh, yeah.
Because they lowered rates on a day they upgraded their growth forecast.
Right. And the World Bank just came out earlier today. They raised global GDP growth outlook rates to 2.6% from 2.4% for 2024. U.S. up to 2.5 from 1.6.
Yeah, it's kind of, you know, and he was interesting. He said they committed to it, therefore they had to do it. Now they wish they didn't.
You and I, when we reported on that earlier this week, we kind of shrugged our shoulders and said, after Lagarde's comments where they're doing the cut based on projections and what their models are showing them, that's not data dependent, that's forecasting at this point.
You know what that is? You know what that's telegraphing? This economy needs lower rates, and I've got to do it whether I want to or not.
There you go. That might be the call there. But Nate, when you look at that, let's dive into this Apple story, because yesterday stock was down nearly 2%, and historically we've seen that reaction because the stock ramped up into the WWDC event, right? And you got what you want. I looked at some of the analyst commentary, and they're like, this is a slight negative. This is a nothing burger as far as what they've come out with, because they haven't generated anything themselves, and they're behind the curve as far as adoption into AI. But I mean, you can't stop this stock today up 5-6% to record highs.
Yeah, I know. Technically, if you're at record highs, I mean, you don't really have much of a bearish case with that kind of price action going on. But yeah, and then you look at valuation. Forward PE is what, 29? The PEG ratio is close to 3, which is not great. And you know, some of the analyst commentary said that perhaps we can get some revenue growth back into the equation, but they were talking, you know, mid-single digits, you know, something like that. And let's say that you do get somewhat of a refresh cycle. I'm not sure if there's so much of a stampede to go out there and grab the next iPhone that has the AI offering, you know, embedded in it or capability, you know, so that it's AI ready. You know, UBS, I think they had a survey that said basically that for those iPhone users outside of China, roughly 27% said that they were looking to basically get an AI iPhone, with privacy and cost being the two biggest concerns there. So, you know, you can see an incremental bump in revenue. Yeah, there's probably going to be, you know, even if it's 27%, it's a pretty large install base. The other potential there is basically on the services side, if you get the developers to really, you know, utilize the user base and all the data that Apple has. And, you know, Apple said that we're going to, you know, you have to basically agree to allow all your data to be, you know, thrown into the pool for the LLM, the large language learning model, and they're not going to know who you are. But I think there might be some tentativeness among the consumer around that. So, yeah, like I said, I'm just still a little bit surprised to see it doing this before we start to see it show up in the numbers.
Yeah, you mentioned that PEG ratio. I think that's a good lesson for some of our viewers, that price to earnings ratio divided by its earnings growth rate. And we all know, you know, 4 out of the last 5 quarters, Apple's actually seen decelerating growth. To have that PEG ratio above 3, anything above 1 is considered overvalued. Anything below 1 on that PEG ratio is considered undervalued. So that's a good point to bring up when you're looking at valuations on a company that has it. But, Kev, to the same point, the iPhone 15 Pro.
What's
and
the latest one?
iPhone, that's the one, the Pro and the Pro Max.
15?
Yeah, the 15
Okay.
and then the Pro Max. So those are the only two.
I just bought a new phone. I don't know if it was the 15 or the 16.
I hope so. Well, if you want AI,
I may be stamping myself as an
but
idiot.
this almost gives them a leg up where, hey, if you want AI capabilities in your phone moving forward, you're going to have to upgrade soon because there's a lot of people with iPhones that are more than 4 years old, and that's how they kind of focus on the upgrade or super cycle they're expecting.
Okay, I'm with that theory. I get that. If here's the big if though, Tom. How many Americans are really going to commit to using AI like that? Is it really that widespread?
Not Elon Musk.
Yeah, but I mean, do you see what I'm saying? And where in your life are you going to use AI?
Probably a lot more than you probably expect, or the things and applications and software that you use on a daily basis will get embedded with AI. You won't even probably know it, but maybe faster results, faster efficiencies on this stuff.
Okay, I'm wide open to the, and I've got the right phone. I just don't know if I'm ever going to use it.
Yeah. Well, ChatGPT, hopefully you can turn it off because Elon Musk says, Apple focuses so much on security and privacy.
Should I eat rocks? It says yes. Okay.
Don't listen to that.
I mean, you know what I mean.
Yes. Nate, let's get into a real quick discussion here about the Fed meeting tomorrow because, as we mentioned earlier, most likely Fed Chair Powell will be a little bit more dovish in his commentary as opposed to some of the individual members. But he said it was seasonality during those bump ups in inflationary pressures that we saw the first 3 months of the year. Does he continue that narrative?
Yeah, he does seem to want, the big meeting back in May after we'd gotten some of those hot inflationary data points, the Fed kind of, cooled a lot of those concerns through his commentary. So you're right, he has kind of been leaning dovish and, I would think that, he'll probably keep to that, but he's also going to, leave himself an out because, some of this data that's coming out is suggesting that there's still a lot of strength. I mean, even if we get down to, if inflation comes in below estimates, we get CPI and PPI right over the next 2 days. It's still, it's like you were starting the show with the ECB and doing a rate cut when it seems like ingrained in the market psychology is that rates are too high and they're restrictive, and don't you need to be an accommodative central bank like you have been over the past 15 years? And yet the data is kind of suggesting otherwise. We might be just fine right where we are in terms of the Fed funds rate. And if you look at the probabilities, last week we had gotten a bump up in the September probability to like 82 or 83% on the Bloomberg probability. If you look today, it's all the way down to 55%. That's following the strong non-farm payrolls report. So it's just the inflation's not, the economy's not getting weak enough to warrant any kind of a Fed cut. The inflationary data isn't moving quickly enough towards its objective, I think, to get any kind of a rate cut. So I think it's just going to be a similar message that's been conveyed this year, really.
Yeah, and a lot of people are saying you don't want to fall behind what the ECB is doing, but if the ECB is wrong, which might come out to play out,
which is unclear so far.
Yes,
that they're right or wrong.
So yeah, we'll get some more clarity on that over the next couple of days on inflation. All right, let's take a quick break here, guys. When we come back, we're going to take a look at Oracle. The cloud tech stock is up about 18% in 2024. Reports earnings after the closing bell today. Stick around.
Oracle earnings after hours. We have an ascending triangle.
Every morning, every trade.
I don't know if I can be very bullish on it. Not at this level, just like that guy said.
Insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade
But I'll
Live
trade
on
the
the Schwab
knife.
Network. I'm all.
I'll definitely trade the knife.
Number one broker here.
Now, they're still behind AWS, they're still behind Azure, but is AI a new chapter? Is this a new story they can write? Another thing for Larry Ellison to pivot into and re-accelerate this stock? Is that like another big opportunity for them?
Oh, certainly. If you look at some of the commentary from Oracle's last reporting period and even previous, they've definitely touted, and they've seen it in terms of their cloud infrastructure business, with revenues up 49% year over year in Q3. So it's definitely an important part of their business as they made that shift to the cloud. I do think a few things to keep in mind. Obviously, in terms of competition, Azure has a way to go for that. But even if you look at some of the other software stocks versus hardware stocks when it comes to AI, it's definitely been a friendlier environment to the hardware space, the NVIDIAs of the world. So I think that's important to know, because if you take a look at Salesforce or Workday or MongoDB, for example, they were all punished because they disappointed on their earnings, and Oracle's been outperforming all of those software stocks this year. So the bar might be high for Oracle, given the fact that it is up 18% year to date. I will say analysts are pretty split on this name. 20 buys, 15 holds, no sells on the name, and the median price target's 144.50. So it implies about 15-16% upside over the next 12 months. So I think that, I think the bar, though, is important to note, the fact that it has already seen some pretty substantial gains, and the fact that it's not as friendly to the software environment. The other quick thing I wanted to mention was there is that report that Oracle was on the verge of finalizing a $10 billion contract with Elon Musk's AI startup X.AI. So we'll see if they mention anything about that on this call as well, because that could be another catalyst to the upside.
Yeah, hyperscaler business. They're nearing that $10 billion deal to rent those AI servers to them, and the cross-selling aspect of this company within the tech space, because they have, I think, all of the Fortune 500 companies as some type of
Larry Ellison.
Yeah, it's hard to do. He hasn't been doing his M&A activity, which is typically what he does. So maybe that's going to help the top and bottom lines also. All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking down Oracle ahead of earnings. But let's bring Nate back in here. Nate, give me your take here on Oracle, because it was a pretty good report about a week after their last earnings report. Stock hit all-time highs above $132. And option markets, pricing in about a plus or minus $9 move in the shares.
Yeah, and I think you mentioned that RPO. I think that figure really kind of ignited the stock last time. And if you look at the likes of Dell and what they reported, and I'm wondering just how big the CapEx pie is, and whether some of these database kind of cloud infrastructure type companies are going to be sacrificing margins. That was an issue for Dell if that comes up for Oracle. But if you look at the stock, it's been trading basically between 100 and 130 over the last year or so. It will be about, the cloud infrastructure business, Caroline mentioned, was 49%, but if you go to the May 2023 quarter, it was 76% year over year. So yes, there's some of the law of large numbers that are coming into play, but it will be about that growth and how much deceleration. It could be about margins there, and then RPO as well. So basically, how is that demand stacking up versus, the commentary that they had last quarter? We got a forward PE of 22, dividend yield of 1.3%.
Chicken cooked good.
And if you look at the charts here, that 130 or 128 to 130-ish, that has been resistance. On the downside, looks like that 200 simple day moving average has been support multiple times over the past 3 months.
Yeah, we've had some failures just above 127 over the last few weeks here on this one. But with the expectations pretty elevated going into this implied volatility, you got an interesting trade for us to take a look at here. Break it down for us, Nate.
Sure, and there might be a couple names for this type of a trade, but just looking at the technicals here, let's say that you did have a slightly bullish view for the stock heading into the report, noting that that 200 SMA, which is around 114, 115-ish as support, and 130 being resistance there. The stock's a $123 stock, so, there is going to be for a strategy like this, which I'm calling it a risk reversal call spread. And so the risk reversal part is generally a bullish risk reversal. You sell an out of the money put to help fund an out of the money call that you purchase. But what I'm tacking on as well is another leg, and that's selling an additional upside call in order to reduce the debit. And the way that I set this up, I selected that 115 for support on the downside, selling that put, and then buying a 128 call, and then selling the 130 call resistance there. But I really adjusted the strike so much so that I would this strategy would be bringing in some kind of a credit in the event that the stock remains between, let's say, 115 and 128 post earnings, so that you are getting compensated some kind of a credit because you have to set that cash aside in the event that the 115 put gets assigned.
Yeah, let's break this one down. Custom type of position here where you're going to buy a call vertical. You're going to buy the June 14th 128 strike call, sell the 130 call. So you got a bullish $2 wide call vertical there. And then you're offsetting the cost on some of this by selling the June 115 strike put. 3 days to expiration on this position. You're collecting a credit of roughly about 75 cents to initiate this position. So that'll take your break even down to 114.25 to the downside. So you want to remain above there because that's your break even, right? Above that 128 strike up to 130, your potential reward on this one about $275. But even if that stock stays relatively neutral between 115 and 128, you're going to get to keep that credit that you collected. You got about $11,400 in risk on this one, Kev, to the downside. That's if the stock were to somehow go to zero, so keep that in mind. But you've got that short naked put, cash secured put, trying to help finance the bullish call vertical.
Yeah, using the cash secured put to finance a call vertical. Now, this one collects a lot of theta, but it's got a fair amount of margin. But you understand what Nate has done here. He has assumed a posture that's neutral to bullish, right? If it's neutral, he's profitable. If stock stays right here, because he did the whole package for a credit. Upside, you get a little kicker, but he still keeps a credit. He didn't do enough of a call vertical to make it a debit, so he stays with his credit. So therefore, if nothing happens, he's still profitable.
Yep, and the fact that we talked about the anticipated market maker move, or what the option market price in the plus or minus note $9, and that's where that break even is from the current share price. So you've got to be comfortable owning those shares if it does fall below 115. If you keep that short put intact through expiration, but really short-term positioning, hoping for some consolidation or maybe a rally to the upside above the
coolest part,
yeah.
The 200-day moving average is right at the break even, almost to the penny.
Yep, Nate mentioned that on the technicals. Good eye there, Kev. All right, that's going to wrap it up. Good look at a customized trade there in Oracle. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. We're coming up after the break. Kevin and I are going to be joined by Andy Swan from Lightfolio. Discussion on Casey's General Stores and the sentiment data on the stock move. Convenience store stock has rallied nearly 50% over the last 12 months. They report after the close. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying, and we would experience
Well, they want that GME to fly. It's up 60 cents. Oh my God. I'm gonna wait. $20. I almost guarantee if you didn't get on the YouTube, this thing would be at 100. Always clean. This is Jim. This is hello.
Hi, good morning. This is Sarah. How are you doing today?
I'm all right. How about you? You want to have some ice cream?
I am doing great. Thank you for asking.
I was asking if you wanted to have some ice cream.
The government is giving you subsidy to help you pay your bills without to you. So, do you currently have any government or state provided health insurance?
I don't believe in welfare.
Okay. Well, I understand that, but over 70% people aren't receiving even half of the benefits available to them. This is just free information that will help you improve your health care.
Are you aware of how much the government's in debt?
Do you currently have any Medicaid or Medicare?
No.
Okay, that's perfect.
No, it ain't.
You seem eligible for this subsidy so far.
Are you AI?
One last thing, are you under the age of 65?
I'll be 65 in 2 years, honey.
Well, it seems like you don't fit our qualification criteria.
Damn.
Thank you for your time. Take care.
What a waste. They're using AI now.
Well-run.
Can't even pick up an AI chick. Man, I'm in bad shape.
The company has had some trouble hitting revenue estimates each of the last few quarters, and we expect that probably could continue. But Casey's could eventually just become a victim.
Them robots are smarter than me.
Had a great run because they're a great company that is really well run, but they're starting to see increased and very competent competition.
Yeah, Andy, here's the stats on Casey's. They're the third largest convenience store operator, fourth largest liquor chain, fifth largest pizza chain. Fill up the Yukon beer and pizza. Hello, that's like perfect for me, right? That's my dream store. So, but here's the thing. The problems they're running into is not in the popularity, but from what I read, it's the fuel margins are dropping. They make a lot of their money. Their earnings beats have come off fuel margins, and they went from first quarter 41.6 cents, second quarter 42 cents, third quarter 37.3 cents. So that seems why this stock was, bottom left to top right, but it's eased back down to its 50-day moving average. But all the data, everything else looks good. It looks like they're running into a little margin problem with gasoline.
Yeah, and a lot of that's because gasoline prices have fallen. It's just like anything else. If your percentage margin stays relatively stable, then you want the price of the commodity or the goods that you're selling to increase, not decrease. In so much that it doesn't impact overall demand in too big of a way. So I think pullback in gas prices is hurting Casey's. The increase in labor costs is definitely hurting Casey's. We see that impacting the bottom line in a significant way. I think this is a long-term story. This is a company that's filling in the gaps that have existed in primarily ignored rural communities for a long time. And if you can figure out that market, then there's a lot of upside. We've seen it with multiple types of other companies. So 2,600 locations. They're pretty much isolated to the Midwest. There's plenty of room to expand both eastward and westward for this company, and they've got a proven method of executing on their plan. So really well-run company. I just think probably due for a little bit of a pullback here because it's been one heck of a run.
Yeah, I saw your web visits, the 90-day moving average. Still keeps moving up, but I like that comparison that you did with Buc-ee's. I've been to one of those down in Texas. They're amazing, by the way. If you
I've never been to either of these.
Buc-ee's.
I live.
You can get beef jerky and brisket at those, but they're huge. They got 100 spots to fill up at there, but this is almost like a mini Buc-ee's, Andy, when you look at it. And I stopped at one of these Casey's, taking my kid back to school, and it just seems like a smaller version of a Buc-ee's, maybe not as clean, but their point as far as happiness goes,
SPX is up to 200.
Communities where, hey, you might pay a little bit extra for gas, that helps their margins because it's probably the epicenter of a small town, right?
Yeah, it absolutely is. It's a hub, one of the things, qualitatively speaking, when we look through, mentions of Casey's stores, it's a lot of times it's people talking about, their dad or their grandpa meets his buddies there every morning, or, it is a meeting spot. Like I said, it's
for drug dealers,
a hub of a community.
I picked up a Clover Town there one time.
I think that they do a good job of maximizing that customer experience. And so anytime you find a company like that seems so committed to the customer experience, I like to think that they'll do pretty well.
Earnings score on this one, because as I mentioned, stock's up nearly 19% this year, up nearly 50% over the last 12 months.
I've been shot at a Casey's.
You guys looking for a pullback here?
Yeah, we're looking for a pullback.
They have Kearney Street up here. I work nights. It's about 3 o'clock in the morning. I hear bang, bang. And a drive-by at a Casey's store hit the refrigerator about 10 feet from my head.
And, if you're a long-term investor, I think this is one you put on that watch list and you say, if I get a pullback to this price, I'm ready to pull the trigger, because Casey's is a very well-run company that has room to grow geographically.
Bullshit.
Yeah, you mentioned, misses on revenue. It missed last quarter on revenue.
You ever try to buy a candy bar in a Casey's? They're like $3 and something. A freaking candy bar. One thing I buy at Casey's is a Powerball ticket. That is it.
With the results that this stock's had over the last 12 months or 2 years or so, and the option market's priced in a plus or minus $17 move.
Goes to show you, fast market, we'll trade anything that moves.
Yeah,
We don't care.
And it has moved to the upside.
So, if you look at the chart, and if you read about this company, it looks like they're doing pretty well. They've had a great run, but they pulled back to the 50-day moving average, and these gas margins. It sounded like a lot of the reasons they were beating earnings in the past were these margins, and they're starting to come down. So what I did, Tom, there's no weeklies. The markets are a bit wide, so you have to be careful. Really use your price discovery on this one. But I did the 1 month, buying July 19th, selling June 21st. Again, no weekly, so you got to do the monthly trade. And by the way, and so even though you've got a $16 move, if you look at the 1 month, it's 19. If you look at the 38 days out, it's 25. So I put that right in the middle. I did the 300 put calendar, Tom. So bought July, sold June, 300 put calendar. Trading, it's kind of, like I said, it's a little bit all over the board. Right now it looks like it's trading about 125. I had it in there, I think.
It's at the 50 SMA.
It's a little bit higher now, but it moves. So
it's true, it could bounce.
It's very important if you're going to trade this. Use price discovery.
Yep, let's break this one down. Going out 38 days to July, monthly expiration that expires on the 19th. Buy the 300 put, sell that same 300 strike put in the June options that expire in 10 days. paying roughly, we've got a $1.15 debit on the risk profile here. It's trading about a dime higher, but the debit you pay is your risk, so $115 per spread. But Kev, you pinpointed the 300 strike, which is about $25 below the current share price, just under what the option market's pricing in, but it's lining up with Andy Swan and Mike Bolio sentiment data, where maybe they wouldn't be buyer here. So on this example, now you're pinpointing the 300 strike. We've got that $25 cushion out of the money to the downside for that. But at the same time, Kev, you've got about a $285 to $315 range that the stock can trade in to be profitable.
Yeah, it's interesting. You've got to use all the tools on the platform for this one, because the one-day move is 1670, but that's one day, right? You've got 10 more days till expiration. Sure, could you play a 310 calendar spread? Sure, you can if you get a move like that. But remember, the move for 10 days is $19. The move for 38 days is $25. So use all those three and make your call on what strikes you want to use and where you want to put these strikes. I used the 300. Nice round number, Tom.
Yep, and at the same time, you mentioned that short option. You've got some assignment risk on that over the next 10 days, but you've got a week and a half in this, so it's not a pure earnings play where you don't have time, where you've got to kind of either close or adjust it or roll it on that. There's no weekly options, as Kevin mentioned, but pretty good risk-reward setup here, pretty good range if you think the stock is going to fall back towards that 300 level. All right, good look at the Casey's General Stores trade, but let's take a quick break. When we come back, we're going to take a look at Salesforce.com. The customer relationship management stock is fallen about 8% so far this year after hitting an all-time high just last March. Fast Market's coming right back.
Do. Do. Gross.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Salesforce.com, let's bring in Ben Lichtenstein. He's Senior Futures Contributor here on the network. Benny, we've got some weakness in stocks, but hey, we're not too far off from those all-time highs in the S&P 500 and NASDAQ, right?
Yeah, especially in the NASDAQ, and less weakness in the tech sector, that's for sure, than we're seeing in that broader market. Does seem like the selling is being led by small caps. At least that was the case earlier this morning. They got all the way down to 2008, Tom. I saw the SPX down to 53.27 and the Dow down to 38,446. And you can see we're off those session lows here by 100 points plus. But I did notice the NASDAQ up to 19,104 today, and that move got them within 9 points of a new all-time high. So there you can see the only one of the four majors that's in positive territory. And, you know, this is a market, from what I'm seeing, one that's just waiting. We've got the Fed, we've got CPI tomorrow. We also have a couple key earnings results from some individual tech names. But on the bigger picture here, Tom, again, as we hold up near these all-time highs with yields, 10-year around 4.5%, even with the dollar strength we've seen, this is a market that wants more, right? More information, that is, from Powell, and from that inflation, those inflation figures due out tomorrow.
Ben, we had that rally, snapback rally in crude yesterday, up over 3%. What's going on there? Because, you know, the OPEC Plus numbers from a week and a half
Now I'm going to have my
didn't have
drink, and I'll be ready to trade again.
We're starting to see some strength in crude.
Yeah, kind of counterintuitive type move in reaction to those the OPEC decision a week or so ago. But I think that was more tied to some of the disappointing U.S. data that we saw and concerns associated with the economy. But after that jobs number, things have been full force forward back to the upside. Crude oil reflection of that, again, strong U.S. economy that we're seeing here. And it's also interesting because, again, with the strength in the U.S. dollar, we've seen crude higher. Today we saw a slight build in the EIA inventories, 1.2 million barrels. But I think today the real factor came into play. Crude WTI briefly above $78. It's actually holding above that last I looked. There it is at $78.22, but we saw it up to $78.36. The EIA said that crude oil production is growing in their forecast by 2% from 2023 to an annual average of 13.2 million barrels per day this year, and by 4% into 2025 to 13.7. Talked about increased production in the Permian Basin region, but they also commented on OPEC Plus, to your point, Tom, and they said in that May outlook they'd assumed that OPEC was going to relax some of those voluntary production cuts into the third quarter. Now they pushed that back to the fourth quarter. So, yeah, definitely keeping a close eye on crude prices at these high levels, feeding those inflation concerns.
Carvana's back down after that big pump yesterday.
Senior futures contributor here.
The Donald's down
markets, but now
under 40.
Senior markets correspondent.
Boeing's down $6.
This stock down on the year now, cracked at 19% after their earnings last month. But George, I looked at that earnings report. It didn't look that bad. It seemed like guidance was a little bit lighter than the street expected. The bar wasn't too high going into this one. What's going on with this stock?
Well, I think, first off, it's a good point to bring up because, yeah, looking at the price action after the drawdown, which occurred on the 29th of May, there was some buying going on. And that's quite a bit different than Workday. I'm going to use Workday as our template here, our example, which actually reported earnings the week before. One of the things you'll notice about Workday is that it gapped lower, but it also continued to the downside. And I think I know the reason, but if you look at Salesforce, one of the things you'll notice is they missed slightly on revenue. They did beat on earnings, but they did guide lower for both earnings and sales for the next quarter coming up. But if you look at their fiscal year 25 guidance, they actually lowered just slightly their revenue, and that's, of course, commensurate with the price decline we saw, which was pretty dramatic. But at the same time, they actually provided update on their guidance for earnings for the fiscal year, which is slightly higher. Now, one of the things I think is going on here is obviously there's quite a bit of expectations that these large enterprise software businesses, now I'm going to use Workday, ServiceNow, and Salesforce, are down with the expectations that there's going to be some slow in spending. And that's denoted by some of the revenue guidance, which was lower from companies like Workday, for instance, which I noticed was down for the fiscal year. But one of the things about that business, Workday now, is they didn't actually provide updated guidance for earnings. So that tells me, or it told me, it wasn't necessarily a precursor to what was going to happen with CRM, but it gives you an idea that they're looking to cut expenses. Now, they may not necessarily have the visibility that Salesforce does in terms of cutting expenses, because they did, as Salesforce now, did provide some adjusted guidance for earnings, which is slightly higher. So, one would say looking at, the adjustment in earnings for Salesforce, commensurate with what's going on in terms of the earnings multiple, it's only trading around 22 times next year's earnings, and that's about half of its historical 5-year average. But the growth rate is also cut in half, both for sales and earnings. But nonetheless, the earnings estimates for Salesforce are still slightly higher by about 300 basis points than sales going forward. So it's making an attempt here as a business to recapture some of that lost movement to the downside, but it's still trading below its respective 10-day moving average, even its 200-day moving average.
George, I'll be real quick. This stock got caught up in all the optimism about AI. They came out, guided a little softer than people expected. AI is going to take longer to monetize than they thought. George, should we take AI out of this and just put in streaming and look at the price action of all these streamers and how they went up with euphoria and came down as reality set in? Is that what we're starting to see play out in AI?
Well, I think, I mean, obviously Salesforce, and in fact, when you look at Salesforce, they've integrated artificial intelligence before, May of last year when it became a trending topic. But I think what's happening here, excluding artificial intelligence, which I think you should, looking at the price action, you'll see this, dual step down, and that's 2 quarters now of expectations which were quite a bit lower. I think the story behind this company, Salesforce, I'm going to use ServiceNow and Workday because these are 3 larger players in enterprise software that is utilized by workers and of course the business itself. It's not necessarily just AI or cloud, but I think they're very telling because all the charts look very similar, all 3 of them, and that tells me that these companies are exposed to decline in enterprise spending, and they're essentially ways that businesses cut expenses, and maybe that's what it's telling us. So I think that's the larger context or the narrative we should gain from this price action. That I think it's telling us it's not necessarily an integration of AI. I think it's a cutback in enterprise spending. That's my view of it. So with that said, looking at the price action just on CRM, until it breaks above its 200-day moving average, I can't see any bullish catalyst for it.
Yep. All right, George. And you know what? Everybody's spending on AI hardware and infrastructure, maybe pulling back on some of that enterprise spend, as you noted. All right, great stuff. Thanks, George Tiller, Senior Markets Correspondent here, breaking that down. So with that in mind, Kevin, we've got a couple holidays coming up over the next few weeks. Maybe some slower summer trading. So I looked at a strategy. If you think this thing is going to be range bound, George mentioned the 255 level being that 200-day moving average. I picked that on the upside and went down below the current share price, which is just below 240. Created an unbalanced short iron condor here out in the July 5th weekly cycle. So you get about 3.5 weeks till expiration. You're going to capture that Juneteenth holiday. You're going to capture that July 4th holiday as far as time decay goes. So that's a benefit to this type of strategy. Where I'm going to sell the 255 call, buy the 260 call, short $5 wide call vertical, sell the 235 put, buy the 225
bounced up to 50 that time.
Short $10 wide put vertical, collecting roughly about 270 credit on that one. That's
let me see, they're going to be pumping Apple.
A company like UiPath that's in the business of automating workflows in your business, AI can do that pretty well. So find the businesses that AI is going to replace, but data and databases, they aren't going anywhere.
All right, quick break. We're going somewhere just for a couple minutes. We'll come back. We'll give you a final trade, including one from Brad Gerster, too. That'll be fun next.
You look goofy with glasses on. Well, that was about it for CNBC. Got one word in.
Half deltas. So therefore, the number on the put side is what's giving you an upside bias. So also allowing you to collect more premium. So combining the two together, you got a lot less risk on the upside. The risk, though, however, with the delta, is on the downside.
Yeah, and this is a type of strategy which we typically talk about, neutral strategy. Yep. But you can see here where you can offset some of maybe the risk on one side, use some of those technicals. George mentioned the 255 area, 200-day moving average. Maybe that's resistance on that. The stock has already fallen, kind of settled in around 235 and peaked up a little bit too. So good look at an unbalanced short iron condor there in CRM if you think it's going to consolidate. All right, that's going to do it for us today here on Fast Market. But stick around. Next Gen Investing is coming up next right here on the Schwab Network.
Disney's getting down there at support. Not close enough. Dude.
Welcome to Schwab Network. Daily Live.
Apple with 105 million in volume. That's impressive. Get my tea. I don't know why I didn't think about Apple yesterday. I did think about it, but today was one heck of a run. Probably payback for Elon. We just have to wait for it to pull back before I take a trade. Just like them other guys. ARM's one they like to play on the dips. Some of these runs are ridiculous. We're double topping on ARM. And then you had this solar. Wall Street will say, okay, they're sanctioning solar panels from Asia. Let's take the trade. Then probably won't improve sales one bit. Unless government forks out. That's probably what the deal is. Government's getting ready to fork out a bunch of money. Boyle. These are stocks that are up above 2% at open. Reddit, nah. 5 was the one that had bad sales. It's down $100 in a couple months, 3 months. Half of its net worth. It was overpumped.
this name does still have almost an equal weight in the S&P 500, so it makes sense why it matters still so much. I feel like we've discounted that.
$165 billion. We talked about, kind of how big that is just yesterday. A name that we think of as, a pretty formidable player within the semiconductor space, Micron. Micron's a $150 billion company in terms of market cap. Apple's up more than that today. So again, there's levels to this, and Apple's one of the big three.
Okay, that's a crazy perspective when you think about how big Micron is. It just really puts it into perspective. But as always on this show, we will start things off with up, vote, and down vote. We'll chart and trade our up-voted names. For FOMO today, we are looking at GameStop, which has been all over the place today, but was initially higher then lower. Now it's pretty much not doing a whole lot, but shares were halted at around 4.5% upside, which I find very interesting. We'll dive more into that story later on. We'll also be looking at Spotify adding its new premium plan on the back of those price increases we got just a few weeks ago. Last but not least, we will end the show with under 30. We are looking at Rubrik, which does have earnings out today after the closing bell, a relatively newer company to the public markets.
Yeah, GameStop is teetering kind of at that break-even level for those outstanding call positions for Keith Gill. So, look, it's a big position. It's a lot of volume. There's a lot of excitement around GameStop. It's a good candidate for discussion for FOMO. Let's do up vote, down vote, though. Not endorsements, not recommendations. Starting with the firm. This is a name getting a little bit of a pop from Apple as well, as it's up about 7%.
Yeah, and I saw it initially jumped 11.5% this morning before then sort of paring back some of those gains. Still having a pretty nice day, as its payment products are now expected to be available to Apple Pay users in the U.S. coming later this year. This will, they said, enable users to save on checking out time or save on some in-app Apple Pay purchases on their iPhones or iPads by being able to pay over time, of course, using Affirm. Meanwhile, they said, though, they don't expect this partnership to have any material impact on their revenue or gross merchandise volume in fiscal 2025, which runs through next June. So they don't see this having much of an impact, frankly, which I thought was interesting to disclose. But they did still spur a lot of optimism. I actually saw a Mizuho analyst that said that this has been a name they've liked for the better part of the last 3 years, and they said that this partnership solidifies Affirm's moat. The news is positive, they said, for Affirm, especially since the stock traded down several times in the past when Apple did announce, of course, its entry into buy now, pay later. So I think now showing that there is some degree of like unity or like a partnership there shows that maybe it won't be as threatening to, of course, Affirm's market share.
Yeah, Affirm has a business that is really not that hard to disrupt.
Right.
And neither is, I guess, the technology behind something like Apple Pay. But getting the device into the hand is very difficult. And Apple owns the North American device market with the iPhone. Apple Pay is the future of where commerce is going. More and more places allow you to use that service, be it for a credit card payment, be it for transferring money peer-to-peer, and other services. As mobile-first banking and financial services is sort of where things are going, Affirm having this partnership is critical. Now, I don't know if the terms are that favorable for Affirm. I have no idea. But being in the room for a player that's going to be there, I don't know that Apple Pay is going to win the commerce war or not, but they're going to be in the room because Apple's in the room. Whenever you're one of the biggest companies in the world, it's easy to kind of force that negotiation. So Affirm being partnered up with some of the biggest companies, think Amazon, I believe Walmart as well, and now Apple, they're in good company.
Yeah, I totally agree. I think just like being on another interface for them, it's all about like building their merchant like library, because I think that Affirm is obviously a great option. We're not saying it's like better or worse than the other buy now pay laters, but it just needs to be visible, because that is how obviously you get these customers. So yeah, good news I guess for Affirm, which it seems like they could both mutually live and exist. Obviously Apple does still have its buy now pay later feature, but next name today here is another name that's being affected by Apple's event we got yesterday. That is Alphabet, as Apple did reveal plans to integrate Alphabet's Google Gemini AI model into its Apple Intelligent feature set. Now, this move is expected to provide users with this wider range of AI models, which in addition to Microsoft's OpenAI's ChatGPT, of course, so that is another huge development we got from Apple yesterday. But their senior VP of software engineering did share their overall expansion plans into AI offerings. The integration of Google Gemini is part of their ongoing efforts to evolve this intelligent feature set, which, again, I think that was relatively, actually, to me, priced in, but I know we're seeing optimism today in Apple shares, but there has not been like an official announcement specifically pertaining to Google Gemini, but we did hear from management that was a potential future option, and they mentioned sort of hinting at that. So, I mean, I do think that
NVIDIA's trying to squeeze
their
here.
integration to Siri is going to be maybe beneficial, because Siri has been so lackluster in terms of its development, but Google Gemini, I still think, has also a ways to go as far
Missed
as
that spy
creating
bounce.
that consumer likability.
So I'm going to take
NSPX.
this as a point. So we're not talking Apple today to kind of make this more of an Apple discussion. Alphabet
The bonds
sort of
came out.
changed, and you're
Damn,
right,
I
this
wasn't
is a
paying
big
attention.
Story, but you know, this is where I feel like sometimes being a consumer and using some, in my mind, common sense, and separating that from financial markets. Financial markets love the AI discussion right now. They think anything tied to that has to be good for the stock. But who wants this? Like, I never feel like more of a doofus than if I'm talking to Siri or Alexa or whatever. And it's always bad. It never gives me the information I want. It takes way longer than just typing. So even if it improves, like, am I rushing to the store to get it? No, I'm going to be the last person. If on that little adoption graph, I'm one that's on the backside, and it's like we're already moving on to the next technology before I'm excited about this, because it's so far from being useful.
You know what I did think seemed a little bit useful about it is that it's going to help like the back end of all of your interfaces.
Now, I was going to pay attention to this. We were at a perfect
But do
spot.
you want that? Like, I'm someone who kind of likes it to be separate. I want to type in what I want to happen. Like, it annoys me when it
When
goes.
things auto-pop, like,
Don't
yeah.
assume what I want. You don't know.
That's actually a really good point, because I think I'm also like an early or a late stage adopter to that, because yeah, I've used ChatGPT and I've used Gemini, and I don't really have a massive need for either of them, and we are probably like the target.
I'm still the first, maybe the last. I've never used it a single time. I've accidentally, when searching on Instagram, apparently typed too many words, and it sends me to the Meta AI. But I don't want it. I don't care. I just want to find my own things on my own.
That's also a new feature I feel like that Meta has laid out, where everything is like searched through AI, and it's not. They have to work out a few kinks, but yeah, I totally agree. And so obviously we'll have to see like how that actually.
No, but I want to learn how I'm wrong, because everybody's excited, and all the analysts are saying this is great. But like, who actually is excited about it? I don't see it on social media. I don't see it anywhere.
I saw someone actually tweet that this was the best WWDC that they've seen in years, and I'm kind of mind blown by that, frankly, because I followed the events, and I wouldn't say the same. I think there was some weird, like, very 10 years ago updates as far as like the interfaces go, but. So yeah, Siri to me, they needed to do something because it's awful. I basically have disabled mine, so maybe this is the way to get some people just like thinking about Siri again.
Yeah, talking to their phones by themselves. Like nothing, again, I just feel like such a doofus. But let's move on. These are just thoughts. Like,
What is the
again,
deal with this stock here?
Clearly potentially wrong if the stock is so excited in the case of Apple, but I just don't know. It's not, at least in my kind of limited universe of people, friends, family, I just don't know anybody who's excited about this. So one thing I know that people are excited about is Shopify, though, because it allows them to connect with merchants online, maybe more so than any other firm, as they're so important to sort of small and medium-sized e-commerce websites, that back end. Shopify kind of tying in with the Affirm conversation as well. Talk to me about why this analyst over at JP Morgan is excited about this stock.
Yeah, and I have to say that I can appreciate this call, because we pulled back so substantially. We're down about 18% this year. So JP Morgan with coverage at an overweight rating at $74 price target. They said they believe that their breadth as well as ease of use and scale are distinct competitive advantages that will continue to fuel this industry-leading growth for Shopify. They're modeling around 18% compounded revenue growth through 2026, as Shopify does benefit from the secular shift towards e-commerce as well as scaling some of its growth initiatives. They do also think the recent pullback does create an attractive entry point at this point for investors. So I have to say, 25 buys, 23 holds, not a single underperform or sell from the analyst community. And the average price target is around $75 a share. So that does imply upside from here. So they're not alone in the thinking that we could see some recovery, as we have seen just a disappointing Shopify performance this year.
Yeah, no doubt. Really, post-split, Shopify just really hasn't been a strong performer altogether. But it has made a bit of a recovery. When you look at back to where this stock had traded, when you go back to 2021,
it would have been, split adjusted $176 a share. So almost 3x still where it is, and it's 3x off the low. So it goes to show just how much damage was done in 2022 when the overall market was under pressure. This is one of those names that, although that recovery that you see on that kind of last half of that chart looks impressive on, a 1 year, 2 year basis, still 50% off its levels from 3 years ago. So Shopify is a fun one to talk about. Obviously, it's a growth company. It's tied to the consumer, but it's had a bit of a roller coaster ride over the last couple of years. Last one on our list is Autodesk, ADSK. Stock under a little bit of pressure here today, down about 4%.
Okay, and like highly undercovered, I think that they reported early, and then this led me into a whole rabbit hole on like the latest of Autodesk's basically like company structure. There's some problems. So we did get their quarterly results already. They did actually beat expectations on their earnings by about 5.5%, which did also mark about 20% growth, and revenue also did top forecast and also rose about 12%. But more interesting than that, we did see these reports that a stockholder derivative complaint was filed in the U.S. District Court that named the directors of the company as well as its chief strategy officer, and the company is actually also being named as a nominal defendant. The complaint, though, generally did allege that the company did violate the Exchange Act and breach its fiduciary duties, unjust enrichment, abuse of control, and a waste of corporate assets. And if you sort of just do a brief search on what the latest with Autodesk is, about a week ago, its CFO did resign following this accounting investigation, which early April they did delay a lot of their financial disclosures, saying they were opening a review of their accounting processes around their free cash flow and margins. This is a problem. I mean, this sounds like a nightmare. And like the fact that you could just basically do a quick search and learn like 18 different ways the company's being mismanaged as of late, not good. Completely overshadowed to me their first quarter results.
Yeah, volatility really hasn't jumped up as much as you'd think. It actually came down post-earnings from where it had been. But over the last month, if you were to kind of do a rank of it, where, 1 would be its lowest point of the last 21 trading days, 100 would be its highest point. It's at a 4 right now. So I look at that and say it reads really not great, but the market doesn't seem to be reflecting the uncertainty that those headlines suggest. So to me, this is one of those situations, unless you feel like it's risk you want to take, maybe this is one where, unless you're using risk definition, is one that you kind of wait and see perhaps how this shakes out.
No, and that's what's also kind of amazing to me is I was thinking the same thing. It just doesn't seem like it even mattered. So, I mean, maybe this was just something I was more focused on this morning following their first quarter results being released early. But yeah, it's an interesting rabbit hole to go down. I hope that they have now maybe that under control. But we'll be looking more at our payment e-commerce players today, those being Affirm as well as Shopify. We'll dive into the charts as well as some example trades coming up next.
Do-do, yeah, oh yeah, I love jazz, oh yeah.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on.
That's how I do it.
No place better than the Schwab Network.
I was born on the south side of Chicago.
Damn you.
Road, but now I'm working for Schwab. I love to help people.
You stole that job from me.
The world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time now for our Chartmaster segment. We're looking at a firm as well as Shopify today with our Chartmaster himself, Ben Lichtenstein, who's also, of course, the host of Futures. But Ben, we'll start off with a firm here, which I will say has been a bit of a better performer of the two, at least on a year-to-date basis. I mean, excuse me, actually, Shopify has been the better performer on a year-to-date basis, but a firm still looking strong on a month basis. It is up 82%.
Mr. Frankenstein.
That's what I was thinking about.
Yeah, both of them have started to recover a little bit, Jenny, but the longer-term charts are still somewhat disappointing for those that have been holding these two names that we're going to take a look at here today. I figure why not start with the positive? Take a look first and foremost at the 5-minute candle chart, because here's where you're going to see some strength as of recent and a bit of a bullish pattern playing out. Exactly what I like to look for, right? Those two phases of price development. You go from a horizontal kind of consolidation phase into a imbalance type phase, big news event stirring things up here today, rally all the way up to 34.20, and then a little bit of sideways consolidation.
That's affirmative.
Transitioned into, again, that sideways phase where it's just sort of random, not a lot of conviction associated with this, and that comes, again, after a high conviction period that we were in.
Conviction.
So balancing around 32.40 right now. Acceptance of this run-up we've seen here today, and
I don't see it, sir.
Chart is about as good as it gets. Let's take a step back and get into an hourly.
You mean it can't get any better?
All the way back to the highs that we saw back in
We got a double top.
Two events that really stand out here on this chart. Most recently, earnings in the beginning of May, and then you can see on the left side of the chart there as well another earnings event where stock tried to rally, but over the
it dropped last earnings, you dickle butt.
Weeks that came after, you saw a series of lower highs. So a pretty well-defined channel lower here, actually, again, with a pretty well-defined trend lower, series of lower highs in a stock that just continues to struggle. This is a hourly candle chart, so let's just establish some areas where the market has paused and kind of gone into that consolidation phase. 36,
25, 21.
Expect it to continue lower right now.
Let's see if he gets it.
A breakout below the lows that we saw, again, to begin the month of June, end of May, and a new area balance form at a lower level. Bulls want to see us take out this.
There's a gap right there.
Be a bit of a reversal type pattern. Now, speaking of
25, where did I come up with that?
I think there's a couple different ways that you can look at this longer term chart. You're going to see, again, similar situation playing out. There's a lot of conviction on the left side of the screen, sideways consolidation for the most part as the bulk of this price activity is played out. But let's begin with, first and foremost, I think the, in this instance, it does appear to be a bit more bearish playing out. Just weakness across the board. A couple failed attempts here to auction above this $30 level. This is where we spent most of the time. If you take a look, longer-term chart going all the way back to 2022. So Alex earlier in the last block was talking about some of the pressure the stock came under.
Yep, we can see 25.
The end of 2021, beginning of 2022.
Oh, yeah, 27.
This chart, guys, it has yet to recover. Again, this is one where we're seeing short-term strength, but that longer-term chart really speaks to the weakness that's been
27.17.
This one has a long ways to go before you can consider it a real turnaround story here.
Yeah, and I have to say that if you look at the long-term charts you have pulled up, it really, really illustrates how little today matters. I mean, frankly, if you're looking at things short-term, you're thrilled with an 8% jump, but it really doesn't do much to the continual slide we've seen in the same, despite, I mean, still positive performance, now 90% up on a 12-month basis. That's just goes to show the volatility of this name. As far as like a big picture trend here, what are you looking at?
Well, let's take a look and see where we are relative to the 50 to 200-day moving average, because today's pop actually has us above both of them. So we are starting to see, again, a little bit of enthusiasm come back into this, but this chart, again, just really speaks to that high we saw 52.50. That was back in end of December.
What's that moving average you got? The 200.
Highs we've seen. So the 50-day was actually trending lower pretty significantly.
Oh, we got a golden cross.
Above that right now. 200-day looked like was starting to roll over. So
Death wish. Death cross.
Do something here. Now's their opportunity to start to reverse this one, but
back down.
Still under pressure here. I think that next key threshold, again, some of the areas that were established on the way down.
Yeah, I think a really good way to
Jimmy's looking for a put.
Obviously play into some of the upside today. So with that in mind now for our example trade purposes, Alex, walk us through then an optimistic looking trade. Because I mean, obviously, if you're just looking at things short term, say you're not looking to like maybe long term invest in the same view, there's still ways to play into some of the recent strength.
Yeah, exactly. And so this seems to be more news-driven, perhaps future-based on the partnership with Apple being announced. So this optimism may not be taking into account some of those concerning technicals, but if you still like the story, you like the future for a firm, still a stock that's way off its highs, long term, looking at a bullish strategy. Now, granted, the stock is about $1 lower when I looked at this, so some strike changes may be in store if you were looking at a similar trade in a name like the firm today. But I looked at the July 12th expiration. This allowed for single dollar wide strike availability. And I looked at a $3 wide spread, which is about 10% for a $30 stock. The 30-33. Now, at the time, the stock was around 32, but this was still trading for a $1.50 debit. Goes to show that implied volatility and call skew in this name really made this kind of an interesting price risk reward setup, because you had a break even that was 50 cents lower than the current share price, but you were still buying premium. Equal risk reward, risk 150 to make 150, break even at 31.5. Now, these prices are probably long gone, so this would need some adjustment, but the idea being structuring it for equal risk to reward, and if you can get that break even, Jenny, below the current share price or at it, that can increase the probability of success.
Yeah, and I would say that a good way to look at a firm, we obviously don't have any like near-term catalysts, but today obviously hopeful on this Apple news and all things Apple developments as far as payments are concerned. But now to look at our next name today, that is Shopify, which I will say Shopify also has not seen the most stellar of 2024 so far, Ben, but still as far as long-term, it's held on to a nice uptrend.
Short term, you meant to say?
Short, well, 12 months.
Oh.
But, okay, yeah, that's not long term. Longer term than this year.
We are recovering. I'll take a look at the bigger picture here, and you'll see that slight recovery that's starting to take place, but still a lot of heavy lifting to do. And, sorry, I thought what you were talking about was that short-term chart, because we have seen some pretty good strength there. And you're right, even on the 12-month basis, we have seen some as well. But let's start off, first and foremost, with the 5-minute candle. We've got a couple areas of consolidation where the market here is now trying to get something going in terms of value moving higher. So let's just start with that more granular and work our way up here again. Areas of consolidation where the market just pauses, right? And then it separates with that vertical development. And so we're moving higher, simply put. You've got bottom left, top right, recently off the $65 level and currently consolidating, establishing value around 63.80. We'll call it 64. Now, this one, again, not the best example of what we look for in terms of balances that have formed, but here you can see that move that we just looked at, a small glimmer of hope relative to
that's the wrong one.
More intermediate time frame. Got an hourly candle chart going all the way back to the beginning of February. The stock was trading up around that, it looks like $93 level. You can see, again, the high conviction on the left side of your screen. You can see how we started to consolidate around 74. And then look at this again. A big breakdown here in reaction to in the beginning of May, and then again acceptance of this lower level. So just sort of drifting higher, but until we get above 74, I mean, this is a stock that on this time frame at least continues to establish value at lower and lower levels and is yet to take out anything significant that was established on the way down. Now, this is an example where, again, it's a little bit clouded in terms of depending on whether you're taking that glass half full or glass half empty kind of approach towards looking at this one. Let's start off with the glass half empty first and foremost, and I think that's similar to the pattern that we've been discussing with these two names as we look at this longer term chart. Again, moving away from the short term strength we've seen, long term chart shows that high conviction on the left side of the screen. Again, just sideways consolidation, random, wide range price activity over the last couple of years, but not a lot of real movement one way or the other. All these short-lived rallies are just that, limited in terms of ability to get anything going in terms of areas that were established on the way down. And then, again, even the moves lower unable to take out those September lows that we saw back in 2022. So this is kind of a bearish look at price activity, a sell-off on the left side of your screen, and then again, the market just accepting this new lower level. Now, a bit of a bullish stance would be this, right? You can kind of get out that magnifying glass and sort of look at some of these areas individually, and then you can see a bit of a staircase type pattern playing off the recent lows. We traded down to, again, that was in the fall of, what was that, September of 2022. We bottomed out around the $25 level, and here we are, working our way higher. Recently balancing around 73. If you look at it that way, again, I'm still, guys, unfortunately, a bit of a a bear on this one, just based on some of the recent price activity. I feel like this is a stock that's under pressure and has really yet to perform since.
Okay, Ben, I have to be honest. I'm looking now at the 12-month chart that I was like, oh, maybe more up. I think I was way overstating optimism because it really doesn't look that strong on a 12-month basis either. It looks much worse long-term and short-term. Frankly, I know we've risen considerably on a month-to-day basis, but
where are you now?
The time frames you look at look pretty bad. So as far as like overall trends here now, I mean, I think we're both seeing just a sign of a company that has not been able to obviously enthuse the street. What are you watching for some big picture trends?
Well, let's take a look at that 12-month price activity, last year's worth of price activity. You can see again, a stock that's recovering off the lower levels, but when you take a look at where it was just a couple months ago, back in February, you can see that it's struggled. Again, we talked about that sideways, the consolidation, the limited conviction, ability to break out or establish a trend one way or the other. Here it is. Look, smack dab in the middle, stuck in the range we've been in. 45 is your lower extreme from the fall of last year. You've got an upper extreme around 91, 92, and then here again, another example of how our RSI is not really providing a lean one way or the other. So, yeah, we're seeing a little bit of short-term strength in Shopify, a bit of a lift here coming into play, but tough to trade the short term and just not a lot of opportunity on that longer term chart the way I see it. I'm curious to see how Alex approaches this one.
Yeah, tough to trade the short term, so we're going to try to do just that. But appreciate the insight, has always been like inside our chart master and the host of Futures. So now, when we trade this name, like Ben has pointed out, difficult to sort of find a directional conviction here, but say you were looking to sort of lead into the recent strength.
It looks like it's trying to base out, combine that with the overweight at JP Morgan. Seems like there's sort of this neutral to bullish kind of feeling around the stock right now, despite that really longer term downtrend. Over the last year and a half, 2 years, it has recovered quite a bit. It's up about 3x off its lows. How I looked at kind of dealing with what Ben talked about with uncertainty is just using a risk-defined strategy that's only $2 wide. So we're really controlling the risk here. This is a much smaller trade than even most of the smaller style trades that we look at. You risk $135 with a chance to make 65, so it's about a 2-to-1 ratio on that. With the break even just below the current share price at $62.35, you just need the stock to hold on. Stay above 63, you can make 65. Fall below 61, you have that 135 at risk. But July 12th expiration, the same as the Affirm one. Really, the one way to, of course, avoid volatility or avoid uncertainty, just don't participate at all. The next way is if you feel like you want to participate, use a risk-defined strategy, and then you can also control risk by even making a smaller risk-defined strategy, and that's what we've done here.
Yeah, I think a good way to sort of lean into what we're seeing has been a decent month so far, but I know it's very early in June and things still have a long ways to go to obviously recover some of the recent just sideways price activity. I wouldn't even say downtrend, it's just been stuck. But we'll leave it there for our Chartmaster segment. Now coming up next, it's time for FOMO. We're talking GameStop, which initially surged as much as 4.7%, then fell. Now we're higher again. We're up about 1.7% on all things meme stock, roaring kitty volatility.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Schwab. I was looking at
investing themes.
I was looking at Sister Play to Affirm, Sympathy. I kind of believe him. I think we're a little bit overbought here. It's just jumped up because of Apple. And they say they're not going to make much money off of it. We've got a double top. I'm looking at it, I'm not thinking about it. Well, shit, I should have jumped in it. It's at 150. No, that's a SPY. What'd I do here? Yeah, we're still at 147. Get 5. I'll think about it here in a second. Oh, who's this?
Content that it thinks you will like, but everyone will like. It's prioritized on engagement and wants you to stay on the platform as much as possible. So if a lot of people like these Abercrombie jeans all of a sudden, and it's the craze and it's selling out, somebody's getting revenue from that. So it's making the younger generation realize you're going to spend money on these jeans. That might be an indication of who's getting that revenue. That's a public company. You can participate in that as well.
Wallets and option plays, Jessica and Skip, for the latest market overtime. The pair discuss social media's impact on investing and the future of women in finance. Market overtime
Women in
airs
finance.
At 4:30 and 8 p.m. right here on
Jessica
Network. Now,
in Skip.
investing in. It's time for FOMO. We are looking at GameStop, which is actually one of the names that sort of coined the whole concept of FOMO as far as this segment is concerned. So joining me to discuss more is Caroline Wood, Senior Markets Correspondent. So Caroline, I have to say that GameStop has been all over the place today, halted to the upside and just 4.7% moved, rapidly to the upside, but then we saw things fall. Now we're back higher. We're up about 3% on all things Roaring Kitty.
And then this just changed in just a few minutes because it was up about 2%, and then I looked down, it was only up 0.2%, and now up 3%. So, yeah, the meme craze continues, although not quite as wild of swings as we saw yesterday and then, of course, last week. So we don't require as much Dramamine today. But yes, as you said, was halted earlier this morning for volatility. Still down about 10% this week following a big 12% drop yesterday. But that pales in comparison to last week's wild ride. Nothing more than 100% at some points. Shares ended up sinking about 40% on Friday. It was the worst day since 2021, and that's because Roaring Kitty, or after Roaring Kitty, aka Keith Gill, hosted his first YouTube live stream in 3 years. And then, of course, GameStop also posted that surprise earnings report and said it planned to raise more money through a stock sale. So anyway, Roaring Kitty, Keith Gill, continues to post memes on his X account. Most recently, a banana with a computer and Options Basics 101 on the screen. Apparently that's Joe Banana from The Amazing World of Gumball, which was new to me. And then a man looking in the mirror pointing, saying, "You were a billionaire." So that could be referring to the money he's lost on this wild ride. According to a Reddit post associated with Gill yesterday afternoon, he's holding the position that he had previously, which includes 5 million shares of GameStop, as well as 120,000 $20 call options that expire on June 21st. So according to the screenshot, the value of Gill's GameStop position dropped
What do you got there, Mike?
$1 million in just one day. So his GameStop position is now
Apple.
worth about $200 million, according to that screenshot. It also showed he was holding $29.4 million in cash, which calls into question, Jenny, if he's still the everyman that he's really claimed to be to try to appeal to his fan base. So he might still have diamond hands and that he's holding on to this position, but I certainly wouldn't say he's like all of us, given that screenshot of the holdings and given how he acted on that live stream on YouTube. But GameStop shares up about 2.5% right now, still up about 45% year to date. And should also note, AMC is getting a nice pop today as well. Shares of AMC are up about 11% right now, already up about 20% in June.
Caroline, there's a lot to explore here. I mean, that's the latest update, of course. Still a position that has open gains. The cost basis was like $5.50 on those calls. They're trading around $7 right now. I think the share position was like a $20, $21 cost basis, obviously trading above that as well. But I think there's this tendency on Wall Street particularly to be dismissive of this guy and dismissive of GameStop altogether.
This guy turned, if we just take the facts at face value, $50,000 into hundreds of millions of dollars. I mean, this guy's on the Mount Rushmore of traders or investors. Now, if he plans to hold this position and he is an investor, and his live stream talked about the long terms that he liked about GameStop, I don't know that he, using 10 days to expiration options, it was the best, a little bit longer when he established it.
2 weeks.
That was the best way to maybe go about that. But,
that wasn't smart.
50,000 to hundreds of millions, who am I to question him? I guess my question to you, Caroline, or get your thoughts on in general, is if the reason is that we truly, if we're Keith Gill in this moment, we believe in the company, that's one thing. But if it's more like, hey, we just want to pump this stock up, all these pile on, it's some sort of a almost casino game, I'm not sure that, like, in that sense, I'm on board. But hey, if you believe in something, you put your money where your mouth is, who am I to question it?
Well, and he certainly is putting his money where its mouth is, right? Because he could have cashed out when GameStop shares were much higher than where they are right now. I think so I certainly can't dismiss, the amount of money he's made.
I thought that was a piece of dirt on my screen, but no, that's a freckle on her boobie.
The issue, though, is he essentially considers himself a
They had to get rid of it. There it is.
Which is, the Warren Buffett approach, if
See
you
it?
will. Obviously, Warren Buffett is not a GameStop investor, but the fact that he really believes in GameStop is the thing that, some may say is a bit hard to believe, because on a fundamental basis, GameStop is, the surprise earnings report showed they're facing rising expenses and slowing sales. So the belief in GameStop fundamentally is, I think hard for some people to grasp. But as we know, with the meme stock craze, these stocks don't trade on fundamentals. So I think that, that kind of is ruled out with this. I did see Dave Portnoy, of course, who live streams under Davey Day Trader, I believe. He just recently called out Roaring Kitty, Keith Gill, and said that he, kind of doing that live stream was a tactical error because
yes, it was.
He took away some of the mystery, and the mystery of these posts on X that we were trying to kind of decipher. They were cryptic. We didn't really know what they meant, and we were like, oh, it's a man leaning forward. That means he must be all in, that type of thing. Actually appearing on the live stream took away some of that mystery. And
I wish you wouldn't have done that.
Done any favors to GameStop shares. They're significantly lower than where they were. So I don't know. This is something that we'll just continue to watch. I mean, shares are up about 4% right now. No real reason why. So, the meme stock craze, the rally might be dying down a little bit in terms of these strong moves, but we'll certainly...
We're going to find out. This thing wants to take off right now.
June 21st, which is when the options expire.
Yeah, and I think you both make a good point that sometimes it just feel like, because I think the reason it's discounted because it's like lacking a connection to the fundamental story, but hey, it still moves the money, and so I think like price is king. It's still up. I mean, now 4.5% just since we've been talking. So it's a fascinating story. So appreciate the insight as always, Caroline Woods. So now, Alex, we trade this thing, which I do think, as far as short-term trading, if you look for volatility, this is a great name to trade if you want to see that movement.
Well, I am going to push back a
Looks
little
like
bit
it
on the
wants to
fundamental
boom.
piece. I mean, there's plenty of stocks that have never made a dime that get crazy valuations. They got tons of cash on it. Look, it might be overvalued, but we give grace to all these other companies that they can earn and change
Mike,
in the future. But GameStop,
why did you take down your yabba dabba doo on my YouTube?
No skin in the game when it comes to a company.
I loved that there. Did you take down your yabba dabba doo? I want you to put it back on there. I never knew what it was until I translated it. I'm so in love. You took a piece of my heart when you took it down. Now, ladies and gentlemen, the GME is at a resistance right now at the 200 SMA. I'm sorry, Rory Kitty. Resistance is 2661. 2661. Resistance 2661 on GME. Jenny, will you tell her to cover up her freckle on her left boob, on her right boobie? Sorry if there's any ladies on YouTube. While she says this, Team Lurks is looking at the spy. Uh-oh, the smart guy's on, Kevin Green.
More restrictions within the AI space in general here, especially when it comes to China. Now they are looking to try to restrict gate-all-around technology, which is transistor technology, which is new to the market. It basically improves the performance of semiconductors as well as reducing the amount of energy that they consume. And so this is going to impact, once again, the companies that we talk about pretty much on a daily basis, from the likes of NVIDIA, Intel, AMD, even Micron. Now, we are seeing the semiconductor index, if you're looking at the stocks, down about 0.5% in the session here today, and we are also seeing Micron down around 0.6%, AMD
We
down
burned it.
1%. But one thing to just
She
kind of
broke.
note, these announcements regarding these chip restrictions seem to have less of an impact every time that we hear a new restriction.
Now let's gain respect
at
at 2661.
We may not see as much of a reaction here in the future unless we see some significant embargoes when it comes to selling.
Let's have a little
chips to China.
respect here.
So that's kind of the story that we are seeing right now. Nothing has been confirmed by the White House yet, but that is what the market is expecting to see an announcement here soon.
Yeah, and on that speculation, Kev, it does look like there's some weakness in NVIDIA, some weakness in AMD. That money may be flowing into Apple as the stock's up 6%, perhaps GameStop as well. And, you know, Kev, I know it's you're just joking with me because of what I said last week, but it doesn't matter what we think. I'm just saying that, hey, we give grace to other companies. We aren't here because of the situation. I don't know what's going to happen. I don't think you claim to either. We'll see what happens in time. It's fun to watch from a distance, no doubt. Appreciate it as always, Kevin Green, Senior Markets Correspondent for the Schwab Network. Coming up next, talking Spotify, Renita Young will join us in studio for the latest on their new premium plan pricing. Stick around, we'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window.
Oh God, I'm sorry to your dad. Your dad, he couldn't fish worth a crap. He didn't even know what a soft shell crawdad was until I showed him one. We got a 1, 2, 3 on Walmart's. Let's go to Walmart. Fill up my shopping cart. We had another new high on Intel. I got to get out of this trade this week. I don't think I'm going to be able to do it. Quadruple top on the SPY on the 1 minute. Are you serious? I'm going to watch my Affirm here. Oh. 158. Boing. That's how you do it. Oh, I can see a target there. I can see a target. Oh. Oh, yeah. I'll be right back. When are you going to come back, Jim?
In some respects of this whole audio.
They've been pumping spot.
Specifically, the audio streaming business just in general is considered one of the biggest. So they've got to figure out where to make up somewhere because they still have a lot of competition.
I'm with Jenny. The Audible, you can't take that away from me. That would be the last thing to go. But I also think this will be interesting once we get some numbers on this, if they do break them out in earnings. How many people are willing to spend an extra $5 a month for something that seems to me relatively unneeded?
The question is, are they going to decrease the quality of the regular subscription?
Like take things away from the baseline tier.
And then you'll need to get this.
No, but with AI, you don't need any of this. It's just going to predict what you want to listen to. It's going to make your playlist, and you just talk to yourself on your phone, and it'll play it back to you. So,
Clearly.
All jokes aside, appreciate the update, Renita Young. Not a lot of movement in Spotify today. Kind of an unchanged move, but on a market kind of wobbly day, not necessarily completely unnecessary. Appreciate it as always, Renita Young. Coming up next, Rubric under 30 earnings preview with George Tillis. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30. Today we are looking at cloud company Rubrik ahead of earnings. Joining us now for his insights is George Tillich, Senior Markets Correspondent for the Schwab Network. George, this is not one that's super high on my watch list, but we're at that point in earnings season where we start to look at some of these more fringe names, let's call them, or up-and-coming names. What are we looking for here with Rubrik?
Well, I think with Rubrik, you have to consider a couple things. The company's been around since 2013, but as a publicly traded company, it's only been around since April. So it's a newly listed IPO just going back a couple months, and this is their publicly traded inaugural earnings call. In terms of sales and earnings, they're estimated to lose about $1.83 per share with sales at around $172 million.
Holy shit.
If you look at the price action, at least the last couple of weeks, it's starting to pick up a little bit after it started to drift to the downside in April. And I think that was part parcel of the correction that we had going back to, late March and April, picked up in May. The stock is also moving, I think, in sympathy with other cybersecurity names like CrowdStrike has had a pretty decent last
all these upgrades
it's breaking to new highs.
on the 6th.
Nonetheless, this is still a company that's new in terms of a publicly traded, entity. So that's something you have to keep in mind. For
I don't know about this.
Because again, there's not a lot of information associated with the price levels.
Think you're getting scammed.
Levels, but also, I think it'll be interesting to see what they print in terms of a business, and perhaps if they demonstrate some guidance, at the very least, on earnings on a forward basis.
So, George, as far as this company now, it's obviously new to public markets, like you mentioned, just went public back in April. So, I think could we expect some of this volatility? I typically feel like earnings events aren't really indicative of the company's health when they first go public.
I agree with you, Jenny. I think it's
Meta moving up.
Actually get some, visibility in terms of the business growth, but also at the same time the underlying stock, which again is going to face some challenges. For instance, if they do come ahead of estimates on earnings, guide a little bit higher, that will essentially recalibrate analysts, estimates higher. But at the same time, they may use that opportunity to issue some additional shares, which again,
a rare data day ahead.
Publicly traded new IPO. There's typically
The market has the potential to fly or fall.
More lockup periods that expire, and these are periodic expirations where the company can start, selling shares, or even, for instance, insiders, which are major shareholders, can issue shares at the same time as the company matures more as a publicly traded entity, the stock now. This also provides an opportunity for institutional, investors or banks like, for instance, Barclays, or let's just say Deutsche Bank, for instance, that have helped support the stock through its IPO inception. They can also start issuing shares. So my point is volatility is to be expected. Ideally speaking, in my view, at least 2 or 3 quarters of consistent earnings, and guidance higher can start providing some foundations from an investing standpoint. But right now, for me, at the very least, it's too soon to tell. You got to keep in mind, though, as well, profitability certainly matters, because just this quarter, they're expected to lose $1.83. For fiscal year 25, it's $2.35. And they even have projections going out to 2027 with a loss of 78 cents. So they're not expecting to break even, at least in the next couple of years.
And at least we know that. At least the expectation is set, relatively low for their profitability. And at least we can see this company sort of level out from here as it's still, figuring out how it's trading and all sorts of things. We will leave it there. Great insight as always, George Tillich, Senior Markets Correspondent for the network. And that'll also do it for Alex and myself for Next Gen Investing for this Tuesday. Coming up next, we have the Watch List with Nicole Pedalides.
to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on Schwab.
Chance to break PM highs.
Favorite streaming services.
Available anytime.
Man, I wish I still had them calls.
Any device for free.
They're at 185 now.
Schwab Network, empowering every investor and trader.
Damn, that's $1,500 I left on the table in that first trade. 1,500.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless.
I was asked about this drug. Was it Lilly that had the Alzheimer's drug? Yeah. They said that side effects are bleeding. There's no way I would take that drug. Yeah, you just had an aneurysm, James. Taking your Alzheimer's drug from Eli Lilly. He did say one thing, though, Mr. Kitty Litter. He said that it would take time. And he said he has all the patience that it takes.
The Federal Open Market Committee has begun, right? 2-day meeting. Will they hold rates steady? Probably. But investors want to hear what Jay Powell may say at the press conference. We'll get you prepared for that.
And it might be too late.
Technical Tuesday, and Kevin Horner will join us with some key levels to watch on the S&P 500.
He's probably watching the monitor real close right now.
Also, he'll take a look at Palo Alto and Novo Nordisk. And our panel
Better he moves them up.
At Oracle.
He might just move them.
Today after the bell. We'll get you ready. In the meantime, let's see how stocks are faring right now. You are seeing a lot of red. The Dow is down 206 points, down 0.5%. The S&P down 3 at 53.57. Only the tech-heavy Nasdaq is gaining here, up 0.25% at 19,130, while the Russell pulls back by about 0.5%. And I saw Paramount, Arista, FMC Corp, VFC, and Apple. Of course, Apple is helping the NASDAQ, right? U.S. dollar 105.24, gold 23.29 a troy ounce, up about almost $3. Oil 78.02, Bitcoin down 67,075, down 4% today. So pullback that's noticeable. And Ben Lichtenstein will take a look at Bitcoin and Ethereum later in the show. In the meantime, Kevin Hanks is with us, host of Fast Market here on Schwab Network, and it's Fed Day tomorrow. And I always love it here because right before the Fed comes out at 2 o'clock, the whole place gets quiet and they go shh, and you can hear a pin drop because we get ready for it. But look, you know, any day, any moment is a big deal. So let's hear what your thoughts are for tomorrow.
Yeah, today is day 1 of the FOMC meeting. Tomorrow we'll get the news at 1 o'clock Chicago time, 2 o'clock Eastern. Jerome Powell's press conference will be a half hour after that, probably 2:30 Eastern time. And here's what we'll get that's important. We'll get new dots, right? We'll get new dot plots on, remember, in March, the suspected number of rate cuts was 3, but just barely 3. So the question is, does it move to 2 or does it move
You're
to
a liar.
rate cut this year? Then, of course, we'll get the decision by the Fed, which is most...
Everybody priced in 6, you idiot.
Anticipating. Why? Because in most cases, at some point, he turns dovish during that press conference where he's answering questions. And he generally, Nicole, delivers news to the markets that they take favorably. So therefore, with the market at all-time highs, where's does the risk lie? Does it lie more to the downside?
CRM boom.
Is it the upside? It's going to be a big day. Remember, in the morning, we also get CPI data. So that may affect what the Fed does. So tomorrow will be a massive day for the market. Watch yields and bonds and notes in general. Should be a big day.
Yeah, absolutely. And look, exciting news on Apple over the last 24 hours. A lot of volatility, extreme volume. I mean, it's a winner year to date. It's a winner 1 year, but it started to falter and people were getting a little fed up, but it broke out to new highs of 206. What is everybody watching when it comes to Apple?
Yesterday, they announced at the Worldwide Development Conference their Apple Intelligence, right? Their AI products. And it's vast, and there's dozens of them, and there's dozens things. But here's why
Google boom.
was down yesterday and up today, Nicole. Yesterday, they threw out a bunch of information that basically spelled out
SPY hit my resistance today.
Strategy was for AI. But then the market realized something, Nicole, and that is this. All the AI products that could be on Amazon, could be on Meta platforms, could be on Google, that'll all be on your iPhone, all those AI tools have to be done on an iPhone 15 or higher. And right now, as it currently sits, iPhone 15 Pro and 15 Max have just 5% of the current installed base. And that is leading investors to think about a massive upgrade cycle for Apple. And that's what's taking the stock currently up about 6%. Now, it traded $206, now trading about $204.75. So a big move on the upside for Apple when it sunk in that, hold on, a lot of people may need a new iPhone, Nicole.
Oh yeah, a lot of folks will have to upgrade if they want to have access to all the AI features that have been spoken about, no doubt. Kevin Hanks, great to see you. Thank you. Now let's take a look at the bigger picture. Everything from the Fed to energy, AI, even some stock picks for you. Tom Hulick is with us, CEO at Strategy Asset Managers. Thank you for being here.
Thank you.
So we were just previewing the Fed a little bit. I mean, what are your thoughts on the Fed for 2024?
Well, we've been talking to our clients about when the interest rate cuts are going to happen. It's like you really can't predict that. We're looking for signals tomorrow from Jerome.
Signals?
What could be the signal for when the cuts are happening and whether or not inflation is going to be sticky at this point and whether the Fed will actually take it from 2% to 3%. And that's what we think that our clients are going to be more focused on. Not when the cuts are, but if they adjust it and what the signaling is.
Doesn't it seem so unlikely that he'll come out and say, we've adjusted our price target for inflation. It's no longer 2%. I know we've been going for that a really long time, but now it's 3%. I mean, I don't know that he could just come out and say that like that, right? He won't. But he could sort of massage it around 2% or something like that. Is that what you're looking for? Is it more about the language?
Right. He's a messenger. And,
right.
And the messages that we're looking for when this is going to occur in the future. We know that the economy is strong in the U.S. right now, and there's not going to be a rate cut probably sooner rather than later. So we're looking for signals.
Right, understood. I mean, look, they're starting to bet about 51% likelihood September 17th meeting, and then November 66%.
I'm going to turn my water on for my second cup of tea, my third.
So, are you looking towards then, maybe for one cut rather than, the dot plot originally said 3 cuts? Are you thinking one, maybe?
SPY hit my morning resistance.
Clients and how we've been guiding them to spend one rate cut before the end of the year.
Yeah.
And so that's the signal that we've been giving our clients. And further cuts are probably going to accelerate a lot faster than people anticipate. And so we'll see.
Okay.
Where's Yoko at today?
See on that. In the meantime, I want to talk about energy and AI, and you have some names for us. Are you generally more bullish than bearish? And if so, what's the catalyst for that?
Well, energy is no longer a dirty word. I think that power consumption and energy demand is going to drive conversations during this AI inclusion and technology advancement. So the names that we're guiding our clients into, for example, would be Constellation Energy Group, CEG, nuclear reactors, and also Eaton Corporation, which is ETN, a huge supplier of energy, electrical equipment to data centers and utility companies. Those are great companies to look at kind of downstream.
So it's more about stock picking or sector picking than it is about the overall market for you at this point.
It is. My firm, Strategy Asset Managers, works with private clients and also the institutional community as well. And we have separately managed account portfolios. And
Let it snow.
Guide our clients into a direction of the sectors that we believe are going to outperform in the upcoming quarters.
You also talked about the AI boom, but all the different areas that could be affected: auto, financial, healthcare, you name here. I actually had made some notes earlier today. It was all about energy, other areas that are affected by AI. But you have some here. I'd like to hear what your thoughts are.
Sure. One of the areas that we think are going to be benefiting the most is the healthcare industry, for example. Let's look at a company that's tied into AI like Intuitive Surgical, ticker symbol ISRG, robotic surgeries. That's going to be the future for surgeries. That's a company that we like, and I think if you look at the healthcare industry, the pricing power that healthcare companies have right now with increasing their margins, and that's pricing power. So healthcare in particular, you could look at, let's say Merck, for example, as another stock pick, but that's more on the pharma side of things.
And I was thinking earlier today when I said I had made some notes, I was thinking about data centers. I had in my notes property and of course power. I had power in there for high demand because that's how we're seeing this all drive. Is there anything that you would stay away from if you're leaning more into the stock picking ideas? Is it the opposite for certain sectors that you're just not interested right now?
As an active manager, you would like to direct into
YouTubers
areas that are going to outperform the standard.
This is what I had charted this morning for the SPY.
So
I had a low support around 532.68. And I had a high of 535.54. This is kind of how I charted it. I had the pivot point right in the middle at 534.23. I'm watching snow. Snow looks kind of cheap here, but so we hit that 532.68 this morning and reversed up from it. And we hit that resistance of 535.54. Magnificent. May I have an A+, please? Although I did get out way too damn early. I did get out too early. I left $1,500 on the table. I've scalped it a little bit, but damn. $1,500.
One of us has made a gross error.
Yep, that was me.
Affirmative.
Oh, well. That's more than I made today. Okay, now Mike's taught me this. I'm going to show everybody else. Well, I kind of knew it, but I didn't really put the two together. So give me a second here. If I find the chart. Okay, you idiot. This is called a standard deviation channel. And when you want to look for new highs, you can use that as a resistance. So here on the 1 hour, on the 90-day, we broke that resistance of 202, which means we could pull back and hit it or come back to that 200 on Apple. So we're going to go to a 4 hour. We'll go to the daily. Everything's in a downtrend from then on. Yearly, hourly. Let's look at the monthly. Yeah. Oh God. So on the monthly, let's go to the weekly. That's more like it. So this is 2 deviations. Go into edit studies, type in standard deviation channel, and you got to set up 2 different ones, one at 2 and one at 1. That one's set at 2. Everything's the same. And the other one's set at 1. The deviation of 1. So that deviation's right around 203, 202.80, 202.50 to 203. And that's a triple top just right below it, triple top break on the weekly. So I'm going to keep that 197.57 as a support level to gain respect. I missed out on the Apple trade today, so I'm kind of pissy about it. With a target of 221.09 long. I don't know if I'm doing that right, Mike, or not, but $220 would be our target. Oh, my water. I'll be right back. Put it on a 5-minute, 5-day. I'm gonna set one around the 5-minute, 5-day at 201.50. Alert. I'm testing. This is a test. We just broke resistance. Just broke resistance of the SPY. Oh gosh. Oh, Jim. Oh God. $2. 65 times 30. I'm gonna do this out loud. $65 times 30 contracts equals almost $2,000. Repeat. I left $1,950 on the table from this morning's call. I gotta let these things play out. We're in a bull market. The only thing that's going to bring this market down is Russia or China. Or a terrorist attack, a big one like what we had during 9/11, which we could have, because we've let all these. I mean, I was at a bluegrass festival 9/11 when the towers went down. I was crawling out of a tent picking my nose. Some guy comes up and taps on my tent. What the heck I'm saying? I've been up, since 3 o'clock in the morning playing music. And I was tired. I said, Jim, wake up. What, man? Leave me alone. I'm sleeping. No, you got to get up. I said, why? We're under attack. I said, what? So I climbed out of my tent and I turned on the radio. I said, oh shit, man, I better go get some gas. So first thing I thought was about gas, because I was 4 hours out of town. And I knew a whole tank of gas would get me back home. So I run to the gas station, I fill up the gas tank, and I come back again. I'm at Winfield, Kansas, and we don't talk about news, we don't talk about politics. And the whole camp was just kind of, there used to be planes that would fly over and do little things, and there was no planes in sight. There we go, we're breaking out on SPY. So I sat there for a week and a half, just things going through my mind. What's America going through right now? And I rushed back home and got caught up on all the news, and the market crashed. Well, I'll never forget that moment. This bluegrass festival holds 40,000 people at least. And they're all of us are playing music. Good 50, 60%, maybe 70% know how to play music. The market's thinking positive about tomorrow. I'm going to wait short this sucker. 2,500 contracts right there. Might be the time to do it. Let me look at the puts. I'm going to take a risk. We got the 535s at 215. I get 5 of them. Let's do that. The 535s for June 12th at, I'm going to try to get 215. There's my water. Put my order in for 215. There we go. I don't know if it's going to work. My risk, my house. How'd I get the dollar sign in there? The middle of the street, my house. Jim, you're going against all odds. YouTubers, I'm taking this on my own recognizance here. Understand? I'm gonna go get my tea and I'll be right back. Oh no, don't you even think about it. I think I'm gonna go to Walmart and buy me a water warmer so I can get it at a certain temperature. Be consistent with my tea. In the middle of the street. Oh, you son of a bitch. Unbelievable. Well, I got 5 of them. I'm down $50. I'm gonna hold them for a second, but man, that was it. I blew it. I could get 5 more, but that put $2,000 in the trade, and I don't want to do that right yet. Now, what was that? $535. $535.80. There it is right there. 152. Somebody got a little present right there. Someone got him a little gift. Wonder how much that cost him. That just doesn't, 152,000 shares just don't sneak up in there. Unless it's a fat finger. Man, that thing just keeps going. I could probably add some here, but I ain't doing it. Huh. I can't see this thing closing up high today. God darn it. Could add them right here, but I'm afraid to. It'll drop like a rock. That's a bear flag. It's a shooting star. I put ginger root inside of my tea. Okay. Man, them calls went they're at 239. That'd have been $3,000 just if I held them first ones I got into today. I'm down $100 right now on this thing. AMD popped. Apple popped on that news. 205.69. Now they got a target of 210. I agree. 205, 210. This is what they wanted on Apple. They've been talking about it for 3 months. Drop, you bitch. We're back at support. Could sell them here at $2 and take a small loss, but I'm not. I want it to drop to the 200 into close. 534.55 is my target. 534.55. The 200 SMA on the 1 minute. You know where I got understood from, Mannequin? From watching boot camp in the Marines. When you get off the bus, uh-oh. I'm about ready to get a reprimand, I think, from Magnificent. Me too, me too. I think I should get an A+ for bravery. Oh. What's that big word mean? Do I gotta Google that search too? Incontinent? I gotta figure out what that means. Incompetent? Is that what you're saying? Jim's incompetent? Having no or insufficient voluntary control of urination and defecation. That's true. I have no control over my urine. Mike, you should be talking. That's too much information. That's funny. I'm not nuts. What's going to happen when this thing drops? Will you take it back? Probably not. Okay. We got a 1, 2, 3 on Apple. It won't drop. I say it will. This pop is unnecessary into tomorrow. There's too much coming out tomorrow. Jesus, look at that QQQ. $19 more minutes to power hour. I'm still holding this beautiful piece of stock. If we break this double top, I'll get out. Maybe. $536.49. Lacking self-restraint. How to use it in a sentence. Lacking self-restraint. I could offset, this is what you did teach me, Mike. I could offset this, but I think I'll just leave things alone. We have an ascending triangle to boot. So we're getting ready to squeeze, and we'll see if we get to a higher level. If not, it's going to be a nice little knife. And Magnificent will take that grade off and give me an A+ for being Chuck Norris. Today is a big day for Apple, though. Uh-oh, 215, I'm almost back to even. No, don't do it. I know what you're saying. Oh God, Jim. I should have added on. Oh, you idiot. Still some good buys coming in. 900 and a couple 500s there. Okay, I'm gonna add on right here at $2. Now I've got some at 2. Oh, you bitch. Almost got too many lines on here. I'm gonna clean it up. I need 208. Another confirmation. We got 2 confirmations that we can hit the 535.83. We got a double top, which is could be an exit idea, but it can come up and form a triple top breakout, or a triple top and then knife down. So yeah, at 535.85. Get it. Oh no. $21,700 sold at 535.15, so they're thinking it's going to go back up. $2,100 sold right there. Drop. $536.49's resistance. That's a bear flag. Come on. Oh! I'm green. Well, that's a shame. $211. $212. Come on, baby. Drop. I could get out right now and all the worry would be over with. But I don't know. I want to hold on. If I get down here to 530, here you got a J hook right here. That looks kind of interesting. 535.47. Let's do that one. This is support. I mean, truly this is an exit idea if you're stuck in it. But I just think this was a little bit too much going into tomorrow. I can get out. Hello? I'm in the middle of a trade. May I help you? Yeah, this is John Wayne. Now, cowboy, I hope you're very hydrated right now because you might start to sweat. We got a big shootout down there at the old Cape Corral. I think you need to hold on to it. You've got the guts of a snake and the eyes of an alligator. Well, John, I really appreciate that. And I do have a urinal problem right now, Mike. Should I sell it? Howdy, Pilgrim. Break it on down. Again, I go against the odds. We're at 213. I'm still going to take it down. We're definitely at a solid support. We're on the 50 and the 51. 50 SMA and the 51 EMA. So let me get to a different chart. We got bearish divergence. Remarks at Everyton's Gun Sense University. Who would name their university after Gun Sense? I've got a song I'm going to play here in a second after I win this trade. And I take everybody off guard here. Magnificent, you might need some of this. I see a little panic selling going on. We're getting ready to squeeze. Sell some SPY. Uh-oh. The volume slowed down. They're giving the buyers an opportunity. And here comes that one with 9,500 again. 15 years ago, this goes to our ex-president, Barack Obama. There it goes.
You're paying still a lot for those jumbo mortgages compared to what you would pay for a conventional mortgage right now. Why do you think that is?
It's very hard for me to focus on what you just said because I got that tarp song from that previous segment still playing.
Party.
2, 3, 4. Well, I am just a poor boy from the streets of Tennessee. Work real hard to pay my bills. It's too much for me. Lost my job, they took my home. I'm down on my knees. Heard about this place where money grows on trees. I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. Boston to Seattle, across this great big land. Tuck your head between your knees and dig like a man. Well, packing my belongings off to Washington, D.C. They're printing money left and right, and they want a stack for me. Got an idea that just might work if they gave the companies. Give everyone a brand new car, insured by AIG. I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. LA to Miami, across this great big land. Tuck your head between your knees and dig like a man. Hey, what's with all these bonuses they're giving to the rich? They're filling up their pockets, walk away without a hitch. Gotta grab myself some tarp, cause I hear it's going fast. Now I know why they call it fanny, cause reds are up there. As I was saying, I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. From Maine to Chicago, across this great big land. Tuck your head between your knees and dig like a man. I want some tarp. I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. I want some tarp. They're giving money away for free. I want some tarp. Save a little bit for me. I want some tarp. You know that money is giving money away for free. I want some tarp.
I want some tarp. 30 seconds. In the meantime, once again, we thank viewer Bill Zucker for composing and singing and sending us I Want Some Tarp.
Incredible song.
We'll see you tomorrow.
It's going fast. Now I know why they call it fanny, cause reds are up.
Okay. Well, had a chance to get out with some profit. I'm still holding on. We got a triple top right now. Still in it. We're at 193. My average is 208. Get a little over $2,000 in it. And that, you know, that's I could go one more step, but I'm just going to leave it here because I don't like this triple top. I'm in puts right now, but I wouldn't take too much of a risk. This market's very bullish right now. I don't know what they're thinking about tomorrow. Or definitely take it to the last minute. We're 6 minutes into power hour. I'm still in the game. $0.70 now. Let me look at the puts. On the SPX. No, I'm a little deep in this one right now. Which one's Randy? 5360s. Oh yeah. I think it'd be a good idea. I gotta go urinate and I'll be right back. Where's my phone? Just in case. If I get any on the stool, you'll know why. The puts, baby. They're at 95 cents, Randy, a buck. Thank you very much. I want to get right here at 535.49. 75-cent drop. We got a triple top, which is bearish, but we're very bullish. The SPX can drop to 36.54. $36.64. 53.64. I've got big balls. Damn, there you go. Now we're talking business. $120 for the puts on the SPX. SPY. Come on, baby. That's a 63. Cheers to all the alcoholics out there. We had the puts on the SPX, and now we're at the 63, which is a steady support. To keep this thing bullish, you'd have to bounce up here. Now I'm dead even right now. Well, I'm up $20. Oh, there we go. Drop, drop, drop. Damn, I got to put some deodorant on. I'm sweating now. Should have done that when I was in the bathroom. Oh yeah, go, 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 go. Randy, we're at support on the SPX here. 145. I'm gonna take it. We can probably get more. Randy. Come on, drop a little. I mean, SPX is solid right here. We could drop another one. This is an old trend line. Don't. We're getting to close. There's no way they're going to bring this back up. And I'm going to turn an F minus into a C plus. And if we hit the 200, I want an B plus. I want some tarp. Anybody remember that song? I played it live in front of people. Come on, drop. I mean, you could get out here and be safe and be done with it. But I just wanted to get a drop here. Someone bought 1,000. They're still trying to keep us up. Look at all these buys coming in. There's more puts out there than there is calls. Not by much, by 3%. The delta in the calls is at 29, and the delta in the puts is at 46. Put sizzling index is at 1.59. Jimmy busted a move. Randy gets an A+. God. Randy. You'll be eating them words when you see this thing down here at 28 bucks. Uh-oh, what is that? Uh-oh. Here it comes. Here comes my A. Five, 10, 15, 20, 25, 30 minutes, 35 minutes. 5, 10, 15, 20. I'll be happy with 220. I mean, yeah. Uh-oh. Magnificent. I think it's coming down. I think it's coming down. Here it comes. Michelle. Come on down. You're the 216. I might get more than 220 out of the trade. Take that, you bulls. Oh. It's true. I have a 1, 2, 3 right here I just now recognized. Fuckers let me come back in. Somebody loaded up big time right there. A big mistake. It's a tug of war right now. I see something here. That's a 208. Yeah, he's all over the board. Yeah, you missed the calls. I'm in a very risky trade right now, Yoko. I'm going to still hold on to these. I just can't see this thing closing up high today. It's now 3:27. Jim, you need to go in there and brush your teeth. But Jim, you have false teeth. That's true. I've had them all knocked out. I want to sing a song here. Break it. Mark, I hope you got out of your positions okay. I know you're rich today. What's my thoughts on Disney? First thing pops in my head is the Disney cruise ship just created a new island, and it's beautiful. One of the most beautiful beaches in the world. My thoughts on Disney would be long. Next time I go to Disneyland, I'm going to wear a dress. I was at Disney, Anaheim Disney, when Rodney King, 2 weeks after Rodney King incident, right now I'm in a trade, but I'm going to look at Disney here in a second. I'm going to get 220 out of this, or even more. Now we're pulling it. This is your exit idea. If you're in this with me and you're suffering like I did. Ah, nice. 220, bam. Give it. It didn't give it to me. Sucker. Your dad. Boy, I didn't stay down there very long. Oh, I know what I'm going to play. Once this hits 220. Man, there's some big buys going right there. Somebody bought about, them are all, probably all lumped together right there. 6,000, 7,000 of them. Big mistake. We're 217, and we've got 27 minutes left, so I got to make a business decision. There, we did it again right there. Oh, that's the same one. No. So I'm going to see if I see a bunch of big red blocks of that 6,000 or 7,000. See if he scalped it. They're not wanting to sell it. $236. There we go. 236.60. Got some volume spikes coming in here. There's 2,300 of them. Ain't got much time left. A lot of volume there. Disney, this is my support line for Disney right here. That's where we've been kind of bouncing up off of for the last 3 weeks. This is the third week right now. So as long as we hold that support line, and right now we're at 146. It's getting ready to squeeze. Disney makes shitty movies right now, that's for sure. The only thing going for it, I think, is the cruise line, and Disney Plus is having too much competition. They haven't been pumping it like they were there. They had a proxy fight. I think that's still going on. Oh, Nelson Feltz sells entire Disney stake for $1 billion after losing proxy battle. So that's over with. It could probably start to bounce. They got a lot of competition with that Disney Plus, though. And that's what they were really counting on. I got kicked off Stock Twits for making fun of Bob Iger. That's another thing that pops in my mind. So I mean, we're at a place where it could be considered to start a small position, but I'm not really 100% about that. I think they gone too far woke. For the children, I mean, I don't think Disney's going to be a children thing anymore. I asked Bob Iger, I said, when you're going to put out your next porn movie? And make it a trannies, and X accepted it, but StockTwits didn't like it too much. Yeah, I think I'm just shit out of luck with this one. If we don't do something real soon, I'm going to get out of it, because we got 16 minutes left, and I do not want to hold this 5 minutes until the close. So the next time we get above 208, I'll probably get out of it, if we do. Did you get that, Gray? Exactly. Exactly. If they'd have turned it around, I think they would be probably worth a lot more money. But Disney's got a smeared image, so it's got to come up with some kind of new. Yeah, this thing ain't gonna do it. I mean, this thing's really pushing it right to 240, 345 right now. I got 5 more minutes to make a business decision. We're definitely at a solid support, though. Now whenever I get a sweet tooth, I just squirt a little bit of honey in my mouth. $12 more minutes till the market closes. Damn, I was up almost $200 on this thing. Oh yeah, I can trade the SPY until. Oh right, that's true. Thank you, Randy. Schwab screwed you up, huh? Come on, one more red candle. Anybody ever heard of split lip Rayfield on YouTube? You're very, very welcome. Oh, baby. Okay, I got my 220. I got 220. I got it. And I think I'm the only one that had my sell ticket on.
Star Wars returns, and it's certified fresh. Are you ready?
Living on Easy Street with a dog and a Persian cat. Living on Easy Street, we don't need to sand it. Our bills are gonna be due, and the baby will soon be too. Got to draw our welfare check this week. We're living on Easy Street. Well, our whole stock's is empty, and the cupboard is bare of beans. We don't have a pot, we don't have a dime, but we're fulfilling our dreams. In a two-room shack on a 20-foot lot, where we live is the perfect spot. We living on love and we sure live cheap. Living on Easy Street. Living on Easy Street with a dog and a Persian cat. Living on Easy Street, we don't need to sand it. Bills are gonna be due, and the baby will soon be too. About to draw our welfare check this week. Living on Easy Street. Living on Easy Street with a dog and a Persian cat. Living on
Easy Street, don't need this and that. Bills are gonna be due, and the baby will soon be too. Welfare checks just wait. Living on Easy Street. Living on Easy Street. Living on Easy Street. Okay. Wow. What a head rush. I don't know if I want to grade for that magnificent. Almost a B minus? Oh shit. That's a pretty good grade. Almost. I'll take a C plus. Or just a regular B. Well, I can't have a B if it's a B minus, so. I could have turned around instead of playing that song and run the calls up. I got lucky. That's all there is to it. That's all there is to it. See how it took off after that? 3 black crows out of the trade. 3 white soldiers, 3 black crows, and then you got this embolic run. I mean, damn. I'll take it, baby. Damn. Now what was I seeing? Oh, I'm not Apple. Is everybody having trouble with... Man, I hate to see what's going on with Schwab. Damn, SPX. Did you get calls, Randy? Golly. All right. Well, that was a nervy one right there. I got very lucky on that. I mean, we had to tweezer bottom off them crows. So I definitely got in the trade. I didn't think we were going to run up like this. I mean, this market could be shocked again, but I don't think they care. I really don't think they care. They let on like they care about these interest rates. I didn't listen to CNBC today because I didn't want to get so confused. Because they go back and forth. They get someone that knows something, they get someone that says different, and I'm going, well, that leaves me nowhere. At least with Schwab, they have 2 or 3 different opinions, and they're more or less spot on. And I'm just now getting used to these traders. I've traded with CNBC for over 20 years, off and on. When I had the scanner, I didn't listen to them at all. Trade ideas. I was able to use trade ideas in a whole different way than what I'm doing now. Now I'm relying more on a watch list. I'm relying on a watch list, and then I really like Schwab because they talk about the earnings that come out that afternoon, so I can prepare myself to catch a knife or give it the 3-day rule. So there's a lot of interesting. If you don't try to rely on someone else, you actually become a better trader. Instead of relying on a trade ideas, or I had another scanner I used to use out of Canada that I really liked a lot, and it would give me the shares the size of the float. And back then I didn't know what it was all about, but I traded them. Now I know what the low float and all that other stuff goes in there. Tells you how many shares were traded. There was something else about it I liked. It automatically give you your levels. As a beginner, it was very helpful. So, if you ever take a trade and you think it's very risky, you need to note that down in the chat. Say, I don't feel good about this, but I'm just going with a one here. Who says second case of human infection with avian influenza virus detected in India? It says here Trump and Biden are locked tight in the 2024 presidential race. Biden can't bring a crowd in. He's too afraid to go out on the street. I can't see it, but this country. So yeah, if you ever take a risky trade, let people know what you're doing. That's very risky. That trade I could have probably if I wanted to throw more money in it, I could have made a little bit more money, but I'm happy with $240. All that sweating and hard work. We were down 185, something like that, 186, 183, 184, somewhere in there. And I'm going, oh, should I cut it? Should I cut it? Because things weren't going my way. I could see the buyers coming in and the way the tape was reading. I've always been a reader of the time and sales. Not much of a reader on the level 2. I use it basically to see what the spreads are between the bid and the ask. Basically, that's about what I do. That kind of tells me if they're wanting, if it's tight, that it still could be bullish. Then when it starts to widen up, I go, oh, might be a good time to get out of this, or not out of it, but you want to sell when it's tight. That way you know you can get your money out of it. If it's wide, you might not get all you want, and you might get less than what you want. Think about the next 5 or 10 years, how this economy is going to change with AI. So if you have any children, I'd definitely try to get them into math, or it's up to you. But I'd be educating them differently than the way you were brought up. We didn't have no education when I was growing up. I mean, you were on your own. No real parenting. Like, you need to get your grades up, or you're not going to get lunch money or anything like that. I was doing pretty good today. If I'd have held on to them calls, I had to scalp them on the way up. But if I'd have held the calls, I would have made, Jesus. I would have made a ton of money today on them 536s. Went to $3.15. I had 30 of them. At 102. $108 average. Really kind of sad. There'd been a, what, 30 times $2. More than that. It didn't look very promising this morning. That was another trader got stuck in. But it sure looks promising at the end of the day. Just $4, almost $5 bounce. I think basically you got to learn about being in the now. What trend is the market in? You got to listen to some of these guys, how they talk. I mean, I get a whole different, listening to Schwab and listening to CNBC, they would have probably said stay bullish. We're bullish. Everything's bullish to them, no matter what. No matter, and they ignore, when the market doesn't look too good. Schwab kind of say, hey, you better be careful here. We're at these real high levels, the way I think. I got to figure out what every town's gun sense university. What in the heck is that? I'm going to type this in. I got to figure out what this is. This is kind of curious. Every town's gun SEN Sense University. I don't know if I want Joe Biden telling me about guns. All you just got to do is stand on your back porch and shoot your shotgun up in the air and run off them predators. That's what he said once. A Gun Sense University conference. Oh, a conference. Okay, so it's not an actual college. Well, they don't want to say black people. Black on black killings. There are a lot of them. That's what needs to stop. I've never owned a gun. I'm scared to death of them. I owned a fishing rod. I want to get out here and do my walk. I feel kind of shook up after that trade there. I'd say today I get probably a C, maybe not even that, because I had good calls this morning, just didn't hold them. Got out with a measly $350. I could have made $6,000. It makes me feel sick. I don't think anybody thought we were very bullish this morning. Did we? Room? Magnificent had calls and almost sold for no profit. Oh shit. F minus? I kept my calls, but I didn't keep them. I kept some, sold some, and kept them, and then sold them again, and bam. Once we hit that 200. Got out at 63 and out to 200. And I could have got out way up there. I got to go over what I did wrong today.
One of us has made a gross error.
Yep.
Yeah, let's hit the bar, huh?
I think so. It's time to hit the bar. I'm going to hit the streets, and I can tell when I'm walking now and running. I can run about a block. Well, I couldn't do that before I started working out 3 weeks ago.
I find it hard to believe.
Yeah, I can run a straight block. Saturday I put in a 10,000 step day. And that's not easy. When they say you got to get old and you got to do 10,000 steps, I don't see how anybody can do it. I don't see if you had the time to do it. So the other day I was walking down the street with 2 barbells weighing 10 pounds apiece. And did 3,000 steps. Yeah, I feel better. That's all that matters, I think. Randy sucks. Randy says he sucks. Just watch the bond market. Mike says watch the bond market. So we'll leave with this song here.
Blessing my soul, what's wrong with me? Single, ain't you like a man on a tree? My friends say I'm acting a while as a bug, I'm in love. I'm all shook up. Yeah. Well, my hands are shaky and my knees are weak. I can't seem to stand on my own 2 feet. Who do you think when you have such a look? I'm in love. I'm all shook up. Yeah. Oh, please don't ask me what's on my mind. I'm a little shook up, but I feel fine when I'm near the girl that I love, bashing on my heart. It scares me to death when she touches my hand. I put the chill I got, her lips are like a volume on his eye. I'm proud to say that she's my buttercup. I'm in love. I'm all shook up. Yeah.
I saw Elvis Presley in 1975, 76, 76, might have 77, somewhere in there, in Springfield, Missouri. And I think I was the only guy in that stadium. I was surrounded by thousands of pretty women.
Whoa, transvestite, back off.
That's right. Well, that's it. Mike, thanks for all your help. Magnificent, thanks for your help, Randy. Jen, when she's here. Today she wasn't. She having her foot looked at. Anybody else that contributes? I'm not swinging much stocks until after this week. The only one I've got right now is Nike and Intel. And I'm up on Nike. Want it to break and respect this 95.59. And I've got it till December. Price target 115 from 120 by Wells Faggot Wagon. Yeah, they keep overweight on Nike. That's it.